See you then. Morning. How we doing? It's me.
And now it's me.
Morning, guys. Happy Monday. And it's big Jonatan on the main screen.
Tell you what, we're just going to change to my screen first.
Yeah.
Because I'm ready. Like Jonatan, huh? No, just kidding. How's everybody doing? New week, and man, we actually got US data also coming out.
I know.
I'm so excited. I feel like my right arm is slowly regrowing, so I can finally see the market in 3D again. There he is,
I know.
Jonatan. The man, the myth, the legend.
Oh, it's frozen.
With the frozen screen.
It's still not here.
That damn Swedish internet, I tell you.
But yeah, dude, so good.
Isn't it?
Thank Christ we have the US back. Honestly,
yeah, really, yeah. And
it's been so frustrating.
Some exciting stuff, in my opinion, also that we can discuss about. I think, like I read extensively this morning about one of the things you were actually talking about a lot, that we have like a lot of money from the Treasury Department lying around that needs to be invested. Jonatan, hey.
Oh, I don't know what happened, but when we started the stream, was it my connection? Because you didn't have any issues, did you?
No. I think it was you.
Yeah.
Your Swedish internet collapsed, and then we saw you frozen, like.
Right. Yeah. Okay.
Just froze out.
Well, what's up, guys? How are we doing today?
Good.
Good.
Just saying, finally, the purpose of the 2 hours here on Monday morning to kind of mix fundamentals with tech analysis, with sentiment analysis, to gain a broader perspective on the market can be done in 3D again, because we're actually going to see some US data being released this week. Although a fair warning, from my side at least, maybe you guys see it differently, I think we might be in also, especially if we should see that, and that is not certain, really re-release of October data. Don't trust that data that comes out there. It's probably going to be highly skewed. So we still, I think, should take everything a little bit, with a grain of salt, what we see, and think about potential corrections to the data to be published a couple of months later. We see that also reflected, in my opinion, with what Jerome Powell just said, that in his opinion, we are probably not going to see a rate cut in December. So, man, after all, what I thought would become true is becoming true once again. The Oracle from Berlin.
So, Dirk, you're just straight into business. I want to know how your weekend has been. How are you, LJ? How are you, Dirk? How has the weekend been? And how is everyone here today in the comments section? I hope you had a wonderful weekend, everyone. Let's begin with you, Dirk, my good German friend. What have you been trading crypto this weekend?
No, I haven't. I haven't done a lot last week, also because I needed to take care of some stuff because of my late mom. So get
right. Yes, of course.
Sort of the apartments, all of that German bureaucracy that comes, by the way, in a very efficient way when somebody dies, and which is good and somehow frightening. But naturally, I didn't concentrate much on trading. So, yeah, I'm actually back in action from today onwards, trying to catch a little bit up with what happened last week, which, from what I can see, has been quite a turbulent week. But in a sense, I'm also very happy to be back to normal, to be back to my daily routines, which is very healthy. How about you guys?
Good. I checked out. I switched everything off for the weekend and just did nothing, didn't respond to anything, no messages, no nothing. It was good.
That's the way to do it. Really.
So
I love that.
Yeah, it was good reset. Good reset. Yeah,
I love that. Well, myself, I've been. What have I done? I've been raking leaves. I think that's what I've done most of the weekend, because I forgot to. It's been raining a lot here in Sweden, and we have a lot of trees around, so naturally a lot of leaves on the lawn, and it's been raining a lot. So it's been very wet. So I've been waiting for it to dry up a little bit, but instead of drying up, we got minus degrees, so it just froze.
Oh, wow.
So I've been out there trying to rake leaves that are frozen. So I probably spent 12 hours, which usually takes 2 hours. And I've had to use a shovel to literally break up the leaves and kind of move big blocks of frozen leaves with a shovel.
But you know what? I'm a big fan of physical work sometimes. I think it really puts you a little bit in your spot. It kind of makes you, if you really do it and don't think about other stuff, puts you in this Zen spot, I like to call it. Like, for example, maybe it's a dumb example, like, but here in my office, I sometimes clean the toilet myself, or wet wipe through the whole office and stuff like this, because I think it's necessary, to stay grounded, because I hate to become one of those people, say like, oh, I've never had in myself a vacuum cleaner in my hand. This is stuff for lower people or something like this. I hate
Dirk, are you trying to say you've got too many maids and cleaners to like ground yourself? Get them out.
Sometimes I have to clean the toilets myself, and it's good. It's good. You heard it here first, guys. If you want to become, if you want to get to the level where Dirk is, you go clean your toilet right now.
Yeah, guys. I wanted to be a little bit modest, but of course, I'm barking at the wrong trees here. I can see that now.
No, I'm with the other like 6 houses, 6 properties you own as well. Just go around, do a full clean.
Yeah. Well, let me. I do 2 of the 12 properties. Let me put it like this. And just when the advertising agencies are around filming me for Instagram, so dude, people get, what a modest guy,
Need the film crew as well. Yeah, got to record it, right?
Exactly. It's really cold in here. It's like -5 degrees outside, and my heating is gone. They're supposed to change that this week, and I just had a call with them, and they're like, "Oh, we can't do it this week. We do it next week."
I thought that was like 3 or 4 weeks already when you were talking about that.
Yeah, well, actually, I started talking about it 1 year ago, because that's when it broke, and then 1 year ago I started initiating the asking for a loan from the bank. And it took me 1 year to actually get the loan.
Wow!
So now that I have the money,
prices are going up again.
Yes, they were going to change it. This electricity bill is twice this year as it was same time last year because of that. And now I had to have bought 4 extra electric. What is it? What's called the heating things?
Generator things.
The radiators.
Oh, heater. Yeah,
but it's so cold.
Right. Yeah.
Upstairs, I got 2 new radiators. Well, ground floor, but I'm in the basement, and it's 15 degrees inside with the radiators on full power, and I'm in the basement with 0 heating. It's just dead in here, so I think it's close to 10 degrees in the basement. My fingers are like,
I have like this picture in my mind forming of like what your house looks like, and somehow it always in my mind is like back from the old Swedish and Norwegian tales, like Mikkel from Lönneberger or something like this, or Pippi. I don't know what she.
Pippi Longstocking.
Yeah. Something like that.
Well, it's not. It's not far away. I mean, she lives in a beautiful house.
Do you have it?
Yeah. Anyway, it's cold. It's very cold.
Add some more crypto miners, Bitcoin.
Yeah. The only thing that's actually heating up my small office here is the computer. So I can't turn it off during nighttime. It needs to be on, and I need to have I need the GPU to really be running hot. So I need to have several MetaTrader 5 instances and TradingView instances up, and the screens on all night, so that the GPU is actually running and generating heat. So that actually heats up the office to like 12 or 13 degrees, which is, oh man, it's crazy.
Start mining whilst it's cheap, right?
You guys want to hear like a really funny story that happened to me 2 weeks ago. So I was in my office, and I have one of those tokens, you need to open your office door with. And it was like later at night, like around 9 p.m. I thought, I should go home slowly. And since my office heats up quite well over the day, I sometimes, I'm wearing a t-shirt and a shorts very often. So I thought I go to the toilet one more time, went to the toilet, and when I noticed I left my key in the office. And there was nobody, like the management and the facility manager, nobody was around anymore. So I had to walk home for half an hour in t-shirt and shorts at 5 degrees outside.
you're one of those guys who's like, wow, he's insane. Look at that. It's cool because you have these guys. They're like they're not really sure. Is it summer or
Yeah,
are
I
we
know,
going
I
into
know.
winter? Like what month of the year is it? Like not really sure. So I'm still wearing shorts. It's like, dude, it's
Yeah,
November. It's
I'm not one
November.
of those, by the way. And normally, I think people were looking at me like, this guy must be invested in Bitcoin, and he's
Yeah,
getting desperate.
exactly.
He
He
just
must
cannot
have had
afford long
lost a couple
spends
of brain
anymore.
cells on that latest dump.
Oh man. Okay, enough fun, guys. Let's go to
Okay,
business.
enough.
Enough.
So I am currently short on EUR USD. I'm still looking at this range right here. I think we're going to get some push
That
push
might
or downside.
that might be a
If
good idea. Also, like
In 1 sec.
to okay.
okay.
Like one sec, Dirk, I gotta say
He
something.
heard that I'm short EUR USD, and he's like, yeah, I'm out of here.
He's calling all his friends to buy dollar.
Yeah,
now.
this is not a serious live stream.
But seriously,
As
so
let's go. Yeah, you go ahead. It feels like we're interrupting each other all the time, so I'm just going to keep quiet.
I think
Sorry, it's just my cat.
okay, your cat again.
Sorry. Yeah.
So actually, I think like short term now, shorting the dollar might be a quite good idea because of the government shutdown being history now. So we have around 119 million US dollars lying around in the US Treasury that needs to be invested, that usually are there for government spending. So that should somehow flood secondary also in risk on assets. So we probably should see stocks benefiting from that. Maybe not AI stocks so much, depends on how I think Nvidia is going to release numbers this week, if I'm not mistaken. So there's this huge thing coming.
Wasn't that Thursday? Wasn't it last
was
Thursday?
that Thursday already?
Last Friday? Last Friday?
Then I'm mistaken. Then it's already off the table.
Yeah.
See, that's how.
No, we got Nvidia Q3 earning.
It's coming up this week, no?
Yeah, we got it on.
Just where that was Friday. Am I tripping out?
Yeah,
I could be wrong. I could be wrong.
It's in 2 days.
Okay, good.
Oh, okay.
Lucky. I was not the one tripping out. And so we got all this government spending that needs to find its place and should, as a secondary effect, at least short term, push stocks a bit higher. Of course, something like Bitcoin could profit from this as well. Seeing that it's down now by, what is that, like 35%, 36% from the top. And of course, risk on moves typically would mean a weaker US dollar. So from a more short term, actually, and short term macro is nothing I say easy, not most of the time. This could be a good trade if you're willing to hold on to it for, a little bit longer and not aiming to close it by the end of the day again.
I agree.
My reasoning for your USD is technical, and I also feel like the one of the reasons I'm holding this short is I feel like the fundamental landscape is very. I don't really see a direction that is very clear. If we go back 2 months ago, the direction was very clear. We had the AI boom driving everything higher. We had the dollar weakness. Everything was very clear that we were on a bullish trajectory, and we were most likely going to continue higher in the medium or the short to medium time frame. The feelings that I'm getting, when I'm thinking in terms of fundamentals, I'm trying to understand the sentiment, not just the sentiment from the general investors, but the sentiment from the analysts that I'm following. And right now, I am feeling the sentiment being very mixed. And when the sentiment is mixed, I feel like technicals can take control in a indecisive environment. I'm not sure about you, but I also feel like that is when markets become choppy. When you have many indicators, economic indicators, price indicators, giving you mixed signals. And that's a lot of times I see when the market's kind of either they're going to just shoot straight up or shoot down in a very unexpected way, or we're going to have a quite choppy price action. And that's, very representative of Euro USD as well for the last couple of months or weeks.
So you still want to short? That's what you're saying?
Yeah. I'm holding my short because what I can show you before we can go into the.
Wait,
the
did you buy euro dollar?
No, I'm shorting
no,
euro.
You shorted last week. Yeah.
Yeah.
I thought you were short the US dollar when you're long the US dollar.
Yeah, exactly.
Oh, then I don't agree with you.
Yeah, of course, but I don't care.
I don't say you have to care. I just say you're wrong.
I know. Let me show
Yeah.
you the technicals here before we can go into fundamentals. So if we look at the weekly, I know that this range that we've formed up here, we've had the US shutdown is ending, but it started about, what is it, like 40 days ago or something like that. So it started around
First of
this
October.
area. Yes, it started around this area, right? And that so during from this window here is when USD broke down and showed me a short setup. So the short setup was presented during the US shutdown, and now the government is open again, so maybe we'll see a reversal on that. But I have a very clear invalidation. But so that's the one part of the idea that goes against my idea, or something that I'm thinking about, because the US shutdown created this scenario and it's now open. It might invalidate the as well. Looking at the high time frames, we're basically creating what I believe could be a distribution range here on the bottom of that range, and I'm looking for potentially a move lower. Um, we're also very clear to invalidation, because as we did not get above that high, from a technical perspective, we are still in a local downtrend. But if price fails to break this level and instead starts moving higher, then this is a signal that the technical idea is invalidated, and I'm going to exit this one. But if price breaks down here and it breaks below, let's say 115.5, then I'm going to move my stops above that high, and I still view this as the idea from a technical perspective still being valid. So that's just the technicals for this. Now, I want to hear what you guys have to say about the fundamentals. Dirk, you already talked about how basically the government was shut down, and so in simple terms, the way I understand it is government shuts down, they're hoarding money. It opens, they're not going to flood the market with said money.
Yeah, there are two
Yeah,
things,
'cause-
and it's a bit ironic, sorry, LJ. So
no, I was
you have
saying you go first. Yeah.
okay, and so you have, on the one hand, the government doesn't spend any money anymore. Nobody's getting their wages. They're not paying any contractors, so nothing gets done anymore. This is why we see an accumulation of money on basically the treasury accounts, so to say. What is ironic, tax collection still continues. So you still got to pay your
Yeah,
taxes.
of course,
You're not
of
relieved
course.
from that. This is why you have a
Yeah.
surplus suddenly. And of course, now, first of all, they need to pay in retro perspective all the wages of the government employees. They are going to rehire people that lost their jobs due to the shutdown, and they are going to make new contracts with contractors or continue working with existing contractors. So stock-wise, you maybe should have a look at stocks also that are pretty close to the government, that have a lot of government contracts also, if you want to profit short term. When I say short term, from my opinion, we are very likely to see, this is not 100%, guys. This could also already be priced in, as it always is, which would mean probably that Jonatan is correct then with his opinion. But I wouldn't be surprised in the next 2 to 4 weeks that we see the US dollar going down by something around 2 to 4%. So I'm talking here about a range between, from current levels, that is 118 to, what is the upper range? So somewhere above 120, 120 and a half or something like this. Talking about the next 2 to 4 weeks. So I'm not talking about an immediate reaction that needs to come today. And if we see that, it's actually kind of interesting, in my opinion. That would mean, I agree with you, that we are seeing somewhat of a consolidation range here, if we want to bring in the technicals. So I would just very roughly say, like, okay, this was maybe the consolidation range we are seeing. We could pick up on this uptrend again that we've been seeing forming from the beginning of the year, which also fits actually into my longer term overall US dollar strength or weakness opinion, where we could see continuation of the Dixie to establish itself below 100 and then maybe in the region of 95 to 92 somewhere. I expected this to already happen earlier, but I didn't really think the government shutdown would be that long. So not 46 days. I thought in the beginning probably around 15, 20 days, and then they'll have it nailed again with all the pressure Trump is doing. I underestimated that he actually doesn't really care about anybody else than himself. And so yeah, that's basically what I think is going to happen. Now, the way I trade this is I could, of course, open a long spot trade here, swing trade. Gotta be a little bit careful timing-wise. And there, of course, technical analysis comes in handy because of the swaps I would pay every night. So if I hold on for this, maybe for 2 or 3 weeks even, I have paid a considerable amount in overnight financing or so-called swaps already. So this is the kind of trade I actually prefer to do with an option, honestly speaking, or I would buy an outright position, which sadly is also not possible on the 5ers. Outright means I would buy euro, US dollar for a specific date, maybe 2 or 3 weeks in the future already. And that way I don't have those overnight financing fees always.
Yeah.
How do you see it, LJ?
So before we go into LJ, I just want to say let's cover the fundamentals here on Euro USD, but then we want to move over to gold as well after this, kind of see how we think gold might be affected with this as well. But let's go ahead and look at the Euro USD there.
Yeah, sure. So similar thing I see, Dirk, as well. So as well as from pricing last week, I mean, I don't have everything up on the chart right now. Hang on, I'll jump over to euro dollar in the first place, but. Like for one, after the shutdown, we've got this staggered pricing coming higher, right? But mainly to the point of what you were saying is the liquidity aspect. That all needs to come into the market. We've been restrained of dollars, right? So the supply demand, we've been restricting supply. That demand will come in forcibly. That's the main point. It's forcibly. It's not being demanded. It is being flooded. Yeah. Right, so that's going to have to come into the market. Last week, I also saw a number of calls for 120 coming towards the end of the year on euro dollar starting to flood in as well from institutions. So I think you've got that, and then there's the other combination of we've seen the Japanese 10-year start to rise further and further now. We're at like 1.73%, I think now. So this is becoming a matter of time type situation, right? Eventually the floodgates open and it just spills out, and this is at the point where dollar yen, for instance, we're up back towards 155s, which is what just the week and a half before, the Ministry of Finance from Japan said, if we get back towards 155 plus, we're now considering intervention. Right,
maybe could you explain? I'm sure not everybody is very much into something like the carry trade. How like the long term or even short term Japanese yields in comparison to the US yields, why that has an effect on the conversion rate between dollar and yen?
Yeah, sure. So basically, carry trade is in simplest terms is when you take one currency that has a certain asset. So you look at whatever the central bank is offering between interbank financing rates. That basically sets the rate for that country. And you can go look at another country that is offering a higher rate. Take the dollars from this country, put them over there. This one's lower, that one's higher. You get the difference between those two countries. Simple as that. So, Japan is basically near zero, and the US is still offering a significant rate above 4%. So you're going to capture the difference of that rate. Now, on top of that, people can apply things like leverage to that carry trade, and that's only going to increase the amount of yield. And pretty much, if everyone knows that that's going to be the case for a long time, people pile into it and they just sit on it. They just buy it and sit there and do nothing, and they just reap that carry every single day, right? Just like we're talking about the overnight swaps. Aggregate this out to an annual return. You obviously have to take into account the currency risk, but if everyone's doing that in the same direction, the currency also tends to go in your favor. So you both get the carry trade from the interest-bearing portion, and you also get the capital return from the increase of your actual position, the actual trade itself. That's sort of how it works. But when that starts to reverse and goes the other way, because everyone is so stacked in one position, it's like everyone's in a theater, the old trope, everyone's trying to get out of the emergency door in a packed theater all at once, and it all falls apart. It's like a house of cards just collapses very quickly, very fast. You see dollar yen go down 200, 300, 400 points in 10 minutes.
Yeah, if you zoom out, or you look at the daily chart and zoom out a little bit, I think the last time really very prominent, that was in July this year, if I'm not mistaken, where we dropped very fast from, what was that, 161 down to 139. So it's really, I mean, imagine you borrow basically money for zero or a very low interest rate percentage, and you invest it and then in US dollars, and you get like 3 or 4% or something like this for you. It's like very attractive. A lot of hedge funds leverage on this, so they'll give a bank $1 million and say, yeah, I want to do this trade for $10 million. So like we do with forex brokers actually, and this can be extremely profitable, very often is, but it can reverse very quickly, like LJ just said, because everybody wants to get out at the same time and gets those beautiful margin calls to deposit more money on their accounts and cannot anymore.
And when everyone's doing it at the same time, there's no liquidity. The same thing when you have news. Obviously, you try to enter an order up here at, say, I don't know, 80, spot 80 something on whatever currency, and you get filled at 60 or 55 or wherever it is, right? You gap way down. And then this has billions and billions and billions and tens of billions of dollars running through that trade, and all often, like we're saying, at leverage. So the thing can just gap really quick because everyone just wants to get out, especially players that have been in this trade for a long time. And we originally ran up from was it 116 or so up to where we are now, and we've been sitting here for years.
So exactly,
a lot of these trades are quite mature. They've reaped their rewards, their fruits. They're ready to exit. You're not going to complain that you didn't make enough from the trade. You've been in it for a long time.
Absolutely, yeah. And this is why, at least from my side, and I think from your side as well, why that is important to highlight when we talk about dollar yen, because this is a major factor to take into account when you look at the way how dollar yen moves and how crazy volatile it can be sometimes in comparison to other pairs that are US dollar denominated. And so apart from everything technical, this is really something you need to take into account, or at least keep in the back of your mind. If you look at volatile moves in dollar yen, hey, is there some switching with the carry trades? And one way to get an estimation or an opinion about this is to look how are US dollar yields from the bond market comparing to Japanese yields at the moment.
Mm-hmm. Precisely, and they keep at the moment they keep rising. So basically, what that means, they were basically near zero. They're coming up. The 10 years now pushing 1.7%. As soon as the yields from both the countries get closer and closer, the pressure gets put on that this has to unwind, because obviously you're getting less and less and less. So therefore, your perceived return per the risk that you're now taking by staying in the trade is less and less. Right. So eventually people jump out because there's better returns, better offers elsewhere in the market. So that money there is obviously naturally going to flee where it was and go to somewhere better. That's how the market works.
In a sense, I'm actually surprised because, just very quickly switching over to my screen, if you look at the long-term yields from 10-year Japanese treasuries, maybe 10 years a little bit long actually here, for that we could also look at 1 year, for example, they have been rising so dramatically, since basically COVID or pre-COVID actually, that is already. If you compare the 10-year treasury, which has been matured, so to say. Of course, we are in a more in an interest rate environment in the USA where interest rates are coming back. I'm actually surprised that dollar yen, in comparison to this,
hasn't moved as much as it should.
And you remember,
and that's a scary thing as well, right? Scary.
Remember a couple of months ago where we were talking about this trade, and I said, I'm like all in, not all in, but I'm like short at, what was that? I don't even remember the price. Was that around, 150, 140 or something like this.
Yeah, I think it was just above 150. It was like 150 and a half or 151.
Yeah, something like this. I said, according to my models, when I look at the comparison between those treasury yields between Japan and the USA, we should actually be trading somewhere at the highest, like 134, actually fair value more like 128 to 125. I get burned in this position, absolutely. Lucky I didn't lose a lot of money in it because I did it with options and could hedge it on time, pretty much on time. Still lost a little bit of money. But you can see this for me is always a good example of how you have a model that depicts actually how things should be, but how reality can deviate from this. Maybe because people still think, well, we still have, even 4% compared to 1.7%. That's still a pretty good carry trade if I leverage this by 10x or 20x or something like this. So don't underestimate the greed in that.
Exactly. Yeah.
All right. So let's, unless you wanted to look at something, LJ.
No, that's about all for now. You wanted to go to gold, so because I've got some tangential stuff along what we were saying with gold. So if you want to go to gold first, and then
yeah, I'm thinking I can just cover the chart that I'm looking at right here. So we have on the weekly outlook, we're basically seeing just let's remove the fibs here. So weekly outlook is basically creating higher highs and higher lows. We have the first swing high or the higher low after the recent top in gold, where the market dropped massively and everyone was super euphoric on gold, and now it's kind of like dying down a little bit. So we have that swing low right here, and if we look at the so the weekly, looks still very bullish. I mean, if we're going to create a bearish structure here, we have to first break below that low. But if we look at the daily, we do have the signs of a potential break of structure happening here with that lower high. So we do have the initial push to upside on gold, where we created that local higher low, pushed it upside, and then created that lower high. So obviously it's very difficult to see where gold is going from here based on technicals, but if we're going to be trading with the trend, obviously we're looking at this as a bounce of a untested support, and bulls we're probably looking at this and thinking, okay, more upside and validation here, and bears will probably be looking at this as the first sign of a potential downtrend that might look like this, or potentially a new trend starting, or a new range starting between that low, that high, and then we got the middle where price is currently trading right now. So I think in a scenario like this, a lot of people are looking at the gold to be trading. I know it's one of our most popular traded pairs on at the 5ers as well. So a lot of people are probably looking at this thinking about what is the overall direction, where do we have gold in the next few weeks or months, and how can we perhaps position ourselves for that from an intraday perspective. And from my own my own views on gold is that I'm cautiously bullish. But no clear setup to enter as of now.
So my next thing would be what's the perspective on rate cuts? Because
so when it comes to rate cuts, I think
I have a sec right here asking, exactly this. So if they cut rates, yes, gold price up, right? That's helpful for gold. Gold is a zero interest bearing asset. Obviously, if rates come down, the cost of capital parked somewhere else becomes cheaper, right? And typically, not always is not a one for one, but often when rates are coming down, it's because you have a loosening of financial conditions, typically because the state of the economy is being pressed. It's being kind of squeezed, hence they need to give a little bit more slack, right? Now, we're not at the point of reducing rates because we're crashing out or anything like that, but we are seeing some slight weakness, a few concerns bubbling up. There's a few pieces like that. I've got some other things about the banking stuff recently. I don't know if you've looked into that at all, Dirk, but I'll let you go next. Say whatever your thoughts might be.
Yes, very interesting, Dirk.
I think you might be muted, Dirk.
That was an ironic, very interesting, Dirk. I know. No, I said, please go ahead with the banking stuff. We probably are going to tell the same stuff there, but I've been talking so much already, so I don't want to
Before we
steal
jump
the
into
word.
that, before I just want to so I view myself as one of the listeners, one of the viewers here when we're doing this, because I'm probably in their position as well. I got a few analysts that I'm following and gives me, but I'm not analyzing the fundamental situation. I'm only really listening to others. And my understanding right now is that we went from having almost a very high conviction of further interest rate cuts, but then we started seeing comments from the Fed questioning the idea of cutting more, and so the chances of a rate cut in December basically plummeted. So people basically went from, okay, cut the interest rates, everyone bullish, everyone happy, more money, more liquidity, AI boom. And then all of a sudden, a couple of comments, and it's like, we're not really sure about that anymore. And everything is halted, halted. Everyone got very scared for the AI evaluations being massive. And I think that mix kind of caused the situation we're in right now.
Absolutely. So we basically went from what was that 98% conviction that we are going to see an interest rate cut to now, I think 47 or something under 50 was the last reading I saw this morning.
It was bang around between 68 and 61% last week up until Thursday. Friday it came down to 51, and then now it's gone below. Yeah. So, we were talking about previously how it needed to come right down, right? Yeah. It was definitely way too high going out to December. We had the specter of a government shutdown on the horizon. Weren't sure if it was going to happen, but it's Trump. He has everything to gain from it, nothing to lose.
Yep.
In the end, neither side gained anything, so it was just a fruitless endeavor. But the trouble with it is I'm not so sure now. I think that actually needs to come up, that we get a rate cut. I think they will cut rates.
It can be, that we bounce back now, and we still have 3 weeks to go anyway until that it's decision time. And if we see some economic data, solid economic data that is coming in, telling us, maybe the job market is still weaker, inflation is coming down, though, then of course the Fed has all the reasons to lower the interest rate again. However, if I want to say something bad, I could, of course, say something like, Jerome Powell wants to anger Donald Trump now. That's why he's going to not lower interest rates, although he's not the only one making the decision, of course. There's a committee in the background. And I don't think he's the type of guy. He's like the typical, I'm going to do things based on numbers. I'm not going to care about anything else in the world, which is a great trait to have when you are running a central bank, in my opinion. And but yeah, there is still, of course, the possibility, like my ex-boss would have said, like for every ping there comes a pong. And at the moment we are on one side of a spectrum, everything negative, AI bubble, interest rates are not going to be lowered, the world is ending. We could very fast flip again to the other spectrum. Yeah, absolutely.
Yeah, so that's the thing. I haven't seen anything to indicate any kind of positive jump in the data, even if it comes out just level, that kind of thing. I think there will be mild downdrafts, and inflation hasn't gone anywhere. Like, we can see this; it's not ticking up. We haven't seen the throughput of the tariffs. Companies is very much explain themselves through their own earnings reports, that kind of thing. They will very gradually eke up prices over a extended period of time to eventually meet the tariff levels, and they'll take the smaller hit in the interim. Reason being, the consumer is so antithetical to tariffs now. They hate it. They don't want to hear it. They're very much happy to change their consumer choices to other brands or etc. So it's been very much a gradual eking up. We've seen huge pressure due to mortgages, housing, auto debts, loans, credit cards, all that kind of stuff. They don't have the extra capacity to take on any increased prices. They're going to very rapidly change consumer preferences. So there's that from the consumer side, from the business side. As far as the Fed themselves, we've seen, I'm not sure if there is a slight political element coming in, that they almost want to slightly hold back to have rates a little bit higher, so that once Jerome is out and whoever else comes in, they're going to smash rates down. So if in some weird way they have them a little bit higher, they can still get the same bang for the buck, but they're not fully low. I don't know. It's really weird, because like right now you should be reducing rates. Everything says you should. We have a
marketing move of Trump then,
Yeah, I don't know. It's like Jerome Powell's last bout, before he goes or something. He just doesn't want to mess it up. I don't know if it's something to do with that, but because if he does it now and then they reduce rates later, they'll be like, oh, he did it too early, and I don't know, something nonsense like that. Who knows? But it's really weird political sphere right now. But I think the other, like we've seen a bunch of like from the Challenger jobs cuts and stuff, and we had the other ADP release last week, like huge cuts across the board. And now we're starting to wonder if this is a portion coming in from AI that maybe a bit sooner in some areas that is cutting the legs of some of the lower bands. So I don't know. Overall, I don't see it as being good. And then the other portion is the bank stuff. So I brought this up last week 2 or 3 times. We were talking about this is a SOFR. So secured overnight funding rate has gone above the federal fund rate, right? So that's showing, huge stress as far as available dollars in the system. So the kind of oil of the system, of the engine. Now, whether you attribute that some proportion potentially to the fact that the government is shut down, and so there's a bunch of dollars that have been locked up, right, that normally would be entering the market. This was other stuff for crypto or whatever. This is a later piece I'll talk to you next, but we had over sometime last week, they had some secret-esque whatever meetings, which are not so secret anymore, around some of the banking troubles and banking stress, right? And there's sort of a number of the Fed members have come out and highlighted that if we do get this kicking off, it'll be far worse than 2007, 2008 in the banking crisis, because that was very simple. It's housing. Even though it's complex, it's just housing, right? Now, the pockets that we have now are splintered everywhere. And same with the shadow banking sector. It's impossible to pull apart. So it would prove a massive unraveling. And they've had various side meetings about this. Obviously, we had some of the banking failures since 2021, right? And they've managed to wrap that all up, have it all handled. But there seems to be an increasing amount of stress that is actually getting them worried at this point. Other portion, they have expanse to reduce rates, right now. But I don't know if this is some weird, we know what's coming later, we don't want to use that firepower, rather than seeing it as we need to reduce rates because of the current conditions. We foresee the future thing happening, and we'd rather use the market firepower of what it does in markets, save that dry powder for later, and then deploy it. Because that's sort of what everything's become.
I would assume that too. I mean, they've got to be gotten smarter, especially since 2008, because in a nutshell, what we're seeing right now in the real estate market, it's a little bit like in 2008, but it's not so much on mortgages of private homeowners. It's more on the commercial real estate situation, in my opinion. And also coming from legal issues where banks thought they are the first one getting paid out when basically, a company collapses, cannot pay their mortgages anymore on commercial real estate they own, but it turns out they are not. So they're like, and I think that's especially in California from what I read the case, but I don't want to talk so much about this because I only have knowledge on a very shallow level there yet, so I don't want to share wrong information with you. But for sure, like the the metrics to be alarmed, like that something like this could happen again, must be there already from learnings from 2008. And of course, then you would go about and say like, okay, what can we do, to ease that off or to be prepared when that is coming? Which basically, I mean, the answer always is we're going to take a huge pile of cash and just pour it in there, or show a huge pile of cash and say something like, here, see, we have a lot of cash, everything is okay, we can cover for everything. That's at least how they did it in Germany back then, and Angela Merkel went in front of the TV screen and said, my dear fellow Germans, your savings at your banks are safe, to not have a bank run. And it worked, it worked, because there's obviously no alternative. But
and same with Mario Draghi before, like
exactly,
whatever it takes, right?
Whatever it takes, exactly. And I'm sure this is being done to the next level in the USA as well. I would be surprised if they get surprised by something like this again without taking steps prior to that happening.
Yeah, and that goes back to a bunch of stuff we've talked about before, where I think they can offload a huge amount of bonds and all sorts of stuff. Onto the banks. They've already been looking at increasing their leverage ratios, that kind of stuff. There's other pockets with like insurers and all sorts of. They've got a million pockets they can do things if they want. It's just a matter of time. So that's the other portion where I'm not too. Like obviously, if you're short-term trading, that's going to be activity, but viewing it as like a longer-term thing, just like the prior banking wobbles that we had, they were wrapped up pretty quick. Everyone's freaking out as this is going to become contagion, gets wrapped up pretty quick, and then we're back to normal. And that seems to be, for now, I guess until it ends, that's very much the repeat cycle. And I guess the other portion with, say, like the Fed, everyone now knows that's the cycle, and that's why we get these very sharp crashes, but then a very quick return higher, because everyone's figured out the game.
It's
the Fed comes in, the government comes in.
Fed saving the day, exactly.
It's just the buy the dip thing.
And until it doesn't work anymore, which I mean, but this is something that people have predicted for the last probably 40 years, that eventually the cycle is going to break, but nobody knows when it's going to break. And the beautiful thing in the batch thing is, if it breaks, it doesn't really care where you invested in, because everything is going to zero then. I've been seeing that question as well. LJ, maybe you want to.
I mean, we could both answer it, but basically comes down to what we were saying about before. So rate cuts, typically you're cutting rates because you want to ease financial conditions. So it's typically there's more pressure on whatever economic jurisdiction you're talking about, whether it's the US, the UK, Australia, Japan, wherever. So they need to ease that to make it a bit simpler, add a bit of oil, add a bit of lubricant for the economy to function better. But overall, reducing the rate, just like we were talking about the carry trade before, means you get paid less money for holding that currency, right? And that currency's denominated assets as a whole than you did before. So if you're getting now paid less than you did before, often some other kind of avenue opens up where you shift the money over there, because you're now going to get a higher return. And typically it's not based on just, one rate cut. It's based on is there going to be this rate cut and then future rate cuts? Because then markets are always pricing on the forward trajectory of where things are going, not just here in the next month. They're looking for here the next month, 3 months, 6 months, 12 months down the line, to basically price assets appropriately. And then you take the entire combination of the world assets, put them all in a logbook, right? And compare which one is better. So that's basically what institutions are doing. So pretty much basically you're just getting paid less than you were yesterday for holding the exact same asset. So obviously it's going to be worth less.
It's
some
like,
people flee.
On a very shallow level, you could maybe make the example, picking up with that carry trade again, or circling back to that carry trade. If you got $1 million to invest, or you got $1 million in your local currency to invest, and you have a choice, am I going to invest that in Japanese treasury bonds, which pay me 1.7%, or in US treasury bonds, which pay me above 4%? Which one would you choose? Well, obviously, the US treasury bonds. that not taking into account any currency rates or economic projections, but on a very simple level. And this leads, because you're not the only one thinking like this, to a higher demand for US currency. So for the US dollar, this is why you typically would see then the valuation of a US dollar in comparison, for example, for the to the Japanese yen rising. This is what we have been seeing lately, also a lot again. And of course, this is like oversimplifying it now, but in the background, on a shallow level, this is what is going on. Then, of course, things like economic strength of a country come into play, and so on and so forth. So, if you would do the same game for, am I going to invest for 4% into U.S. Treasury bills, or am I going to invest for 39.5% in Turkish Treasury bills? What would you choose? Well, in this case, probably still the US Treasury bills. I hope so, at least, because the other side of the medal is an economy or a country can raise their interest rates very, very high because the inflation rate is very high, to combat the inflation rate as well and to attract inflows of into their own currency, to create demand for their currency in that case. So it's it can be a two-sided medal, but on a very shallow level, this is what is happening there. Yeah. Plus all the beautiful things that LJ on top of that explained just now.
Yeah, there you go. And yeah, when they try doing that with Turkey, often they're pumping up those rates sort of artificially. So often it doesn't work, because no matter how much they pump up the rates, the currency is devaluing faster than the rate differential. So even then, people go like, "No, I'm staying away," right?
Not trusting these guys.
Yeah, and as far as like developed economies, like we're saying, it's that forward projection of what's going to happen next, and people either believing that or calling bluff.
Yeah.
So an example right now, you could say the dollar yen, that, like we were talking about before, the 10-year and the 1 year, the 6 month, every single treasury in that front end of the curve is rising in rates. So in the yield, basically you're getting paid more and more and more, keeps going up. But right now the currency is not doing that. It keeps going down. Now that means right now the market is somewhat calling bluff, or believing they have more time to keep holding the carry trades. And at some point, though, that interest rate keeps going up, that they can't keep calling bluff, and they have to pull out, right? Because the other portion of the market, the bond market, is telling them, no, game over.
Yeah.
Right? So
a game of poker, once again.
Yeah, so it's all calling bluff, calling the right time, yada yada. Some people get stung, they get caught out, and like we're saying, once it does collapse, it collapses very hard and fast, because there's certain people that have been greedy per se, trying to stay in it. So yeah.
In terms of gold, if you guys allow me, just my couple of cents on gold currently. And this is independent from everything we've said about macro. For gold, at least, that is. I told you last week, again, that I think this 8 weeks moving average, the blue line, is always, in a strong trending market, good if you want to engage in more aggressive swing trading positions. Now, I missed that one on Friday, first of all, because I didn't touch it, and second of all, because I wasn't trading on Friday. But should we see the price somewhere around this 8 weeks moving average? I was waiting for that comment actually from Richard again for poker. Thank you. So should we see prices around 4,015 today or the next day? This is where I typically would engage in a swing long for gold again. Swing long, which I'm going to hold then at least for a couple of days. If we break below that, and if we really close below the 8 weeks moving average, then this would be an indication that we go all the way down here to the area of, probably would be somewhere around 3,800, because we're dealing with weekly moving averages here. So to the bull market support band. That is still the strategy. It's a strategy that beautifully works if you are a little bit patient. It doesn't work, of course, if you look at the price every 5 minutes. You need to have a little bit more leeway when placing your stop loss, and thus also the take profit. You might have take profits when you engage in this and put your stop loss all the way down at something like 4,500, for $4,600, which is okay. You know, I mean, gold has surprised us in so many ways. At least it has surprised me since it broke 2,000. Back when Dirk always says sell gold at 2,000, that turned out beautifully. And but I think if really for swing trading, apart from all the fundamental stuff that flows into this, especially probably this week, this is kind of the area to look at. I know LJ is like what you are looking at as well, not like the moving average necessarily, but kind of, I think the areas, at least last week, that was the case, kind of align quite well.
I'm looking at exactly the same thing. I'm also wondering, as far as like a longer term hold portfolio type thing, as far as a swing, I was looking, so the current cost of production for gold is like 1,800 to 1,900 per ounce. So if you also take into the assumption that gold's going to be running for some time and stay up here and be doing very well, I was also thinking, could gold miners themselves, as far as a longer term stock, type hold, whatever, be potentially more fruitful with the rolling dividends from that as well?
Yeah,
Right?
I agree. I wonder. I was actually thinking about for some time now to look into data how they have sold their future mining capacity already on the future markets, because I assume a lot of them might be underwater. Not underwater, but maybe they sold it like for $3,000 or something, and now we're trading spot at $4,000 again.
Yeah.
Of course, from a financial audit point of view, it's nice because you know what you can calculate with from a lost opportunity cost, it's a whole different story. So maybe that's something coming up. Quickly want to answer this question. So very straightforward. The blue moving average is an 8 weeks moving average, which I project on a daily chart. So if you're using TradingView, you go to the settings of this one, and then you punch an 8, of course, here, and for the time frame you show weekly. This one down here is the bull market support band, which you can build by yourself as well. However, there is a ready-made indicator called bull market support band in this week, which you can find on TradingView. I think it's a 20 simple moving average, 21 exponential moving average weeks. That is also as well. It's really like on trending assets, or assets that tend to heavily trend. And this is true for gold. This is true for Bitcoin. This is true for something like Nvidia, the NASDAQ. It's something that works beautifully if you are maybe not somebody, who wants to engage in some intraday trading activity, because this is kind of where you just need to look at the charts daily, basically, or even just once a week to spot your trades. Not for everybody, of course, and understand if people out there want to engage more in short-term trading activity and the click action surrounding it.
It's effective on like the 1 and 4 hour though as well, right?
I bet so. Everywhere where you can have good trends. It doesn't work in sideways trends, obviously, but for heavily trending assets. And this is why this stems from Bitcoin trading, from long-term midterm Bitcoin trading from me, because you need an asset that for the majority of time builds a trend, whether that's an uptrend or downtrend. You can use it in a downtrend, of course. Then things are just reversed. You want to sell when it hits the 8 weeks moving average, or the bull market or bear market support bands. In this case, then works beautifully. Like if I, for example, show you this one also. We can switch to the NASDAQ, if I find it. That is, of course, S&P 500, for example. I mean, look at this. Pierced through a couple of times, but it just works nicely, and until it doesn't work anymore. But, I mean, this is the case for every. This is why we have stop loss,
that's
right?
where you get your crossovers and stuff, right? And that's when you've been trading sideways for some time, as you can see over there. So you can kind of see it coming. But I was also just going to bring up this, like Henry's saying, SBM, ASX. I got to look into individual companies, but I will just say the other piece of that, Dirk, is after we got the minerals deal with America. So there's a number of these mining companies that don't just do gold, they do, a basket of things, right? And then from the current place of things, right? US will be dropping rates further. Australia is likely to have rates higher for a bit longer. Traditionally, we've always had slightly higher rates, right? So therefore, eventually should see, once this whole risk on, risk off battering that the Aussie dollar keeps getting, we should see the Aussie dollar also come higher. So then you get the double effect of those earnings, earnings from the rare earth minerals, and then potentially the currency influence as well coming in for those kind of returns. So this is just a side idea I was thinking about. I have to actually do the research and find what's good, but food for thought, I guess, something to look into. There you go.
Yeah. If you guys want to ring in the back end, we're hearing a noise. This is Victor trying some settings with the sound.
What do you think?
What I'm thinking.
Yeah.
So I've while you've been going through gold, I've been just going through the market, seeing if I can find any structures that I'm liking right here, and I've started using. So I think Victor, you can probably it's confirmed that it's just a lot of sound, so I don't think we have to test that again.
Yeah, would be nice if you can mute yourself. He's away already again. Thanks, man.
No, so he's having some constructions in his office, so we just wanted to make sure that if the noise reducing.
And I was thinking it sounded like a sledgehammer.
Yeah. Have you guys been looking into the idea of using the Bollinger Bands percentage B and the Bollinger Bands width instead of looking at the Bollinger Bands? It's actually quite interesting. I actually like it more. I'm completely changing subject here, but I've been going through the markets here, and I'm trying to understand the. Let me actually, before I leave here, because I've just got a bunch of emails that I did not expect. So apparently I have a lot of work to do now. So let me. I really like this because when I've tried to use the Bollinger Bands in my trading, but I like my charts to be as clean as possible, and I always felt that the Bollinger Bands. Yeah, exactly. So I'm kind of like, I'm very visual when I'm trading. So I want to make sure that my levels are clean, everything's clean. I try to remove as much as possible when I'm not using it. So when I'm adding the Bollinger Bands, I go from this, which is like, it's like, I love it. I feel calm and collected watching the screen. And then if I add this, and I'm like, wow, what happened here? This is very messy for me, but there's a few indicators that. So we have the Bollinger Bands percentage B. Now, what is percentage B? Now, this is basically where price is in relationship to the lower and the higher Bollinger Bands. So you can see, for example, here, price goes below the lower Bollinger Bands. That means below this line. And same thing to the upside. Bollinger Bands, it spikes above the upper Bollinger Bands and it spikes above that one. So this indicator is basically showing you price in relationship to the upper and lower Bollinger Bands as well as the middle. And we also have the Bollinger Bands width indicator, which is basically the contracting volatility or expanding volatility. So if we add that, we see that once when the Bollinger Bands is at very high, where there's very high volatility, you see the Bollinger Bands high and the low, they're expanding quite a lot. Then this goes to the upside. The more expansion to the upside and to the downside. So what I do is I've added these two, and now I can just remove the Bollinger Bands from my chart because I'm basically seeing the exact same information. So I can have a clean chart with the same information. And what's interesting about volatility is that price is mean reverting, but volatility is not mean reverting. Volatility is extreme seeking. So when you have a low volatility, that leads to high volatility. So when you have, for example, a price goes far away from the mean, then it wants to revert back to the mean. It's not going to mean that it's, a low price doesn't mean that you're necessarily going to have a high price. It just means that you're going to have most likely an average price over time is going to return. But volatility is different. So when you see a low volatility, or you see you see high volatility, which is basically the peak of volatility here from a high volatility move. It usually means that you go into a low volatility area, which means high volatility compression. So you go from compression, high volatility, compression, high volatility. And usually what that means is you kind of fluctuate between range. So again, we have the Dow theory, the idea of accumulation, distribution, etc. So it's a tip for those of you out there that are what's happening? Why can't I remove
That
this?
don't want the mess on the chart, but
Exactly, and
still get the
still,
information.
yeah. So I think that's actually really cool use case. And I've been looking at I've been trying to study this using GBP CAD, because it has this clean channel with very obvious high and low volatility areas, and an area where I've been looking to buy this. I did buy this, but I unfortunately closed this at the very low. And now you could say, okay, we got compression here, but then you look at every single time it has hit this level, it has been an instant reaction. So there's a clear change here. Now you're not seeing an instant reaction. You're seeing is retesting. But that's just a tip for you guys. If you like the idea of Bollinger Bands, and Bollinger Bands is a wonderful indicator. It really is a really good indicator, because basically what it shows you is it shows you the volatility. Basically, it basically shows you volatility, and then it adds that moving averages in the middle. It's a really cool way to show volatility.
Definitely agree. I like Bolly bands. I still use them today for the past 10 years. You don't necessarily always take signals off them, but they're like a data input that you can see stuff increasing, expanding, that kind of stuff. It's a reference point to observe that. And you add other pieces with it, but
and
I still love them.
You can look at basically just look at this this chart right here. So one signal we know from the Bollinger Bands, one typical signal is when you have one candle closing above or below the upper or lower Bollinger Band. So let's take a long, for example. You have one candle closing below the lower bands of the Bollinger Bands, and then the next candle closing above again. So that's a buy signal. Typically something you want to be seeing right here. You have price. I think this is this price going below the lower Bollinger Band. So that's happening right here. And as you can see, it's going right here. And then it's not, I don't think it's closing. Yeah, and then expands. But I don't think
that's where the Bolly would expand, and then it sort of loops around the bottom candles, basically.
What I like about this is also you have that daily bullish engulfing right here when you see that bottom happening where price kind of expands and then it gets back above the lower Bollinger Bands. And here you see that, but then this doesn't align, right? Because you have heightened volatility here. But I'm trying to understand if...
So that's where it accelerated. So that's why the other piece is at that low point, but it's based on the lagging portion of the previous bars that you're measuring from, and then hence now that has gotten to that point, accelerated further, and that's why it shows that peak, because it now doesn't have the inclusion of the data from the prior bars that were slower, right? And now it's because it's like an average, right? So if you've eliminated the slower average, now you've just got the accelerated numbers. They're going to show a sharper incline.
So maybe this is not the right tool to use in this. Maybe we would use
you can use it, but you might consider in testing a little bit if you, instead of simple smoothing, do an exponential smoothing. So you have the current pass a little bit higher into adding where the number is for the indicator than the bars that are at the last points of the period. So, for example, 20, 19, 18, 17, 16, and 15. Because it is, like for me, for example, I actually use Bollinger Bands up to this day. I'm not going to say a lot for option trading, not at least not for decision making, but I use them to kind of get an idea of where implied realistic volatility is, for example. So this is on Bitcoin. Let me just get the other moving average away here, where I just can see on one. For this looks at the last 90 days now for the Bitcoin price. And because I trade 3 months options usually, and I need to decide, am I going to buy the option or am I going to sell the option? And if I see they are deviating very much from each other, means like we have a high implied volatility, I should be more on the selling side because I can earn more. Whereas we are in zones of compression, like this one, for example, here. Where's my drawing tool here? In Bitcoin, where we had a very low volatility over the course of the last 3 months, means the implied volatility is still low. So I should do other strategies. From a perspective of an option trader, I could buy something like a straddle, for example, where I have a put and call with the same expiry, the same strike price. Or I at least should be ready, that at one point there's going to be a volatility breakout, like this one, for example, here, where we then suddenly break out to the north again. So I could work with at the edges plus a little bit of margin of those bands with stop buy and stop sell orders, where I don't need to care about, like, okay, I don't know where the breakout is going to be, to the north or to the south. All I care about is once the breakout happens and once volatility gets higher again, I want to be on the right side. Not saying like this is a total tool. If you like want to formulate a trading strategy based on this, is not going to work out because of the late effects, like LJ just explained. You are still moving with something that is averaging the price, and which notoriously will not work in sideways moving markets. But to get an idea, that what is the market phase currently? Oh, I'm at the chart seeing we are in a sideways range. The Bollinger Bands are quite close to each other, also indicating the market is unsure. It's a typical sideways ranging markets, low volatility setting that we are seeing then. And then like, okay, maybe I should apply like contrarian trading strategies at the moment that capitalize on a low volatility environment. Whereas when we see them expanding again, I should use trend following strategies. Can be a very good, like a very good tool to add to the mixture. I don't know how to really do that like in an automated way, honestly speaking, but to kind of get an idea like how is the market structure at the moment.
I wanted to.
That's why. Yeah.
Yeah, sorry, but before
That's all right.
So I just added a because basically what I'm looking at here is I'm trying to figure out. So the percentage B basically is price in relationship to the upper and lower Bollinger Bands. This is that one right here, and then the Bollinger Bands, like this is basically showing you the contraction and expansion of the Bollinger Bands, and obviously it's very very lagging, right, as we've just talked about, because it's going back a number of candles, and then we're trading here. It might not take into account this move right here. But an indicator that does look at the current range rate of change basically is the ROC, the rate of change indicator. And what I found is when you add the rate of change and you just remove this one right here, and then you try to look at the extremes of both of these. And what you could do here, which is the beautiful the beautiful thing with the trading view, is we can add an exponential moving average to exponential. I can't even type exponential. Oh my god, that one right here. So I add an exponential moving averages, and we're gonna add the let's do the. Well, I think the 9 is actually pretty good. So what if we do that, and then we do the same on this one right here? Now, doing this, we can start to create signals. Okay, so here you have a 9-day exponential moving average on the percentage B and the ROC. And if you look at the extremes, you see they follow each other very closely. They are somewhat correlated because it's basically the same principle. It's measuring volatility, and it's measuring the basically the velocity of price and the acceleration of price and the direction of price. They are both doing the same thing, but there are slightly, some subtle differences, but they align at the extremes, which is pretty cool. So if you have, for example, this is one of the cleanest signals I've seen on this. You have trendline support, daily bullish engulfing candle, percentage B, above the 9-day moving average, RSI above the 9-day moving average. You have a price action confirming a shift in momentum here. And you can see, you know, they are aligning somewhat good, but here you have the percentage B at a extreme. ROC is not really at an extreme, but this I'm
You're
trying
looking
to
for the
see.
crossover.
Yeah,
Because basically
so
where you've got the crossover at each point, it does sync up.
yeah, so
Right, because you go to the
crossover.
next one to the left, same deal. It syncs up, right? Yeah.
Yeah,
See that's where you get the cross. Yeah.
and it also then confirms with this candle right here. So
Yeah.
you have a three pattern candle basically. I don't think there's a name to this, but the principle is the same. One bullish candle, one bearish candle with where the body is, the wicks is basically equal size. You can say that there is like a not indecision, but sort of, right? And then the third candle breaking the low of the two previous one, and that is a typical trend shift pattern. Even though this particular pattern doesn't have a name, it's still kind of the same. So I'm kind of trying to see, okay, so how can I automate this, right?
That'd be easy. That one actually.
Yeah, it's pretty
Yeah.
easy, right? So
Pretty
percentage
straightforward,
B,
huh?
yeah, buy signal, candle confirmation. You get that, you buy. So yeah,
especially on a swing, like that would work
Yeah.
nicely. Yeah, give you enough space to carry the trade.
And that's such a beautiful example. You know, this is something that you pretty easy can back test, for example, with ChatGPT or something. If you download the data, if you monitor it, and you obviously build an indicator for this already, as I can see.
No, this is actually TradingView. This is actually TradingView's built-in candlestick.
I thought it's taking into account what you see on the Bollinger indicator back there, down there as well already.
So this is a bit weird, though. This is a bullish. This is a bearish engulfing. Why is that not a bullish engulfing?
Yeah, because TradingView sucks.
Yeah.
Well, really?
Listen. They have a Black Friday deal coming up soon. I want to get that deal. I love you guys. I don't like you. You don't suck. I love you all. I love you all.
I do love TradingView as well, but and I noticed when you want to, and I built some indicators in the a while ago where I wanted to spot like bullish, bearish engulfing patterns, and I noticed it messes up very often. And I tell you why it's messing up, because very often the data you get from TradingView is not like 100% top-notch clean.
That's right.
At least on the lower.
Yeah, because they got so much data from every broker, every input, that kind of stuff.
Yeah, so TradingView, I think there's no trading platform or analytical platform out there that beats TradingView when it comes to ease of access and user interface and all of that. It's absolutely perfect. But when it comes to, if you're a professional analyst, you're probably not looking at TradingView as your only source of information. I'm using so what I'm using is Optuma, which is Optuna. It's actually an Australian company that has like a really.
We got a lot of stuff.
You do.
Financial. Yeah.
A lot of stuff comes from.
What does that come? Optuna? I never heard of them.
Optuma. That's. It's an
Australia's very subtle. We're very under the radar with
financial
tech and all sorts of bits and pieces. Yeah.
So it's basically
we invented Wi-Fi, guys. No problem. There you go.
Really, you did?
Yeah.
Wow.
Yeah.
Well, mine sucks today, so that's I don't know. No, but that's it. It's an analytical platform that is it's not as user-friendly and easy to use as TradingView, but it has some really deep, advanced tools, like, for example, automatic backtesting using a built-in script language like TradingView, but it can use things like so what is it? Relative strength rotation charts. Have you heard about that?
Never.
No.
So basically, the way that relative strength works is you have...
There's a rotation chart, though.
Relative strength, of course, we know, but exactly what is a rotation chart?
What's the rotation part? Yeah, what's that?
Well, I was just about to tell you, and then be quiet, and I might actually have be able to
No,
explain.
you're
So this
asking
is
too much.
so this is a rotation chart, right? You get right here, and then you have relative strength is. First, you have relative strength improving, so you have the benchmark, right? So let's assume we have a benchmark, we got the S&P 500, and then we're looking at the stock market. So we got Microsoft. Okay, Microsoft is in the first part of the rotation chart. It's improving. Relative strength is improving relative to the benchmark. And then number two, I can't remember exactly what it is, but basically what it is improving and then accelerating, I think, and then decreasing even more against the benchmark, right? So you have kind of like a circle of relative.
This almost sounds like what you do with a typical hedge fund, where you've got a certain asset in the same basket. One is overvalued, one is undervalued per the same relative prospects, and so you short the overvalued one, long the undervalued one. Is that kind of seems like what you're saying there?
Yeah, exactly. You're looking at let's say you're looking at the whole universe of the S&P 500, and then you're going to go long on this one, and then you're going to sell it once it entered that one, and you're going to maybe sell things that are here and then buy back once they enter that one. So you get a circle of relative strength, and they have charts. And they have charts based on this that you can apply into a script. So you can, for example, say, okay, we're looking at, let's say GBP CAD. Now, relative strength is definitely not the same thing in the Forex market, but let's just assume that we have GBP CAD and we're looking for a long strategy on GBP CAD, but we're only going to be buying once it's in here, and we're going to be decreasing exposure as it rotates within this rotational chart.
Will it show other currencies in the chart? Can you put other currencies in?
Yeah, so you're going to have
go like long and short, sort of opposingly hedged currencies, right? Like say if there's a yen pair that's outperformed, like euro yen outperforming, pound yen underperforming relative, but you've still got the yen component. So you go short euro yen expecting that to come back off, pound yen to have a bit of reprieve and come up after it's been beat down, and on a relative basis, you basically invest them, right? They're gonna move into the next quadrant. Can you put multiple assets in the?
Yeah, but I can't really speak for the logic behind the Forex market when it comes to relative strength, because I believe that this was specifically designed for the stock market against a specific benchmark like the S&P 500. So if you're looking at the Forex market, you would probably have to look at euro as a benchmark, or the US as a benchmark, the dollar currency index as the benchmark, and then you maybe add all the different currencies to that as the benchmark.
Yeah. I mean, that's similar to what I was saying, because I was basically saying if you take the yen as kind of relatively stable, like it's across all currencies, it's basically the same trajectory, but it's the other shelf component that is driving it. So like euro yen is outperforming right now. Dollar yen has been mixed over the year. Pound yen has been doing well as well, but now it's getting battered down because of the pound portion. Yeah, so I was taking like the yen as the fixed point, but yeah, I see what you're saying, for sure.
Basically, it's a way to get a signal from relative strength, because it's difficult. I mean, if you go to a relative strength website that looks at the Forex market relative strength, you're basically going to have a bar that increases and decreases. You can have increasing strength and decreasing strength against a benchmark. But so far, I haven't seen a clean way of actually creating a signal based on that. It should be very possible. If it's increasing, you buy. If it's decreasing, but this actually gives you a very clear area where everything that is within this signal range is a buy, which is pretty cool. I'm gonna see if I can actually.
There's something like this on TradingView, by the way, as well.
No.
Yes, I'm going to show you. Not exactly like what you described, but there's an indicator called ELAS loops, which examines an asset in relationship to its volume, and you have those 4 quadrants. I have it now for Bitcoin here. I don't know if it works on Forex, because you need maybe the Forex futures for that, where you have the actual volume. But it displays, for example, bottom right here is, if I'm not totally mistaken, says that price is down but volume is up, which indicates like strong selling pressure still. And this is like that we are still in a so-called healthy bearish move, for example. And then you want to wait until it, for example, transitions here to the left, bottom left, which means like that bottom is probably in. So this is where you want to start buying it. And I haven't tested it, like, is it like valid or solid or anything? I just basically really was reminded of it when you were talking about those rotation charts.
Interesting. What's this called on
It's called
TradingView? Because
Euler's loops, and it's an open source indicator, by the way. So you can.
Because I'm a noob on TradingView, right? So I've not explored any of this stuff, but I'll definitely investigate.
By Big Beluga.
So this is the idea that we have right here. So
I mean, that's basically the same. Yeah. Interesting.
Yeah, we got leading, weakening, lagging, and improving. So we got the JDK RSI momentum and the JDK RSI ratio. This is actually part of the CMT course that I'm doing, and I need to understand what RSI momentum and what RSI ratio actually is. And please do not ask me what the calculations is. So we have this actual chart, but let me show you what it actually looks like in real time. So I do have it open right here, so I'm going to share with you right now.
Is it similar to regime shifts for like different sectors in stocks? Like you got certain rate environment, political environment, jobs environment, whatever. Industrials do well here, financials do well here, commodities in that cycle, that kind of thing.
Exactly. So here you can actually see which part of the cycle some of the so you can see it says like S&P 510, S&P 555. So those are different assets as compared to the benchmark being the S&P 500. And then you can obviously see at the top right here it goes from 2023 to 2024, and you can see how they are actually developing. And you can obviously see that some are going to be in the leading while some are going to be in the lagging. And you see that if you're someone who is buying value stock, you would love to see value being lagging to the market, right? Because if you see that there's a future, like let's say for example, you think that there's going to be like Coca-Cola, for example, you think price of Coca-Cola long term is eventually going to rise against something like Pepsi. What if you see Pepsi leading and Cola lagging, right? But you think that there's a fundamental reasons to be buying cola. You definitely want to be getting into a market where that is might be lagging or improving, right? So,
I mean, that could be a good strategy also, to be waiting until the asset you are correlating with is in the bottom left, and then you choose the one that has the highest beta to that asset, the individual stocks, if you don't want to invest in the ETF.
Yeah. That's very
interesting.
Cool,
yeah. Maybe
really cool
you want to send me the link for that later. I will interested to see the data on that. If you guys allow me, sorry, LJ, you still.
I was just going to say I'd be curious to see that with some of the like crypto and stuff as well.
Yeah. Actually, for this Euler's loop indicator here, you can also add other crypto. So if I go here, I could, for example, add Ethereum, Sol, and Binance Coin, and see where are they in comparison to Bitcoin. And probably long term, you're going to see the same picture that Jonatan just showed on his graphic, that somehow they are bouncing back and forth in terms of beta to Bitcoin. So you could use Bitcoin, for example, and wait until it's like somewhere here to say like, okay, now probably we are close to the bottom. It's a good time to buy Bitcoin. And then you look at the assets that are front running or that are lagging behind because they are still due to make the bottom, or you use a generalized beta approach where you say like, okay, which one of these assets I'm comparing has the highest beta to when it comes to Bitcoin, and buy those as a artificial leverage. Let me put it like this. So, but of course, you need to do a lot of testing. It's just all like hypothesis.
So how do we apply this to the forex market? Let's assume we have the dollar as a, because what I'm thinking here is you can probably think about having the dollar as a benchmark, and then you're applying your fundamentals idea on the dollar. So if you know that if you're betting on more dollar upside or you're betting on dollar downside, that can of course affect the idea of where different currencies are in relationship to the USD. So if you see, for example, the Swiss franc is going to be probably in a very bullish against the dollar, right? But then you might see that it's shifting. The relative strength is shifting, and you have laggers, and so should be an interesting way to trade.
Yeah, I agree. I think you definitely need some kind of stabilizer currency. So like the dollar, obviously being the worldwide, majority, right, backbone of everything. That's definitely a good one. Something like the yen right now, which is stable, fixed, not really going anywhere. Interest rates are the same. The political sphere has been the same. It's the same for the past 30 years, right? That would be a good benchmark. I think if you chuck in other currencies, it would be difficult because they're going to slosh around a bit, and they're often going in line somewhat in step with each other, just maybe, a month later or a month after, central banks kind of move together in a lot of the Western countries. Right now, we've got a bit of difference. Obviously, dollar per the pound, dollar per euro, dollar per Aussie. So it worked very well now. I think other times they'd often sort of circle just in kind of going nowhere, right?
Maybe you can also use a basket of currencies for that, because you'll always have some, that are front running. You'll have some that are lagging. If you're looking for a more like smoothed out general approach, you're going to probably pay for this in terms of return on investment, as any time where you use like a average smoothed approach to stuff, but could be better like to have a solid equity curve long term. If you guys allow me very quickly, there was a very technical question earlier, but which I just have to answer because, I'm an options guy, and
of course,
always happy, when we have people out there also trading options. So what do you think of intraday selling of weekly options to gain theta? What is that called in English?
Theta.
Yeah, theta. Okay.
Yeah.
So theta is one of the Greek letters that describe a lot of what's going on in terms of valuation or to measure certain metrics of options. In this case, it's measuring time decay. Time decay means like an option. If you buy an option and the underlying price for the underlying asset of the option doesn't move at all, you still see your option going down in value over time. And this accelerates over the last 3 months, by the way, which is why I like to sell 3 months options, because I want to make use of that time decay. And so Unbiased Trader is asking, does it make sense to intraday sell weekly options to gain theta? And this is, of course, a very technical question, but my short answer to this is no, it doesn't make sense, because intraday, first of all, what affects the price of option is mainly implied volatility, plus, and this is even more severe, is the effects of theta you're going to see by 80 to 90% overnight and just 10 to 15% throughout the day. So actually the time decay happens overnight, but you don't necessarily want to be exposed if you're intraday trading options to that time decay, because then you have the risk of price moving somewhere where you don't want it to be when stock markets, for example, are opening again. So it's a very difficult strategy. It's not the type of strategy I really would recommend if you're just getting into options trading.
It's like reminds me of selling the VIX, right? When everyone was selling the VIX and then blew up. When it goes wrong.
This is why I always say, when we see a very low VIX, you don't want to be on the selling side of options, because then implied volatility is going to blow up sooner or later. You want to be selling the options when the volatility is blowing up.
Yeah, definitely. Because you can get stung on all the other Greeks at the same time in the trade, right?
Very fast.
That's how you.
It's like, and last thing I say about options, because it probably doesn't interest like 99.9% of the viewers right now. If you are new to options and you don't just use them as the speculative element, you actually want to manage the risk. So if you're selling the option, that means you want to look at something like delta hedge, like in comparison to where the strike price is. This is very easy to hedge. It turns out, as effective for 88% of the times. Or if you want to get more into specifics, you want to do gamma hedging. So you want to start hedging the implied volatility. But to do that, you actually need a large portfolio already. Otherwise, the cost of transactions are going to be too high.
Yeah, I think it is a good thing to learn, like as far as people advancing even if you're just trading daily, you never end up trading options, just to understand how they work, why they're important in the market, how people use them, how big institutional players use them as well, and understand the kind of impact and flow that has on,
and
same with market makers and everything, right?
Exactly. They influence so much the price, the daily price action of what we
especially
are seeing.
Daily, especially these days, zero DTE.
Like you always are beautifully showing, when you analyze,
Yeah.
where are the expiries today and how should we
That played out
trade around
beautifully last week, for instance, right? With the NASDAQ absolutely cratering on Friday.
Absolutely.
That was
right.
Yeah. So.
Okay, guys. So I'm thinking, do we have anything? Are you watching? No, first of all, I got a question. So, do you think you can be profitable?
Yes.
With thank you. Great.
Yes.
Great. Well, that's all I wanted to know. Thank you, Dirk. Well,
You're
that's
welcome.
it for today, guys. See you all next week.
Nice. Cheers. Thanks, guys.
No, so serious question. This is like a completely rookie question, but I'm not gonna try to act like I'm super smart, even though I am, and all consistently profitable, making millions of dollars, even though I am. But I have a question. I'm transitioning into like being more of a long-term swing trader, and watching trading more of a side income as my main focus and the main thing I want to be doing. And the more I go into this realm of long-term trading, almost as if it's position trading, I'm looking at the daily. So I'm starting to get a very good feeling for the daily chart, and it fits with what I'm doing very well. I've went from the lower time frames up to the daily and 4 hour, but even now, with everything I'm doing and living a busy life and everything like that, even the 4 hour can sometimes be a little bit too fast for me. So for me, the daily is just I love it, because I can then, as when I wake up in the morning, like I don't wake up at 9, but when I start working around 9 in the morning, I look at the daily chart. I go through the whole market on the daily chart. I'm like, yep, this is what I want to do. That's the levels, that's the alerts, that's everything. Okay, I'm done. Takes me 15 minutes. And then when I have an alert, I'm like, yep, that's a daily bullish engulfing on support. I'm going to be buying that one. And then I'm going to be holding it for a few days. The problem with this, as you understand, is very few trades. Very few trades. Takes a very long to be in. So we have few trades, higher swap, because we're talking about holding for weeks, right? Days or even weeks.
Yeah.
It's going to be higher swaps, less trades. So the question here: do you think realistically, it's a profitable way of trading? And if you're risking, let's say, we have to think about potential drawdown of the system. So let's say, okay, drawdown of the system. Let's just put it at 15R to be safe, right? So 15R. The stop loss of a high stakes account is 6%. Okay, so we have to take that, and I'm not talking about a consistent losing streak. I'm just talking about the overall drawdown. So we take 6% and we divide that by 15. So let's assume that our max drawdown is 10, but we're using 15 as a buffer, which means we then have to, which is actually a pretty high number. We can risk 0.4% per trade, and our max drawdown then becomes 15R, which equals 6%. Now, with that risk per trade, 0.4%, how many R can we expect that a system like that can produce on a monthly basis? What would be your estimate? Let's just assume we're doing a trading with the primary trend. We're looking for 2 to 3 hour trades, and we're getting maybe, I don't know, like 2 trades a month or something like that. What do you think?
Yeah, so how many weeks are we holding the trades roughly? Or, general guideline, put it that way.
General guideline would be, okay, let's look at a typical move. So no more than 2 weeks.
Still,
No
I
more than
think
2 weeks.
wrong product, honestly speaking.
Mm.
And
Yeah.
and because of the things you just said, like we're looking at overnight financing swaps, which tend to be quite high when we're trading with forex brokers, which is not because the forex brokers are greedy. It's just the business model that is catered towards more short-term trading. Now, if you trade something like this on futures, for example, or you say something like, I'm long-term risk on for the US dollar right now, so I'm going to buy, maybe even leverage something like a treasury bill, or I'm going long stocks. It's a whole different story. But I would never for like something over 2 weeks. 2 weeks is really a little bit too long, honestly speaking. Already, like choose a spot forex trade. Like I said very early in the stream, either I would do the outright trade, which is the spot trade, but fixed onto a certain date already. So everything is already in terms of swap and so on included there. So I see already, when I buy now euro dollar, let's say at one, where are we today? Help me quickly out. When I'm not paying attention to the markets, when I buy euro dollar at 115 or 116, we are right now. And my outright position expiring in 3 months could be 116.35 or something like this. But then I know already the cost that it's included in this trade, and I can make my decision on, okay, is my opinion still valid for 35 pips of move until then? Whereas when I daily trade and I have the daily overnight financing, this is probably going to be much, much higher. So it's really my answer to this. If you are looking for longer term swing trading, in this case, probably this is everything like going 2 weeks forward, with some exceptions, by the way. Don't use like a spot trade on Forex. Don't use a spot trade on something like NASDAQ with a Forex broker. It's going to be different. I know the 5ers are going to soon offer futures trading as well. It's a whole different story then. But especially for Forex, you also need to take into consideration what is the overnight financing, what is the swap. If you're trading something like dollar against Turkish lira, it's a whole different story. You probably just should trade intraday. If you're holding on to that for a week, you're probably going to go bankrupt if you are selling the lira, that is, of course.
Yeah. Okay. So that's some really, really good thoughts, because I think there is a conversation in trading, and there is this idea within trading, like Unbiased Trader says right here, you can make trading in every strategy. Let's just pause there for a minute. Can you make money in every strategy? No, of course not.
Of course you can. Yeah.
No, I would say no. I would say, of course, you can't make money in it. It depends on the instrument you're trading, the place where you're trading, conditions for the platform you're trading in.
I think you
Market
still can.
regime.
If you're looking at the trades that are maybe unsuitable for the products you're using, but you're looking at those fringe trades, where you have those insane projections of risk reward. When you say like, oh, this one back tested, in if something like this, in 85%, it gives me a 10R. Then you could also, of course, trade it in spot forex, for example, despite the higher finance.
Yeah, I see what you mean. There's certain strategies or approaches that are going to suit certain assets, and other assets are going to be terrible.
Yeah,
right?
Yeah.
That's fair.
And
so if you find the asset, I guess.
Yeah, and that's the issue I'm having here. Maybe because I'm starting to realize that maybe I'm in the wrong market. I'm trading the wrong product.
No, so with that stuff, you can do 2 week especially like 2 weeks is not too bad. I used to do that all
Yeah.
the time, but
Yeah,
typically you're gonna pick it with something with the carry, right? That's typically gonna be
that's
the type of
exactly the
market
point,
that's gonna
LJ.
work.
Yeah.
Yeah. So whether it's a dollar yen, euro yen, pound yen, any of the yen pairs right now, oil can be really good if you find a good bottom
So
on
let me
oil
ask,
and you get
the
positive
carry,
swaps.
you're basically positive swaps. You're getting paid.
Yeah.
You're
Yeah.
not paying swaps.
Not
Yeah.
necessarily. You're not necessarily getting paid. Normally on forex book, at least if you don't look at extreme examples. But
Depends. Yeah, it's
if
going to
your
depend what
swap is
broker
like
you
low,
have,
you know,
and
if you're paying something like a tenth of a pip or even something like half a pip a day, you know, you can still be very profitable on a 2-week
yeah,
horizon.
yeah, and you can do 3 months, 6 months. One, yes, is going to take the carry, especially sometimes it can go negative carry, but basically the longer you go out beyond say a week to 2 weeks, you're going to need massive like macro
Yeah.
influence. You're going to have to be really down pat on that and basically take a stance of where you see everything going in the next 3 to 6 months and really position and be like, no, this is where I'm standing. That's it, right? So, and obviously,
Yeah,
if you get it wrong, 6 months later, you're in the bin, and then it's a bad time. And you don't really.
and
That's the only trouble is where you don't really have the ability to recover. So typically, you'll run it alongside some other kind of trades that allow either to reduce the damage of that if you get it wrong, or for you to somehow recover. Right.
yeah, so basically what I'm looking at is trades like, for example, this USD CAD trade right here that I've looked at that I actually made quite a lot of money on, right? I did, but I could have made 4 times as much as I actually did. And if I managed to make 4 times as much as I did, a trade like this will pay for 2 months of profits, and that's the thing, right? Even though it says 2R right here, this would have been more like a 6R, which means then I'm making, 2 months, I would be making 3R per month. Just to remove 1R per month on commissions and swaps, I'm still making 2R a month from that trade. Now, what is 2R? Well, that is 0.8%. Can you be profitable with 0.8%? Well, if you make it consistently, yes, but it's going to take you up to a year to scale then a high stakes account. But again, if it takes you a year to scale the account, you go from my 80 right now and then to 160. 1 year later, you're at 320. And it's like when you get to 320, you're like, I'm actually okay with taking 1 year to scale this, because the next level would then be $640,000. And then another year you're up to $1 million. And if you can keep that up and do it consistently, we're looking at 2 to 3 years to scale the account at a exponential rate. And if you double your risk, and you look at you and your drawdown can handle that, it's going to take you 6 months to scale that account. So I'm thinking, how many people scales the account in 6 months and do that consistently? Oh, that's a small percentage. That's a very, very small percentage. But everyone is trying to do it. Everyone's trying to do it, and they're calculating that it needs to be done in lower time frames, because otherwise it's not going to take time. But you're failing accounts after accounts after accounts, and then after 2 years or after 6 months, you're like, oh, I've failed multiple funded accounts. What if you just zoomed out and you accept that it's not going to take you 1 month to scale the account? It's going to take 6 months to 12 years, 12 months to scale it, right?
12 years. I've made it today. Yeah.
Was that a long?
You've got like 4 kids and like you've like whatever. It's like, oh yeah, we made it.
Still living off social benefits though, and
yeah, AI is already taken over. The market's already gone. Like,
it doesn't matter. The company's not even here, but statistically, I would have made it.
Was that, by the way, was that a long euro? What was the trade?
EuroCAD long.
EuroCAD. I thought you were showing something like Euro New Zealand just now.
Yeah, right. No, this is actually Euro. Okay. This is USD CAD. Okay. But I'm trying to figure out this is because Dirk, you've talked a lot about saying like, oh, you should look at options market, you should look into that. Yes, but like, yeah, where can I get funded trading options. Not really. So
anywhere.
what I'm doing right now, you guys know that I'm very skeptical of trading influencers and all of that. And interestingly, I went on a very cool podcast last week as well. Talked about that. It's going to be a very interesting episode. Anyway,
I've got another video for Mark to ask some questions about.
Nice.
I'll send that to you later. Yeah. Anyway,
Yeah, do
go
that.
on.
So
Sorry.
anyway, we talked about the idea that trading, like 99.9% of all the trading influencers out there are absolutely fake. Okay, they're posting all their stories on Instagram and all that. They're not profitable. They don't have they can't back it up. They have and I have the proof to that they can't back it up. Anyway, so then I'm here thinking like, well, can I back up my profitability? Well, I can show you, payouts from prop firms and all of that. But like payouts from prop firm, does that prove profitability? It proves that you're making money from prop firms, but we don't know how much you spend on evaluations, and it's not really proof of long-term profitability, right? But it's proof that you know how to trade prop firms. The only way to really show proof of profitability is like, okay, you show me your broker station from a regulated licensed broker, and I'm like, well, I should probably get that. If I'm gonna shit on all these influencers, I should probably get that, to back up my. So I'm gonna open up an account with IC Markets. I'm gonna deposit just the amount of money that I need to cover the leverage and margin and everything like that. And then I'm gonna connect it all to my prop firms to really be able to show like this is the way I'm trading, and I don't care if it shows that I'm not profitable or break even. At least I can show people what minimal evidence they need. At least I can show you guys prove that I might not be profitable, or I'm break even, or I'm profitable, whatever. But you need to ask that from the people that tries to sell you a service, right? That's the bare minimum. Like, show me the broker statement. And so I'm going to open up. I'm going to open up with IC Markets, right? And what's cool about that is, if I open up an account with them, I connect it to TradingView, and that's my main account, and then I connect everything else to the IC Markets. I'm going to be able to trade live within TradingView for all the prop firms. So we have a lot of people asking like, how can you trade the The5ers with TradingView? Well, what you can do is you can open up a demo account with a broker. Just a demo account with a broker, connected to a trade copier, and then connect that trade copier to the The5ers. You just got to make sure that the spreads and the slippage and everything is similar. Do not use Oenda. Do not use Oenda. You know what?
Unless you like to pay spreads, of course, that is.
Get an ECN network type broker.
Yes,
so
ECN.
IC Markets.
IC Markets, yeah.
Pepperstone is not bad. Who else is good?
Well, let's not.
I feel like they're the top two, basically.
Like, they have to. You know what? Like, if you guys want to be added to that list, 10,000 USD.
I mean, apart from that, I mean, we have all the evaluation on the The5ers, and the stats, which is very valuable. If you can push your account there, you show it like with a good risk-adjusted metrics there. So it. I get it's not like
of course.
It's not like possible, for every time horizon. That's why I say, when you were talking about longer-term swing trading, the The5ers is not the product I choose. But for example, I've been saying that so long now. I know that, like for the automation that I'm implementing at the moment, it's perfect for The5ers, because there I'm like, I want to trade short-term NASDAQ, for example. I know it has a high overnight financing, but doesn't really matter because I took it into account into the back test of my strategies plus slippage. And then I'm just going to let it run. And I can share it here. As a matter, I have done this in the past, but I'm building my own TradingView MetaTrader bridge right now, because I don't want to pay hundreds of euros or dollars for third-party products that then do not execute signals suddenly, or have other stuff, or somebody is siphoning off my signals there and using them for their own trading. So,
you're giving away a lot of secrets here, a lot of insider secrets here.
But this is what is happening out there. Trading is a cutthroat business. Sorry to say so. It's like a one-on-one competition, like you get into an MMA fighting cage every day. and you hope that the guy you're fighting today is not working for JP Morgan.
Yeah, you're hoping that you're not fighting ICT, right? Because then
Yeah.
you're absolutely screwed.
Oh my
right?
God, they are going
He
to
comes in, is like, look
block
at this
quickly
algorithm.
so heavy.
Dude, look at my
Like-
algorithm.
You're going to fly through the cage into the audience, through the audience until the end of the world, because they are so mighty.
You
Yeah,
said something
Jonatan.
interesting that, LJ.
I was just going to say as well, side note, we're very close to 90K.
We are very
didn't mean
close to
to disrupt
90K,
you.
which means we're getting closer to 100K. I love 90K, but I love 100K more. We want to get to 100K. That's the goal. And that's why also thinking about doing something pretty cool for Black Friday. What do you guys think? Let me know in the comments. Is there anything specific you want me to launch for Black Friday? And have any ideas?
A little statue of you on my desk. I want. And then we are going to do a collection. One Black Friday I'm going to buy Jonatan. Then the next Black Friday I'm going to buy LJ. And over time I have my collection.
That's weird.
Every time you make a bad joke on my behalf, I'm going to snip your statue off my desk.
No, Dirk's like Thanos. He's trying to collect the gauntlet of, the trading team here, right?
Yeah. Gotta collect them all.
Anytime Dirk loses a trade, he just flicks Jonatan's little piece off the table.
Jonatan,
I try to
need
flick my bad trades out of existence, but somehow I only flick my good trades out of existence.
Yeah. Speaking of ICT, what's up, William? How's it going?
Aloha. Right, am I on? Oh, I am on. There we go. The screen just glitched for me for a second. Yo, what's good? How's it going?
I think
that was
Remy
Jonatan
is trying
Dirk out.
No, I think that's
Jonatan.
Remy.
Yeah.
It's like Remy adding you and then Dirk adding himself. And
I
then
don't.
you're automatically removed.
Somebody removed me. I thought it was you, and I'm not going to buy your statue now. Sorry, man.
I don't want you to be in possession of a miniature me. That is
Will already has one of me on his table.
really.
Yeah.
Oh, yeah?
It is.
No.
Do you pray to it every day?
Oh,
Okay.
that could be me.
Right.
Hang on, I do actually have a self-portrait of me, man. Do you want to see it?
What is this? That
Oh, yeah, no.
Zeus?
Yeah,
Oh,
no,
what?
cool.
Is that Zeus?
it's-
or who is that?
yeah.
It looks like Odin.
It's Hades.
Poseidon, isn't it?
Hades.
Cerberus, the three-headed dog.
Oh, dude.
Yeah.
Oh, was it?
right.
I thought that was like a trident.
Did you say the three-headed dog or three-headed dollar just now?
D-O-G.
Isn't that like
dog.
the Lord of the Underground?
Yeah. It's,
That's not really a good. That's
Wait,
that's
Will-
I,
Will's
I,
back,
well,
right?
I didn't realize you'd looked that much into it. I was kind of just referencing the guy's jack.
I gotta say, William, since you started traveling, you have shown a lot of your dark side.
yeah. And Richard Butler, you're just a monkey. Is that what he's trying to say? He's the Lord of the Underground, and you're just a monkey.
I'm just the monkey.
Wow. Okay.
You can do circus
That's so we know the
power dynamic. Yes.
power dynamic within that duo. Yeah.
Yeah.
Nice. All right. Interesting.
Wow, there's just so much read into that. God, next time I won't bring up a statue. My God.
Tell me about it. I mean, people have been calling me, what is this from Austin Power, Dr. Evil? I'm just missing that. So when we talk about power
$1
dynamics,
million.
I can write a book about these streams.
But Dirk, that's actually I would rather be called that than just a monkey. You know?
Well, true,
To be
you know.
fair,
Hey, I mean, to be fair though, it's a positive monkey.
Yeah.
It's the hear no evil, see no evil, speak no evil monkey. So I mean,
Yeah.
it's a
No, I'm
disagreement.
sure I'm sure Richard Butler loves it to be
At least Rich is a disciplined monkey, I suppose.
I feel like I want to eat bananas for lunch now, guys. So I'm going to leave you with it now.
and I'm gonna eat chicken and I'm gonna leave you guys too.
Gonna eat.
Get some
Is that all you
chicken.
eat, Jonatan? It's just chicken and rice.
I have
He's
eaten
getting jacked.
chicken.
Because he's pumping.
Yeah.
I've eaten chicken almost every day for the last 10 years.
No way, really fair.
Yeah.
I'm amazed your shoulders fit on screen. Is that-
Only chicken, no fish.
no fit.
This
Really?
man
Why
is
not?
evil, isn't he? He is evil. God damn. Throwing bars, throwing elbows right now. You know?
Shade.
Yeah. God damn. Wait, so does that make Jonatan just a chicken now? Is that his motif?
I could be circling back to me saying I'm getting chicken feet. You know, that was a thing like a while ago.
I woke up this morning and I chose violence.
Yeah, apparently.
I choose chicken.
I'm going away now. Have fun, guys. Take care.
Yeah.
All the best.
Take care, everyone.
Thank you.
Hey, Dirk.
And goodbye.
Have a good one, mate.
See ya. Jonathan's going away to trade chicken feet now. Chicken feed, chicken stock. I don't know. Is there a chicken market?
Let's put in chicken. Let's see. Oh wow! KFC. That's a KFC crypto.
Guys, watch out. Jonatan is about to dump all of his money that he's made this week into KFC USD. Oh,
this looks rather weak, doesn't it? This looks not very strong.
It's the fact that he even stopped, he stopped himself from completing the sentence by saying "ooh" when he saw KFC. It was
there's on Polonics. There's a coconut chicken, and then we have a company called Chicken Soup for the Soul Entertainment. What is that? Isn't
that like a book?
I don't know, man.
Sure
that's a thing.
Yeah.
Chicken
I've
coin.
heard of that book.
We got chicken coin here.
Chicken fish.
Look at that. Well, it has an interesting spike on the weekly of almost 500%. Let's do that. Let's go.
And it was created just prior to May. Nice.
I was going to say, did someone only just create a chicken coin?
Yeah,
in
like
2025. What?
2024.
Surely not. Surely
May
this
2024.
But surely there's some chicken futures now. There's no chicken futures.
I mean,
they're being cut down by KFC nuggets.
You can trade orange juice. I can imagine you could trade chicken as well, I suppose.
All right. So what if I want to hedge? Like if I want to hedge against chicken, like if I want
to
hedge
chicken against duck, or do you want to hedge?
Interesting trading story. The only reason that chicken McNuggets at McDonald's exist is because Ray Dalio put together like the synthetics for the futures option swaps or whatever for McDonald's to hedge out the feed and all that kind of stuff so they could sell McNuggets. Yeah. He's the reason McNuggets exist. So there you go.
That's a trivia for you on a Monday morning / afternoon.
So if you want to hedge chicken, you should go beef because it's chicken or beef.
M76BB says, "Who are Richard and Will?" I think this is a great question. Go.
I'm still trying to work that one out myself.
I ask myself this question every single day. Who the hell is Richard and Will?
So again, guys, like there is a lot of different futures market, but there's no chicken market.
There's no chicken market.
Why is there an orange juice for futures market, but there's no futures market for chicken meat? Why has the producers of chicken meat not? Why do they not have?
Seems like foul play, mate. It does seem like foul play that it's not.
Nice,
Rich.
Nice. I like that.
Chicken. Oh, so maybe it's just livestock.
That is shocking, Rich.
What's that? Bloomberg Commodity Livestock Subindex Futures. Maybe there's chicken in here.
I think that's mostly beef.
The fact that Jonatan is like absolutely chicken on his mind makes sense because he's been eating chicken every single day for 10 years.
How are you not bored with that, man? Like, I've known like bodybuilders and personal trainers to eat chicken and rice for like 3-4 years straight, and then they get so bored with it.
Well, there's a lot of different things you can do with chicken. I mean, you can. I mean, it's just like it's like any other meat. You can mince it. You can mix it. You can. Well, not mix it, obviously. That's disgusting.
Chicken Masterclass 101 with Jonatan Randall, everybody.
There's one thing you can do with chicken, and that's cook it. Can't do anything else with chicken. Can't have it raw. Can't have it dried. Just cook it.
What are you talking about? You can't have it raw. You haven't never had raw chicken.
Yes, that's why I'm still alive.
Yeah, exactly.
I was going to say, I mean, I had semi-raw chicken. I got quite ill from it.
Dude, I remember... Story time. Okay, so I went to Thailand once upon a time, and I was driving around on a bike, and I kind of went out into the bush or whatever with some friends. We were obviously sober, every single one of us, driving around on the bikes, and got to this restaurant, and I'm like, oh God, I'm hungry. And it's like, oh, this is a buffet. Nice. I'm like, nice buffet. So we go in, we get a table, and I grab a plate, and I start just everywhere, like just filling this plate with all kinds of different meats, right?
Not drunk, right?
No, not at all. And I sit down at the table and I start eating, and like, oh God damn, this is actually, it tastes weird, you know? It tastes pretty weird. It's like a weird texture here, right? And then when I've like finished maybe half of my plate, a waiter comes in with a goddamn grill, puts on the table.
No, he had hot pot.
And they're like, what's this? Why are you giving me a grill? I mean, I would assume that the food is already grilled. No, you're gonna put the meat on the grill. I'm like, oh, okay. So what am I eating? Oh, is this chicken, duck, pig, whatever, everything's right.
Oh no, how ill were you?
Well. Well, I got quite ill, if I'm going to be honest. Quite ill. Went down to the back to the hotel. Yeah, I remember.
Jonatan, how high were you?
Well, you know.
He said he wasn't drunk.
Preface, not drunk.
So I went to the pharmaceutical whatever, and back in the day, back then, like this is 15 years ago or something. They take this, right? And I'm like, yeah, I'll take that. And felt it was a very interesting experience. Like 5 days in a hotel room, puking, laughing, and yeah. So moral of the story is, prepare the chicken.
I'm amazed that didn't put you off chicken. I thought that would have put you off it, not like obsessed with it.
No, that's when it all began.
Triggered something in him.
It's just like,
it's
raw chicken can't kill me. I'm just gonna eat chicken for the rest of my life.
Yeah, when after that, that's when I started getting interested in the crypto markets. Right, had some type of reaction. Like, I gotta buy Bitcoin. Right. So
now it makes sense.
Yeah, it all makes sense. Yeah. Right?
It's all starting to come together. Pieces are starting to come together now.
There's some puzzle pieces clicking in place right now.
Yeah. All right. Okay, guys, I gotta leave. I got some chicken to. It's not gonna eat itself, so I will be back. I'll be back later. All right. Let's I guess switch the conversation back to trading. Take care, guys. I'll see you all later.
Oh man, Jonatan, have a good one, mate.
Oh.
See you later.
I'm out as well. Final thing I will say, Rich, Ireland.
Dude, I know.
What was that?
Mate, what?
We've gotten hammered across the board. What is going on? We're in form, and now we've just...
I know. Ireland just rinsed
New Zealand.
Bro.
England.
Yeah,
Italy.
yeah.
It's funny, I haven't said that Wales won their first game in like millennia.
I know, dude, Wales have been...
Rugby is like the weirdest weekend ever. Just like the weirdest.
Yeah.
Having said that, though, we got a new coach now, so or like a new manager now, so hopefully we can have something, we can pull something out of the bag. So, having said that, this guy hasn't played Welsh rugby. Like, he's not a Welsh rugby player.
Yeah, that's why you have players and a coach and coaching staff and whatnot. The manager doesn't need to have played. He just needs the moolah. He just needs the money.
He needs to make us win. That's what he needs to do. Otherwise, he doesn't get no moolah.
Oh, man. Doesn't that just make sense? Not working. Don't fire the employees. Get a new manager.
Yeah. The worst part as well with the Irish game, Mac Henderson scored the 3 tries. Like, he's Australian, right? He's from Melbourne. And just Canberra. He's from Canberra, and just rinsed us. So we got rinsed by
your own nationality,
our own country that's just gone abroad, right? Yeah,
Absolute.
Exactly. What is it?
Traitor of the country. Trade turn, not trade.
Yeah.
Terrible. All right. Anyway, guys, I'll see you later. I'll see you tomorrow.
Yeah, nice.
Ciao.
See
See you, everyone.
Have a good
See you
one.
guys.
William, what's up, my friend?
Hello, people. Hello, people of the 5ers. How are we doing? How is thy? Good morrow to you all. It is good to be back. It feels good to be back. I've missed you guys. I hope you've missed me. You probably haven't. You probably have. Thank God he's gone. Oh shit, he's back.
We're still on the fence about whether or not we're happy to have you back.
Yeah, well, guys, it's good to be back, and don't forget, make sure to leave a subscribe and make sure you leave a like for all the guys who have just come through. So thank you very much, LJ, Dirk, and Jonatan. Make sure you give them a massive like, but more importantly, give us a fat like for us. You know, we're back. It's the duo. I don't know what to call us. The dangerous duo. This is Monkey and Hades.
Monkey and Hades. Dynamic is one of the words that really goes along with duo.
Yeah,
so it's the dynamic duo. But also batshit crazy duo. That's also,
I feel like that's a bit more appropriate. You know,
yeah.
the live funded trading freaky dangerous duo.
Now we're going overboard, mate. Like
I got a bit carried away. All right, I'm sorry. I'm sorry I got carried away.
You haven't been at the markets or in the streaming sphere for a little while, like a week or so.
Dude,
so
I know, it literally feels like forever.
We just need to ease you back into it, mate.
I know. Oh, right, okay, I'm sorry, right. Hello, guys.
Oh, mate, no, it's good to have you back, mate. I missed you.
Yeah, dude, it's good to be back, mate. You know, I tried to jump in when I was in Italy. It was hard. I was streaming with you guys from the airport. That was fine. And then I tried jumping on and stream with you guys from the train, but the train didn't have good enough Wi-Fi. And then obviously I was trading from around while on the move. So yeah, it was hard, man. It was hard. So
with tunnel, it's just like,
yeah, I just completely froze. I completely froze. And then so yeah, we're back now. So we're back and we're ready to go. You know, back in the UK, back in God's country, back in Wales.
Awesome.
Yeah, so I'm happy. You know, the account's there. So I got my $100,000 funded account ready and all set up, good to go again after last week. So November, we've had 100% loss rate in November, 3 trades. Now that was only because I only traded 1 week on this account, and then obviously 1 week traveling through Italy, and now I'm back. So hopefully we're only $300 down for the month. We had a 3% month in October and a 2% or 2 and a bit % month in September. So we're all good. We're up on the account. Well, we're not. We're actually down 2% on the account, but we're up after the big drawdown phase. We're good to go. Just going to try and ease my way back into the swing of trading live stream now, and just see if we can, find something in the markets. The markets have been a bit slow today. Now, a bit of information for those of you who missed me last week. I was actually doing a funded freedom trip where I have to basically earn my way through one part of Italy, right the way down to the other part of Italy, and we must trade our way through there. So there was a lot of scalping. There was a lot of trades that I'd take outside of my plan, just because I was trying to, earn the money and trying to get all the money, into the markets, just so I could try and pay for my accommodation. So that was extremely difficult. So today I'm coming into the markets a little bit. I'm easing my way in. I'm trying to be a little bit more careful because I know that if I jump straight into the markets the way I was trading last week, there's a potential that I'm going to be taking trades that are a little bit outside of my plan. So I'm just going to see how it goes. I'm going to see if I can get some A+ setups. It's going to be super low risk. I'm not going to risk as much as I would. It's just going to be trying to ease my way back into good practices and trying to ease my way back into the flow and the momentum and the rhythm of what I was before I went to Italy. Having said that, like I said on this morning's stream to Richard, I was saying, it made me realize what it's like to trade outside of your plan just because you need to make that money. You know, it's a feeling that I've not felt in a long time, and it reminded me actually. So like when you guys say, you know, oh, I'm struggling with revenge trading, I'm struggling with over trading, taking trades outside of my plan. It's easy for us to preach because we're in that situation where we're like, dude, just follow your plan. Well, it's easy for us to say because we've had so long at it. Now, last week when I had to trade, I was forced to trade. Otherwise, I couldn't sleep. I was sleeping on the streets. So for me to force trades that potentially weren't there, it gave me this awful feeling of stress and anxiety that I haven't felt in a long time. And it really did remind me of what it's like. And it put me in a very similar position to probably a lot of you guys in chat who do come through and, tell us your stories about how you're struggling with this, that, and the other in your trading journey. So guys, I'm extremely grateful for the lessons that I learned last week and the experience that I had. The video will be out in a few weeks' time. I'm currently sending over 1,000 video files off to the video editor to get that all sent out,
dude,
and edited. So he's gonna have a long, stressful job ahead of him. So yeah, guys, we do practice what we preach, but more importantly, I want to apologize for maybe not understanding what you guys go through in chat when you come through and when you talk to us about your struggles. It was a big reminder to me, and it was a big reminder of what I have gone through in the past, and it was a big wake-up call. So guys, I know exactly how you feel. Yeah, I dealt with it recently as well. So yeah, I just want to share that little bit of the story. But we're back, good to go. We're strong. Oh, let's go back into the gym tonight, back into the rhythm. Waking up early and then joining you guys every single day.
I think what you just touched on, the idea of the reality of trading sometimes, because you get to a point, like you started off as a very green, inexperienced trader. You went through the ups and downs, those early months of like, wow, I've made a bit of money, and then losing all of it and then trying again and so on and so forth. And you get to a point where, you move past that and you realize, okay, cool, I need to get consistency. And then you find consistency, and then you kind of move through that. I've dealt my dues, I've worked my way through this, and then you get that one reminder, just that 1 week. Like now, we had to trade for your own survival, basically, in a different country, and then you realize, I'm not quite as far away from where I was 7 years ago. It's the smallest of details between you being a consistent trader and you being a green trader. Because it's just as easy for you to revert back to very bad habits or revert back to bad timing, bad structure, all of that kind of stuff. And having a reminder that you need to constantly work on your program, your program that you're following, the strategy and all of that kind of stuff, the mental side of it, the emotional side of it, the physical side of it. If you get that reminder every now and then, you do really appreciate the fact that, wow, I came along 7 years to do this and it's looking better, but never lose sight of the fact that at any point in time it can turn for you. You can revert back to being a green trader. You can go through a long periods of drawdown if you don't apply yourself to it. So having a reminder every now and then just reaffirms, I need to make sure. So it's a bad thing in the moment, but it's a good thing overall for you to go through a process that is just completely opposite to what you've been used to for the last year, 2 years, that kind of thing. So
literally
you come out of it stronger.
Yeah, absolutely, and it's good to take those lessons as well. It's good to learn and take those lessons from it, and just remind yourself of where you were. It's a very humbling feeling. It's good to humble yourself and remind yourself that, look, you may be good now, but you weren't always good. There was one point in time where you really struggled. And there are other people out there that you try to help and try to motivate, and you try and practice what you preach, but there's people out there that are struggling to comprehend what you're going through and what you're talking about, because they are currently emotionally compromised. And it was just that reminder, you know, is that reminder of, well, don't forget you were once here. So it goes to show how quickly the situation can change for you. You know, you can be dragged straight back into a position of struggle very quickly. And that's why I say to all traders, always be humble. Like you'll never see, like, okay, sometimes like for social media, you know, people love flexing on social media, and for people to listen to me and for people to hear me talk about the true value, sometimes my social media has got to be a little bit flexy to attract the people to what I have to say. And then once they start listening to me, then they're like, oh, actually, you know, this guy's talking really good stuff. However, you'll never see me ever slam someone in the trading markets unless they're being really toxic or really bad blood in the trading industry. You'll never see me slam someone, because you don't know where they've come from, you don't know their journey, and it's you just stay humble, because everything that comes to you can just as quickly be taken away.
Yeah, no, I agree with that, mate.
Like for example, myself, you know, obviously I know it was a video, and I thought I put myself in that situation, but I went from driving around an M4 calm, you know, chilling, smoking cigars, drinking some whiskey, you know, loving life, seeing my partner, traveling with her, traveling with my family, to next minute not being able to afford accommodation if it wasn't for my trading. So, you know, it's tricky, man. You know, it can be ripped apart really quickly.
All right, let's have a quick little look at chat. Sorry, guys, we did go on a little bit of a tangent there, but we'll get to your questions now in a minute. So I see that there's 2 ones that have already been marked.
Oh yeah, we got to go back a bit.
Yeah, sorry.
My bad, guys. Yeah, we did get a bit. You know, we had a lot of catching up to do. I haven't seen you guys.
Yeah. So there's a question here from Arith Kumar Sharma. Yeah, that one. 500 and beyond. If I keep a master account and connect my prop firm accounts to it, is it not copy trading and break my funded account? Please guide me on this. No, it is not copy trade. Well, so you get copy trading where you have a master account and a slave account, or a secondary account in this case, where the one account, whatever trade you take on the master account, will be reflected in the secondary or connected account as well. That's just using a copier. So you're copying one of your own trades, your own ideas from one of your accounts onto a secondary account. So that's not copy trading, it's using a copier as part of your trading. Copy trading refers to where you're copying someone else's ideas or someone else's analysis on the market, and then you copy what they're doing onto your terminal as if it's your own trade or your own idea. That is not allowed. The first one is allowed, where you're allowed to copy between the accounts that you own or the accounts that you're busy doing an evaluation on, or from let's say a personal account that you yourself have your own capital in, and you're copying from that account onto a 5ers account as an example. Now, that being said, there are 5ers accounts that you're not allowed to copy between. Like for arguments like the bootcamp account, you're not allowed to copy from a bootcamp to another bootcamp account. So just go and read up the T's and C's exactly on that. But when we're referring to copy trading, we're referring to another individual's idea that you are trading. So it's not your. That's what we're looking at. So you should be fine if you have a master account and a secondary account that's both yours, that's linked to your your email or your ID number or whatever, and then you trade between those ones. That is fine.
Yeah, absolutely. Yeah, good answer. I mean, like we said, double check the T's and C's. You know, we're not chat support. Just check the rules. We don't give false information. We can only give the information that we know or we can safely assume. I got a saying, don't assume. You make an ass out of you and me. However, there's some information we can give with a little bit more confidence, but never take it as concrete information. Just please do your own research, check the rules. And if you're ever worried, have a chat with support. There's some guys behind the scenes in support that they're awesome guys. They'll help you out. So go chat with them and they'll sort it all. I accidentally started that one. I breached second phase 5ers. Unlucky, man. Look, these things happen. Yamari, it's super unlucky. I'm sorry that you breached second phase. However, big congratulations for passing phase 1. That's a massive stepping stone. Give yourself a pat on the back for that.
Yeah, in the future, what you can do is you can just try and remember or try and replicate what you did during your first phase, and try and replicate that for every phase, even if you are starting a new, or if you have accounts already that's in phase 2 or something. Just try and replicate that success. Try and replicate what it is that you did in order to pass phase 1.
Yeah, absolutely. M7 saying, can we talk about gold USD? Absolutely. That's currently what I'm actually looking at right now. We'll have a quick catch up with chat, and then I'll dive straight into the gold markets, and I'll break down exactly what I was seeing this morning, as well as what I'm potentially seeing now, and if it's differed. So you can see by some of the lines that actually maybe it has differed a little bit from what I was seeing this morning, but we will break it down in just a second. Drop your chart questions or ideas. This is a learning community. Absolutely. If you guys, let's try that again in English,
mate.
I know. Let's try that in English. If you have any questions or ideas related to charts, trading, currencies, maybe not crypto. I mean, cryptos. We can try our best with cryptos. But if you've got any questions, trading related, chart related, just drop them in the comments, and we can try our best to answer it. And if we can't answer it, let's have a debate about it and let's learn together. Pooley, the two old guys of the Muppets. Wow.
I personally prefer Pinky and the Brain, says Sam. I'll let you decide who is who. Narf!
It's Vinny. What's good? Will and Rich. What's good, Vinny? How you doing, man?
What's up, Vinny?
Is gold neutral? At the moment, it's consolidating a little bit.
Very much,
I think we got a direction. I think we may have a direction, but yeah, no, 100%.
Yeah, I'm inclined to disagree with you, my friend, but we'll get into gold, momentarily.
Yeah, the mullet Muppet. Wow. So that's reference to this morning. I was talking about how I had a silver mullet. So I used to have a full-blown mullet, and then I dyed it with silver streaks in it. So yeah, it was. I don't know why, but apparently I just woke up one day and thought, mullet, sound. A couple days later, no, let's go silver. I have weird thought processes. I don't know why I do some of the things. Good afternoon, folks. So good to see you all again. Absolutely, Svestan, good to see you in. How you doing? Sir, can you please fund? Well, welcome to the 5ers, where we do fund traders. So go get yourself a 5ers account and pass it, and you shall indeed get funded. Do you like that segue? That was good, wasn't it? That was real smooth. You all knew what he was asking, but I gave him the correct answer.
F. Rodriguez asking, so you have all your money in the market. Nice strat. Probably not.
No. I don't know what that means.
No, he's asking you whether or not you've got all of your assets in the market, or some of it is bonds, some of it is...
Oh, okay. Yeah, no, that's a good question, I suppose. No, I don't have... I don't really have many long-term holds in the markets. I want to get a little bit more into long-term investing in the markets. I want to look at the S&P a little bit more. I want to have a look at the NASDAQ a little bit more. I've thought about Bitcoin and cryptocurrencies, but I don't know. I want to. I really do. But I don't. I thought about gold, but I think gold's just a bit too volatile at the moment. But however, I think the S&P is the way to go. In my personal opinion, I think I'll start putting a little bit more money into the S&P. But yeah, I don't really hold long-term investments in the market. So the only market that I'm currently in is the CFD trading market, which is my intraday strategy and my swing strategy. which is what pays me pretty much. I do have other assets. They're not in trading though. I believe in having multiple diversifications in income. I'll be dead honest with you guys. I'm not going to tell you what it is. I'm not going to tell you how much it is. However, though, I will tell you that I'd like to diversify and have a safe variety of potential income streams.
But I mean, for the purpose of this stream and for the purpose of us trading live accounts, or at least trading accounts live on stream, it's CFDs. So
yes, but
we're not going to be coming up here and show you exactly how we're strategizing.
Exactly, exactly that. But like you said, however, for the sake of this stream right now, this is a $100,000 live funded account with the 5ers. Currently in a little bit of drawdown of 2%, or technically like 1.9%. 1.9.
Yeah, so 1.95.
Yeah, 1.95%. So yeah, that's answers your question, I hope. DJ, greetings to the highly esteemed 5ers host William D and Richie B. Hope you're well. Yes, my man, I'm all good. I'm good, mate. How are you doing? Hello, sir. How is I? How are you doing? Funny, he doesn't answer. Bro, chill, man. I'm answering. Hello. Dude, I'm sorry, man. I'm sorry. We just got a bit carried away. Anyways, good stream. Y'all don't fall for the bait. Oh, there was bait in that? Oh. Interesting. Well,
dude, I feel a little bit lost with FR Rodriguez's question here. Like, I don't know. Anyway.
Yeah. Henry's saying it's easy to be complacent. Absolutely. It's easy to take a lot for granted. Focus on the setups and enjoy the stream. Thanks for joining. Absolutely. Yes, mate. Thought of the day. I like this, unbiased trader. Thought of the day. The financial markets is a device for transferring money from the impatient to the patient. I like that. 100%.
I like that highly. That is pretty good.
Okay. I think he's trying to maybe he's trying to troll us. Stay humble, so don't lie about having all your money in the markets. Bro, need to chill.
Like, okay. I water under the bridge kind of flexing. It's just whatever.
Water off
a person being so impatient that they can't wait.
Trade smart and let the charts do the talking. Yes, Remy, you get it. You know how it is.
I think this is Jonatan.
Oh, is this Jonatan? Straight up, we don't need to answer that. What if the accounts you were copying from isn't the 5ers account? Well, I mean,
so long as that account is your account, meaning
100%.
Registered, the account details and whatnot's registered to your email, to your let's say it's a personal account that you have personally put money into with a different broker. It doesn't matter. It's so long as you can prove that it's your idea. You're not copying someone else's analysis, or you're trading I don't know, with a signals program, where you're on a I don't know, like a Telegram group where they're sending out signals. That would be considered copy trading because it's not your actual idea. It's not your analysis. It's someone else's, and you're trading someone else's analysis. So that's what that refers to. So you should be fine. So with the preface that you are the one that owns that account, and it's your capital in that account that you're copying from. So it should be fine.
Absolutely. Yeah, I totally agree. But like we said, if ever in doubt, chat to the support team, which brings DJ's comment up. 5ers support team is top notch, no cap. 100%. I love that word, no cap. It's such a new age. DJ, how old are you?
No cap for real.
Literally, that's such a youngster thing to say. Like, I'm only 24. But even for me, that would be a youngster thing to say. Like, I'm guessing, like, DJ, you gotta be 19, 20, like, surely.
I think you're reading a little bit too much into it, William. I think that DJ is just adapting to the current.
Am I just old school? Am I just old? Like, I get told all the time that I'm really old for my age. I'm proper technophobe. I hate it. I'm a dinosaur, man. I'm a 24-year-old dinosaur. But yeah, no, DJ 100%. Yeah, they are top notch. No cap. No cap for real. I love that. That's amazing.
Is gold just consolidating? Very much so. M76BB, it is. Unfortunately,
yeah, this is on the hourly time frame.
Yeah.
Yeah.
We have not broken Friday's high. We have not broken Friday's low. We're drifting in between Tokyo's high and low, which was the high and low of the New York session last week Friday. We're just sideways at the moment.
Yeah, I'm in long, but I'm thinking I shouldn't be. What's your plan telling you, man? Is it an A+ setup? Are you sticking to your plan? Are you confident in what you're doing? And if you shouldn't be, why shouldn't you be? Is there an invalidation? Like, are you looking at it thinking, right, okay, this trade's actually a little bit invalid now. Maybe I shouldn't be in this trade, because what you're doing now is potentially discretionary trading through using mechanical strategies. And I know that sounds a little bit sexy and complex. Like, a lot of people go like, oh, I want a really complex strategy to make myself look cool. Simplicity is key in trading. But what does happen is when you go into the discretionary side of trading, it does get a little bit more complicated, and that's why it's quite difficult when to like sort of mix sort of discretion and mechanical trading. But if you've got an only take out early if there's an invalidation of your current strategy. If not, have confidence in it, man. You took the trade. You took the trade for a reason. You think it's going to go down. You thought it was going to go up. So hold it. But however, if it shows you that it's not going to go up due to an invalidation, you think, oh, actually, this is now a valid sell according to my strategy, then you can start considering being like, oh, maybe I shouldn't be in it. If you're looking at it thinking I shouldn't be in this just due to the fact that it's emotion kicking in, then, stay in it, stick to your plan, trust yourself. Don't let emotions compromise you, especially if you're a little bit greener in your journey.
Yeah, I mean, just to add on to that, if the original idea, the original trade entry idea is still valid, then hold on to your trade. Consider what is going to be your exit criteria for a trade, and then start thinking about how the current price is and the current confirmations are in relation to that exit strategy. So you must always have two strategies, your entry strategy and your exit strategy. With the entry one, you've already done that. You've already done your markup. You've already analyzed the market. You already found exactly what it is that you were looking for. Otherwise, you wouldn't have entered. And now you've entered, and now you have to think about, okay, if A, B, and C happens, what is it going, or how is my exit strategy going to be aligned with that A, B, and C? If my exit strategy says that we're not allowed to sweep and close below a certain point, if it does that, then your trade is now no longer valid. Then you need to start looking for an exit point, as an example. And if so long as those things are still in place, if your exit conditions have not been met yet, stay in your trade.
Yeah, absolutely.
If it's not invalidated, as Will is saying, then stay in your trade.
Yeah, only start questioning it if it's an invalid trade. DJ's 44, bro, keeping up with the youngsters. Yes, DJ, I love it, mate. I love that. Instead of gold, is there no love for silver?
Silver runs very similar to gold.
Just lagging.
Yeah, but I don't. Yeah, it lags a little bit behind gold. But the reason why I don't trade silver, I'm an intraday trader, but silver's spreads and commissions are so high.
Yeah, fair.
So why would I trade silver if I can trade gold?
I got a couple of ideas.
No, but I mean, like, the spread is a lot smaller with gold.
Not fair.
Like, to that of silver. It moves very correlated, but silver happens a little bit after gold. That kind of like thing.
Yeah, true. Yeah,
So I prefer gold over silver purely because there is that beautiful volatility along with it. There's a lot of interest in it. So when it moves, it moves. But if silver moves, it's slow. It's not a lot of interest in it. So that's why I would say gold over silver. But if you want to trade silver and something works for you, mate, keep to it.
Absolutely. I know a couple of guys. In fact, there's a couple of guys in the 5ers community, I'm pretty sure, that trade silver. I'm pretty sure there's some in the Trade Delicious that trade silver as well. I'm pretty sure John trades silver. Kibler, I'm pretty sure he trades silver.
I think he does. I think he does. I've seen him talk about it before.
Yeah, I know a few guys that trade silver, and they like trading silver as well because it's a little bit slower. It's a little bit lagging behind gold, and it's not as volatile. However, yeah, it's according spreads and not necessarily slippage, but the commissions and costs that go along with silver. Not only that, silver to me is like EU and GU. They're very similar, but I already have EU and GU. Why would I go gold and silver, EU, GU? That's 4 currency, or that's 4 assets that I'd trade. I already have EU, GU. I don't want silver and gold. I'm happy with gold. Gold's a nice little bonus that I trade. At the moment, I mean, it's my flagship of 2020, second half of 2025, we'll call it. Yes, second half of 2025, gold is my flagship asset. But I'm not interested in broadening my horizons any more than I need to, because why? If something's not broken, why fix it?
Yeah.
So that's my thought process.
Sorry, before you carry on with that one, just go up to Samir Hill. I've blown an account like that. Okay, so it's not advice. What we're talking about here, it's just we're trying to get people to kind of like rethink their approach. Let's rather say, if you're entering a trade and you decide to stay in because your exit strategy's requirements have not been met yet, and you still blow an account, you need to go back and think about how much you were risking. If you blew an account by staying within a strategy or staying within a trade that was no longer valid, it means that you were over-risking. You should not be losing an account on a single trade by choosing to stay in. You should have a reasonable stop loss in place, and you should be risking a reasonable amount of your capital. Yeah. No one single trade should be blowing your account, ever. Unless you've been going into drawdown over a significant period of time, and now you no longer have any leverage to work with, and then a single trade can break an account. So the idea is just that. Yeah, the idea is just that if you blow an account because you decided to stay in a trade, it just means that you were over risking. It's got nothing to do with the fact that you stayed in the trade. It means that you did not have an exit strategy in this case, which is a stop loss, as an example. That's also an exit strategy. I'm going to wait for my stop loss to be hit. It just means that you kept dragging that stop loss lower and lower and lower and lower, hoping that it was going to turn around, and then blew your account. That was you not practicing patience and discipline.
Yeah, no one trade or no one trade day should ever make your account. You should never have like, oh my god, the best trade ever. This has just made me a profitable trader. No one should ever say that. Different how no one should say, oh my god, I've just blown my account in one trade or one trading day. No one should ever say that. Risk management is put in place so you do not blow the account in one day, in 1 week, in one trade. However, because your risk management is there to prevent that, it will also, unfortunately, like I say, yin and yang, pros and cons. To every action, there's an equal to opposite reaction. Is one of Newton's laws. So therefore, when putting in place that risk, when putting in that risk management, when preventing yourself from blowing that account, you're also preventing yourself from the world's best trades ever, the biggest, the best, the memorable trades. Because that's also risk management. That's psychological risk management. That's equity risk management. You just want to be happy medium. You just want to earn money, lose a couple of bit, earn more money, lose a little bit less than that you earned, earn more money, and then it's just a nice positive equity curve. That's what you want. You don't want to be blowing thousands, earning on thousands, because the earning side of it will be absolutely euphoric, and you'll think that you're invincible, and you want to keep doing that. And then you'll go on the complete opposite side of the scale where you'll hate everything, go into some massive downward spiral, depressing spiral, and that's not healthy either. So that's why risk management is so important, that you protect the negative, or you protect the positive, and you prevent the negative.
Yeah, I agree with that.
I'm saying, do you guys breakout trade? Yes on gold.
Yeah,
No
sometimes.
on. Yeah, you quite like a breakout on EU and GU. I don't. Whereas you've got quite a nice breakout strategy on EU GU. I've got a breakout on gold, which I quite like. But so I don't know. Yeah, we sort of like we got a couple of little strategies that we sort of like mix.
I do try a breakout one on NAS every now and then, but gold is definitely the one for breakouts because it doesn't retrace all that well. If it's consolidated and then it breaks with that consolidation, then it moves. Then it takes its direction.
We do sometimes like to reverse, not reverse, but retrace, retest on gold back to a nice level. But I don't find it respects as much. Like EU and GU, the perfect fib level, and I've tested this. You guys, I encourage you to go test this if you want. Go for it. Like fact check me. But for me, the perfect retracement level on a fib is the 50 and the 61% fill. It's like my golden zone, and I can now eye it out. I don't need to draw fib anymore, and it's just a beautiful point. And if you can get a break and retest that also correlates with the fib fill of the 50 to 61, you've got an amazing confluence. But that works on EU and GU. Not always, because again, the markets move in different swings. Like 1 week or 1 month or 1 year, that strategy may not work. Whereas the next, the markets are always changing. So just adapt the strategy, and that's why it's hard to say what strategy that I do have. But if you were to ask me and I put a gun to my head and say, pick your strategy, I'd say a mix between a break and retest and a breakout. But the rest of the time, I look like, Harry Potter wizarding, like mixing potions of strategies, just to try and find the most optimal one that works for me. So always be willing to. So, but yeah, we do look at breakouts.
Mm-hmm.
We're less than 200 subscribers away. That's insane.
We're so close, mate. So close.
We're less than 200 subscribers away from hitting the 90k massive giveaway coming as soon as we reach it. So make sure that you subscribe to them and have notifications on. Dude, that's insane. Like, we are still forward. Like Dirk said I think it was like last month or a month or two ago, he was like, I wonder if we can get to 100k by the end of the year. Everyone was like, nah, we're not going to do that. Never. Not going to happen. I'm like, nah, we're going to make that happen. Like, guys, we're actually on that trajectory. Like, we can make this happen. Less than 200 subs away. And technically, if we get 200 subs within the next 2 weeks, we're on course for 100k by the start of 2026. So guys, smash that subscribe button, and for us, because it means a lot to me and Rich, just give us a like. Let's see if we can get like 250 likes today on this stream. Hit the like button for me and Rich, but for the 5ers and for the big giveaway, make sure you subscribe. And dude, the minute we hit 90k, like I don't know what the giveaway is going to be, but I've just been told it's going to be massive. So
yeah, we have something really amazing in the pipeline, and the thing is, the moment you guys get us to 90k, it's a massive giveaway. Like, legit.
Well, like, I think we haven't been told, just in case we accidentally slip up. But we've not been told, or we've been told that it's massive. So yeah, I mean, guys, even I'm gassed to see what it is. It's probably
the biggest giveaway this year. If that tells you something, you got to be in it to win it, guys. Like, just subscribe, pitch up. The moment we hit 90k, there's going to be a very special.
But more importantly,
pitch up. Be there.
More importantly than subscribing to the channel, you got to say that. I have subscribed. You got to put in chat. I've subscribed to the channel because Will and Rich are the best.
I like that.
Like that. I concur. I second that.
M76 saying, I see a 15-minute bullish strength candle. That's why I've gone long, but I don't know. I had a trade invalid earlier. I'm not good at waiting and what to wait for. So,
Okay.
I don't know where you got in, but I
think this is the bullish strength candle. So I'm guessing he's floating either break even or in a little bit of drawdown right now.
Yes, somewhere around there. Or you may have decided to enter a little bit earlier. The point still stands. What is the confluences that you're looking for that would invalidate? You said that there was a trade that was invalidated earlier. What invalidated it? What was the thing that made that previous trade no longer be a valid trade for you? Now, I don't know if the previous trade, if you already entered the trade or if you were planning on entering the trade and then it got invalidated and then you got your validation now for this trade and then you entered. So you can give us a little bit of information, just a little bit of context, what it is that you were looking for that made the previous one invalid, and then see whether or not you can replicate that invalidation into your current trade, whether or not it's meeting the same criteria to be considered invalid. And here's the thing. The decision to decide to close a trade is must be based on that invalidation. You can't just say, ooh, I feel, or I think. Thinking and feeling is something that we all do, but it's got nothing to do with the reality right now. If there's an invalidation, you will see the invalidation if it's in line with your criteria. So if your criteria says that on that top wick where Will drew his little yellow line, if we close above that, it's no longer valid. Or if there's a little yellow line underneath his little gray box, if it hits that and close below that, that is now an invalidation. The trade is now no longer valid. Then close the trade. Take the loss if it is a loss. The idea is that you're building the concept of what it is that you're looking for and what it is that you're willing to make a decision on. This is the kind of candle pattern, as an example, that I'm not willing to trade, and then don't trade it. So build that confidence by having something that's replicatable. That's something that you can do over and over again. I don't want to see this. If I see this, it's no longer valid. I exit and stick to it. And then the next time it happens, you would feel a little bit more confident about what it is that you're looking for, or whether it's to enter the trade or to exit the trade. That is if you are somebody that is not trading a call according to a strict rule set, let's rather say. Whereas if you're doing it according to a strict rule set, then obviously the rules are the confirmations. If it hits this, I'm out. If it hits this. If you're more of a discretionary trader, then your discretion is going to have to be... what's the word that I'm looking for, Will? Nurtured. Your discretion is going to have to be nurtured. You're going to have to find what it is about the trading conditions that makes you very uncomfortable, and it's also based in previous data, like back-tested data to say, yeah, when I see this, I don't like it.
Yeah, just seeing unbiased trade. 90k subs means 90% off for all subscribers. Black Friday gift. That would be a mega gift. Maybe I mean, hey, who knows? But I don't think it's going to be that big. I mean, hey, who knows? Maybe it will be.
Yeah, I don't know.
I mean, I'm not in charge of the giveaways, but
no.
Team, like, what do you think of this?
But no promises, guys. We're not promising the world. Otherwise, it's coming out of our pockets.
They'd be like, yeah, guys, because you promised this, you're now paying for it.
Yeah. Unbiased Trader had a good question a little bit earlier, 12 minutes ago.
I did see. I was going to wait for you to finish what you said, and I was going to bring it up. This one here, wasn't it?
Yes.
Yes, thought so. Will and Richard, previous hosts, disagreed with me on this. What are your thoughts? You make money in every strategy, though part is mindset flexibility as you shift between strategies.
So the tough part is mindset flexibility. So when it comes to strategies, obviously every strategy has a win and loss ratio. Mm-hmm. So everything is based on percentages. So if we're talking about possibility, yes, it's possible to make money with any strategy. It doesn't matter what kind of strategy it is. But there's a massive caveat to that. There's a massive little asterisk across it. A strategy is only profitable consistently when it is aligned with the proper mindset, the proper discipline, the proper patience, and the proper risk. If those things are not there, strategy is probably not going to be the most profitable over the long run. But you can make money with any strategy. It's just whether or not it's going to be profitable or not. I mean, you can make money if you have the right risk to reward ratio with a 10% win rate strategy.
Yeah, literally.
The probability of it, how likely it is to happen if you don't have the right mindset, the right psychology, the right discipline, the right risk management, that's going to change. So I agree in part to this. Like I said, there's a caveat to it.
I love this comment from Unbiased Trader, and the reason I love this comment from Unbiased Trader is because I completely agree with him. I completely agree with him. There's not many strategies out there that don't work. There's strategies out there that are better than others. And without pointing out the obvious, like complete degen strategies, but they're not strategies. Like complete gamble trading, that's not a strategy. Like if Unbiased Trader, if you're talking about having genuine strategies, a thought out strategy, then yes, I truly believe any strategy in the world will be profitable, providing you have these things: a fantastic mindset, discipline, so psychology and discipline, and the ability to follow your rules. There we go. So in fact, I'm going to interrupt myself real quick. So
in 76, I hope you're still in your trade and that you decided to stay in.
Yes, so the reason I did this as well is I was looking on the 15-minute and we seem to be just flat. So I thought, okay, let's have a look on the 5-minute. Now on the 5-minute, we still had this, we had this little break here to the upside, three candle push up, really nice, followed by this really big engulfing close here, bullside candle, back down into this area, consolidated, completely flat. But then look what we had: 1, 2, 3, 4, 5, 6, 7 wicks to the downside with very minimal wicks to the upside. 2 or 3 of which were massive wicks to the downside. 2 of which were actually wicking below these current lows, these current consolidation, into a potential fair value gap or imbalance down here. So into that zone here, taking potential liquidity. Also, we hadn't quite hit a fib level. However, maybe if you take in this high as well, then it may be like a 50 fib. But I don't think it quite hit a fib level. So, like I said, 5-minute reject into the downside. We are showing that we do not want to move to the downside. Now, I said we need a very bullish close soon. If this closes as a bullish candle, then I do believe that we're going to have some very nice bullish momentum coming in. I think that we could see some buys. Buys then potentially could be all the way to the upside. But we'll see. Like I said, not financial advice, just just what I'm seeing in the market. That's what I'd like to see. So M7, I hope you're still in. This looks like a really nice. This looks like a really nice trade. But yeah, back to Unbiased Trader. Yeah, some traders will disagree with this. I'm a massive mindset trader. I'm a massive psychological enthusiast. I love psychology. I love the brain. I love how we think. I love how that works. I love risk management. And I think if you have all of those, you can make almost any strategy work. But you've got to be smart about it. You can't just be a dumbass and go in and think, oh yeah, ICT concept, I'm going to make that work. No, that doesn't happen. You need everything. You can't just get in a car, or you can't just get in a car, put an engine in it and go. You need to have brakes. You need to have lights. You need to have wind deflectors. You need to have indicators. You need to have a gear stick to change between gears. You need the whole unit to work with each other. You know, a military will not win a war with one person. You need a whole unit. You know, you can't build a bridge with one builder. You need a whole team. There's a correlation here, guys. You cannot trade a successful trading career with just a strategy. You need a team. And that team consists of risk management, good psychology, fantastic discipline, a foresight. You know, you need to know what you're achieving. You need to know why you're doing it. Your big question, your big why. And then you need a strategy. And you need to follow that strategy like it's biblical.
Yeah, it's always the idea that the strategy part of trading is one portion of the big picture of what is required. So a strategy on its own, no. You can't build a profitable system just on the strategy alone. That's what I mean. Like, that's why I say you make money in every strategy. Tough part is mindset flexibility as you shift between strategies. Now, the strategy itself on its own is, let's say, 50-50 at best. You're gonna win some, you're gonna lose some, that kind of like thing. And then you start adding onto it. You start building that layers. You start making that cake. And then eventually you're gonna have something that is digestible, that is good.
Yeah, you can't bake a cake with just flour. Do you make cake with flour? I'm not a baker. Do you make cake with...
Yeah, it's called cake flour.
Is it actually called cake flour?
Yeah, you get cake flour. Yeah.
Amazing.
Yeah, you can make a cake with just water, flour, and salt. It's just not going to be a good cake.
But no, point being,
it's not going to rise.
You can. Oh yeah, you need yeast for that. See, it is yeast.
So,
yeah, right. Yeah,
but it's just not going to be good. It's not going to be a good cake. It's not going to sustain you. You're not going to be happy to eat that cake. It's not going to. Your friends are not going to be happy with this cake. You know, so
your friends aren't going to be happy with the cake. But more importantly, you just added 3 more components. You cannot make a cake with just flour, because then you've got just flour. You need salt. You need water. You need more ingredients.
More ingredients, because I don't know how to make.
I don't know how to bake a cake.
You need leaveners.
You
need sugar. You need, flavor and color. If you want to do colorants.
Yeah, we listen to. There's like a famous baker. What, like Miss something. Yes, Miss Baker. I don't know. Moving on.
Best be Killer Hill. Never put more than 20% of account in a trade. Now, obviously.
Oh yeah.
Once again, another preface. Really going to depend on if it is a prop account, is it a personal account. But the thing that you must always remember is never risk more than what you're willing to lose. If you're willing to lose 20% and you're happy to lose 20%, be ready to lose 20% and be happy about it, mate.
Yeah, absolutely. Like I say to anyone getting in the markets, especially with Percy accounts, especially with personal accounts, be willing to grab the amount of funds that you're about to drop into that account. Be prepared to grab a lighter and go whoosh. Obviously, no one wants to do that, but the idea behind being willing to. So I call it piss pot money. I got a little savings account within my bank account called piss pot money, and that is money that I am willing to. If it just disappeared, I'd be like, I mean, if it just disappeared, I'd go, where the hell's that gone? I'm one of those guys that know exactly where their money is. I'm like, where's that gone? But like, when it comes to like putting money into an account, and certainly when it comes to risk, be willing to lose it. Because if you're not willing to lose it, you're gonna go on tilt. Psychology is just going to take you for the ride of your life. I've got a great question here as well, by the way. How many strategies one should have? Max entering in a trade. I don't know what the QUA is. I got 3 to 4 and I feel anxious that I've too many. Sometimes because of this, I lack confidence in a few trades that I take and they worked. This is a fantastic question. I really like this. So when it comes to the amount of strategies, my keyboard's fully charged. There we go. So when you have multiple strategies, it can be difficult because, if they all trigger at once, it's like, oh, okay, or how much am I going to risk? What am I going to risk it to? And there's a lot more thought in it. Have as many strategies as you need for your system to be profitable. And I know that sounds like a dumbass answer, but it's so true. Like, you need if you have preferably one strategy per maybe asset or one strategy per type of trading. For example, I have 2 intraday strategies, and I have 1 swing strategy. I have a swing strategy because that allows me to trade when my intradays aren't working. For example, I was going through massive drawdown, so therefore I went into my swing trading, and I thought, great, okay, intraday strategies just aren't working at the moment. Let's move up to my my swing trading strategy. It allows me to have more arsenal. You should have a weapon for each different part of. Let's keep it battle related. You're not going to try and shoot down an aeroplane with a rifle. You're going to use a ground-to-air missile. So therefore, that's a strategy. Your swing trading strategy is like your long-term, your flyover strategy. You're going to want to execute that with the appropriate weaponry. Now, if you've got a tank in front of you, you're not going to use a ground-to-air missile. So you're going to use a different strategy, like maybe your tank is gold. You're going to use a gold strategy to execute on gold. And maybe you got an EU, and that's just a standard person in front of you. You can use a rifle on that, so maybe that's your intraday on EU-GU. So think about it like that. It's like, why have you got multiple strategies? If you've got multiple strategies to trade the same pair, you're just going to confuse yourself. You're going to have, I've got a choice of weapons to shoot one person. Well, what a waste of time. You're going to be, which one do I pick? And then by the time he shot you, by the time you've gone through a loss. Have one strategy per style of trading. I hope that makes sense. I hope that wasn't too morbid with the war analogy.
It does make sense. I would add that you need to consider you said that you have 3 to 4 and you feel anxious that you have too many. Why are you feeling anxious? What is it about the 3 to 4 different accounts that's making you feel anxious? Is it because somebody out there told you, listen, have one strategy and master that strategy, and now you're feeling you're going against what people are telling you to do? What about this is making you anxious? Because you're talking about you losing confidence or you lack confidence. Sometimes because of this, I lack confidence in trades that I take. So it's almost as if you're thinking, okay, so this is a breakout strategy. I'm going to use breakout and break and retest strategy just to simplify it. I'm going to use a breakout strategy now. I enter a trade and now it starts coming back to test the break, to become a break and retest. And now you're going to start losing confidence because now you're like, what if its pullback is deeper than I expected? One way for you to help with confidence is to go and do back testing and then test forward as well, forward testing. So have 1 or 2 strategies on a asset as an example, and then you back test that strategy, and then you get the baseline. You see that with these rules that you've put into place, this is a stop loss, this is what I'm going to try and reach with my take profit. And I do my back test and I find, I have a 60% win rate with this specific strategy. And then the second strategy, I see, okay, I'm getting a little bit lower win rate, let's say 50%, but I'm getting a 1 to 3R as an example, as a return. And then you use that back-tested data and say, you know what, if I follow this strategy exactly as I back-tested it, there's no reason for you to lack confidence. All you need to do is just execute. That's all you need to do. You've done all of the hard work. You've done all of the mental training, technically. All you need to do is execute. And by executing, you can reasonably expect to have a 50% win rate when you're using a 1 to 3. The lack of confidence comes in because you're trying to jump between different strategies while you're already in a strategy. Because you've convinced yourself that now, as price is showing its movement, now it's going to go into a break and retest. So it's going to come for the retest, but then retest, and then you convince yourself, it's going to fail the retest. It's going to plummet through. And then you start becoming anxious. You start doubting your own ability. I would suggest find one strategy that is in line with your personality. So if you are a swing trader, stick to swing trading, but trade one thing, one asset as an example, with one strategy that you've back tested, that you can have data on that shows that it is a profitable one if it's followed properly. And then you just do that. Start with a little bit lower risk, see how it goes, see how you feel after a while. And then if you feel like, okay, it's too slow, but you like the risk percentage, then start looking at a secondary asset with a secondary strategy as an example. And then build your way up from there as well. It's going to be trial and error, because the thing is, anxiety while trading, everybody experiences anxiety at some point. Everybody. 100%. The reason why you have anxiety is going to be different, and it's going to manifest itself different in everybody as well. I would just say that find something that is a bit more comfortable for you. It could be that you have multiple strategies that are not in line with your personality, as an example. Let's say you're somebody that doesn't have a lot of patience. Swing trading is going to be difficult for you because swing trading requires patience. Scalping is more of a, I want to be in a trade, quickly out, in, out, that kind of like thing. The idea of you don't need patience while trading scalping because it's such a short time frame. It's so quick. The trade, by the time that you enter the trade, 5 minutes later, it's already hit TP or stop loss, that kind of like thing. So go and look at yourself a little bit and your personality and see which of these strategies is causing you the most anxiety. And then cut them out, put them aside for now, and don't trade that strategy, and focus on the ones that does not cause you as much anxiety while trading. The thing is, trading overall is already complicated enough. So whatever you can do to simplify the specific trade itself that you're about to take, do that. Don't overcomplicate it. If you have too many strategies and you're feeling anxious and it's causing you to feel like you're losing out, or it's making you feel like you're losing confidence, that is counter what you're trying to do. You're complicating your trading. You're making it more difficult for yourself. Start cutting out portions of this, or a few strategies, and then see how they work, and then work your way up from there until you get to a point where you feel like, okay, this is what I'm comfortable with. This is the point where I'm happy to stick with for a while, and then until you've gained your confidence back, continue doing that.
Yeah, I like that. Just looking at GU at the moment.
Gold, still sideways, mate. Oh,
yeah,
I
literally, yeah.
I disagree with you a little bit on gold.
Sure.
Gold has been volumetrically bearish from last week, Thursday. We had that massive sell-off on Thursday. And then from Thursday into now, we kind of like just stuck between an upper band and a lower band. We're just kind of like sitting there. And I get the idea that there's nothing on the shorter time frame that I feel like needs to be broken before we can have directional bias yet again. I feel like we're stuck in between a little bit of a range, and we're going to need to break up and above or below this specific range, and then retest and then continue with volume. So if we just look at gold at the moment, I've already removed most of the drawings that I had on from last week. This is just Thursday into Friday. So if we go over to the daily on gold, we had this double high, which was the highest that we've ever reached on gold. And since then, we've started pushing lower. So you can take this very last bullish candle as if it is a order block, as a base area. Most recent swing point, this was the biggest reaction we've had on gold. This was at least 2 weeks ago. Price started moving lower. Eventually we reached a lower point where we struggled to come back. So you have a daily base over here where price came into it, just wicked, had a reaction and hasn't come back to it since. If we go down to the 4 hourly, we'll see that we're technically stuck between these two areas. Yes, it is a massive area. I mean, the bottom end of this one is 4,200 and the upper end of this one is 3,900. So it's a $300 range that you're stuck in between just on the 4 hourly and on the daily. So if we go down to the hourly, we can try and look for areas where price has had some sort of reaction. So right now, this area where we are currently had the biggest reaction, in relation to the previous movements. If we zoom in a little bit, we'll see that over here we had a little bit of indecision and then volumetric movement up. So this area over here, just on the hourly, is an area where we can potentially come and test, come and have a look at, because this is the area where we've had the most confident movement. I like referring to the market as an arm wrestle. The bears and bulls are arm wrestling. Now, the idea is the one is trying to overwhelm the other one while trying to force it in their direction. The bears are trying to push it lower, they're trying to overwhelm, but the bulls are resisting, they're pushing back. There's a little bit of back and forth, back and forth. That's consolidation, that's jumping between two ranges, and then eventually the one slams the other one down onto the pad, and they take over. But just because that first round went for the bears, or in this case the bulls, doesn't mean that the bears are done. They're going to try again. There's a next round. We're going to try and do some arm wrestling again. And that is the back and forth. Here was the back and forth, and this was when the bulls took over. They slammed the bear's hand into the pad. Now, mind you, this is on the hourly. And then eventually price has a bit of a, the bulls are trying to break, the bears are trying to break this upward channel or this upward move. They almost succeeded, and then the bulls just, they just absolutely slammed them down. And then eventually what happens here? This is Thursday the 11th. Tuesday the 11th. Sorry, this was last week Tuesday. We had some indecision. We had a little bit of consolidation. Price really struggled. It attempted to push lower. Nothing. There was no attempt. No attempt to continue pushing lower. It pushed into this area and just jumped between them. This was a bank holiday day. Just jumped between. There was no... Or was this the bank holiday? Which one was the bank holiday? Wednesday or Tuesday? Doesn't matter. The point still stands.
Tuesday, I think it's Tuesday.
The point still stands that there's just a back and forth. But eventually when we do get the break, it's volumetric. It's strong. It's a nice movement. And then you can then decide, okay, I'll take it from here to go higher. Now, if we just take that same idea and come back, where's the last time where we've had confidence in gold? Be it confidently selling off or confidently buying up. The last time was here, which was last week Friday, just between the the London and the New York, Tokyo session, Tokyo and London session. This was the last time where we've had confident movement down. And what have we been doing since? Just dwindling. We're just stuck. We're just stuck in this little area. Okay, if I can, there we go. We're just kind of like stuck here. If I just take that most recent area there, I know it's a large area, but the point still stands. We're just kind of stuck here the whole time between these 2 points. So for me, if I go down to the 15 as an example, you can see how sideways we are. We're not making lower lows in relation to the previous low. We're not making higher highs in relation to the previous highs. We're narrowing. We're coming to a point. We're sharpening a pencil at the moment. And at some point, it's going to break. And that's what you have to wait for. To try and trade this up to here, you can try, as an example, where it is right now, you can try a buy and you can try and aim for the the most recent high swing, and then you put your stop loss below the most recent low. This is a 1-to-1 per chance, but just as much opportunity as it has to try and push higher, it's going to have that exact same chance of pushing lower, because right now it's a back and forth.
Yeah, it's like ping pong.
Yeah, the arm wrestlers are trying desperately to overpower the other one, and neither one has control over the market right now. And that's why I'm saying.
And that's obvious as well. Like, you can clearly see that.
Yeah. I think that this support band down here needs to be broken, and convincingly broken, with momentum. Yeah. We want to see
a minimum of that previous low.
Yes.
That second previous low. Yeah.
This one.
Yeah. No. Yeah, that first one that you just. Yeah, one there. Yeah, if we have a nice break of that.
Yeah, you want to see this. You want to see this get taken, and convincingly.
Yeah. Absolutely.
The upper band as well. You have this area up over here that can be tested, that we've seen price struggling. And what I like to do is I like working on my bases, areas within a trend where price, or where the opposite of the trend follower. So in this case, we had a bearish trend. I like looking for areas where the bulls attempted to break that trend. And I always look for these points, and they tend to get retested and then push lower if the originators of this trend is still in control. So here we have a 5-minute bearish base. Here we have another 5-minute bearish base. This one needs to be tested before I can say yes with confidence this is now going to push bullishly, as an example. So price needs to find its way all the way to here and then not react the same way it reacted the previous time. So this is a downward trend. Bulls are trying to break that trend. They fail. They try again. They fail. And then eventually we get to the point where there's now finally indecision. We can't push it lower. So what happens? Bulls start taking over. Then they push it to an area where historically we had that back and forth. What happens? We come back down to that same area where we had a bit of a back and forth. Same thing. So this area and this area up over here needs to be broken, and convincingly.
Yeah.
Before I'll say yes, we have the establishment of a new directional bias. Myself, I have zero interest in trading gold at the moment. Zero.
Yeah. To be fair,
I don't want to overrule what it is that you said, but just that's the problem that I have. Is like I cannot. I'm a reactionary trader, and my reactions that I'm getting right now is like I don't want to participate.
Yeah, 100%. I totally agree with that.
Yeah, the moment it gets some sort of volume in it, it gets eaten up. The moment it tries to get some volume, we get consolidation.
Yeah, literally that. I don't know. Like I said, you guys were wanting to see certain things. You guys were wanting to see potential buy entries. So we try to give valid buy entries. We try to give different different ways of seeing the market. So that's what I've tried to do here on the 5-minute and on the 15. I try to show that, we've got this high here. We need a very bullish close after this consolidation here. So we had this consolidation, really, really nice, rejected to the downside. I said we need a bullish engulfing now. We need a real bullish move up. We got the bullish move up. And I said, right, okay, we've got a bullish move up. Okay, it wicked a little bit. So it's a little bit wick height. Not the greatest. I would have rather seen a bullish move up here with a bit of follow through to break and close above here. However, we didn't get the break and close above. We came back, got the break and retest without the break and close above. We've wicked and rejected this same level. However, this is the only thing I could probably force a trade out of. And it would probably be like an F trade. It's not a good trade. So yeah, I fully agree with Rich. It's just sideways. If you want to mark out the true objective high and low, if you want to mark out an identification where you can see a high and a low that you are going to take interest in, it would be, clear all this up for you so I can make it look nice and organized for you guys.
My ear.
It would be this low down here, this high here, which would be interesting to see if we can break above it for lower time frame buy confirmation. But realistically, it would be this not straight line. Let me try and make it a bit straighter. Come on. Oh, that'll do. So realistically, it would be this low or this high. That's what I want to see. I want to see a break and close below here or a break and close above here for some form of indication of directional bias. Without that, I'm really struggling to see something in the markets. Like Rich said, we have got downwards momentum. We have got overall downwards pressure. So therefore, there is a bearish market overall. If we want to see counter trend, if we want to see a bull market come through, we really do need to see some form of like indication to like punch through that counter trend. So if we're going to counter trend trade, make sure that it's really confluence stacking. Also seeing this as well, as we have hit 1 p.m. and I've got to skedaddle in a moment's time. I'm gonna check this out from Osu Job saying, guys, I started reading Atomic Habits. I can already see the shift in perspective, and I am just on the 4th chapter. Thank you for that wonderful book referral, my 5ers friend. Dude, friends, it is an absolute pleasure to recommend such an awesome book. James Clear is an awesome author, so I'm very grateful to James Clear for that book. It did help me change my perspective when it comes to building positive habits and negative habits. Even Richard Wells recommends the book. You know, me and him have actually spoken about that book live on stream back with LLTF when we were streaming together last year, and it's a great book. So yeah, definitely recommend that book. It's a great book for changing the perspective. Guys, you cannot read a book and expect your life to change. You've got to really absorb it, take on the information and implement it into your life. Guys, books are like courses, for example. You know, you read it, you absorb it, but you've got to implement it into your life. Otherwise, it's not going to work for you. However, the one thing the book does do is it does open a new channel of thought into your life, and it really does. It does shift it. But I don't know. That's just me. So you're very welcome for.
I agree with that.
DJ saying Richard B and William D. I don't know why I struggled to read my own name out then. Once you've pinned your rules based on your tested data edge, how was your journey transition from seeing your edge in simulation to executing live, confidence and timings, etc.? Fantastic question. I'll tell you what I'll do. I'll just reel my answers quick. I'll dip out and then I'll let Rich go and give his 2 cents on it. It was really interesting because it was boring. I didn't notice it as much. There we go. We're getting a nice bullish-ish push on gold now. So it was a bit of a boring one. I thought it would be like, oh my god, I'm gonna go into live accounts now. This is amazing. Wow, I'm now a profitable trader. I thought it was going to be something special. I was going to get myself like a golden bottle of Prosecco to celebrate. But then, do you know the really weird thing is? I still haven't bought myself that golden bottle of Prosecco because I turned profitable and I started live trading and I just sort of flowed into it naturally. And it wasn't like a big stepping stone for me. It was like I woke up one day and realized that 2 months ago I was a profitable trader and now I'm paid out and like now I'm earning, you know. So it was quite a weird feeling. It's not like I'm now going to be a profitable trader tomorrow. I'm now going to go into a live account tomorrow. It's such a long journey that by the time you actually realize that you're a fantastic trader, a profitable trader, or maybe even a full-time trader, you're kind of like, you're not bored, but it's like you're just regimental. You're just doing things that you've been doing for months and months, and you don't really care that you're actually a full-time trader. It's only like when you sit with your family, or you sit with your brother, or your partner, or your parents, and you're saying, Like you're talking about what your life is like, and you're just sort of reminiscing and sort of like giving yourself a bit of gratitude. Only then is it when you realize that, actually I'm achieving my dreams, you know, and it's good to be grateful for that. And that's why I say, guys, you know, take some time out, especially on the weekend when the markets are closed. Take some time out and give yourself a pat on the back, because you don't do it enough, because we put so much pressure and we work so hard to the point where when we are profitable and when we are funded traders, we don't actually realize it. We're like, oh, well, we just sort of slipped into profitability and found our slot and found our way into life. You know, it's give yourself that pat on the back on the weekend. So I hope that helps. Guys, I'm going to dip out now. So I'm going to leave you in the very capable hands of Richard Butler. I'm going to go have some lunch, and I got to go prep for the day and catch up after being away for a week. So, guys, I'm going to love you and leave you all. Thank you so much for joining. Make sure you absolutely smash the like button. Guys, less than 200 or around 200. I think it's less than 200. Less than 200 subscribers away from a 90K giveaway. Guys, come on. I reckon we can do that by Friday. I reckon. What, 1 week? I reckon we can do it this week.
Yeah.
100%. Like 200 subscribers by the end of the week, 200 likes by the end of this video, and gold $200 by the end of the day. Guys, thank you so much for joining. I shall see you all el mañana. Thank you very much. See you later, Rich. Take care, man.
Sharp. Well, I'll see you tomorrow. All right, guys. It is now just us. So, it's us and Jonatan. What's up, Jonatan?
I'm good. How are you?
Better than the chicken you just had.
Yeah, well, the chicken was good. I was got a phone call. Let me.
No problem. You jump off.
Plus 44. Is that Norway? Really, Norway calling me.
Plus 44.
I'll see you.
Isn't that Canada? So DJ, just to give you my 2 cents when it came to this specifically. So, how was my journey transitioning from seeing your edge in simulation to execution, actually seeing it live, the confidence and the timing? So, I'm a very, let's say, data-driven, logical thinker. If I have an idea and I do some backtesting on that idea, I kind of like put the pieces together, and I see something that makes sense. Mathematically, logically, it makes sense. And I implement it. The idea of it working, it's not immediate. It's not like, okay, I see it in simulation and then I try a new strategy as an example on one of my accounts. There might be some drawdown or whatnot. So what I would normally do is I would look at how long it took for that strategy to really start netting results. Now, obviously, the market is cyclical. The market is sometimes just absolutely downtreading because of some sort of tweet that was sent out. So obviously there's a lot of factors that play a role in whether or not something is going to be profitable and remain profitable, as an example. But when it came to the confidence side of things, like really believing in my strategy, I started believing in my strategy the moment I saw the backtested results were in line with what I expected. So my expectancy and my backtested results kind of dwindled very close to each other. If I expected something to be a 50% win rate and I achieve a 50% win rate, then I'm happy. I will focus on that data and I will say, yes, this is as expected. I'm going to follow this. So I know that by only following my rules is the only way that I'm going to achieve the win rate that the backtested data suggested. If I start implementing extra confluences, or if I start going against that strategy, there's no way that I can logically still expect that same win rate, because the data, I've no back-tested data to, supplement that expectation. So the confidence alone came from me just accepting that if I follow this plan and this is the expectation, I will reach that expectation at some point. And that's all I needed. That's the change for me was from that. Unbiased trader saying, I have different strategies to soften P&L noise. For example, instead of one strategy at 1% risk, I have 3 strategies with 0.33% risk. It helps me to be calm. You're diversifying your risk. So I like that as well, because I break mine down to 0.25%, 0.25%, and then I will put 0.25% on EU. I'll put 2.5% on GU. I'll put 2.5% on gold, 2.5% on NAS. I'm still risking my 1% for the whole day, as an example, but it's diversified. So if gold is not running well, at least I'm not losing a full 1%. I'm just losing 0.25%. It's a great way to really manage your risk, but at the same time also gives you an opportunity to look at other assets to try and understand how they're running as well. So you're not putting all of your eggs in one basket. So that, yeah, it's part of diversification. Yes, I really like that. I add other rules as well, like for argument's sake, I'm not allowed to have more than 3 trades a day, that kind of like thing. So if I've had a loss on EU and I have a loss on GU, I'm done for the day. I have a best of 3 strategy that I incorporate, and it basically, I will never risk more than 1% in a day. It will always be less than it will be 0.75% add, and then you add commission to that, because it's 0.25% per trade, and I can have the best of 3.
Yeah, makes sense.
How do you manage your like risk additions basically on a day, Jonatan? Do you just go full send on one? Let's say you want to trade 1% a day. Do you say, okay, cool, I'm going to full send 1% on this asset, or do you break it up as well?
So, yeah, good question. I kind of, when I started trading, and I kind of like, now I'm at the point where I don't really think too much about the different processes, the details of exactly what I'm doing. It's so integrated in my everyday life and my trading that I don't really reflect too much on it. But if I had to reflect on it, which it seems like I have to, so I look at. Okay, there's a lot of things actually. So I look at, first of all, I can look at the risk management of my actual trading. I risk between 0.12 and 0.25% per trade. My max percentage of account per trade is going to be probably around 0.25%. Now, I'm going to be increasing that because I've seen that, I mean, it's based on my max drawdown in R value. So and also it depends on the account I'm trading. So a high stakes account, I have a minus 10% on the account before I get stopped out. On the hyper growth, I have a minus 6%. So I'll look at my system, and my max drawdown of the system is between 10 and 15 R. So I'm putting I'm taking basically the loss of the account, and I'm taking that. So for example, hypergrowth is 6%. So I'm taking 6%, divide that by 15. So 6 divided by 15 is 0.4. So I can risk 0.4% per trade. If I take 15 and divide that by 10, which is the hypergrowth, now the high stakes, I can risk 1.5% per trade. And then I have it all connected to a trade copier. So in the settings of the trade copier, I've added that information so that the lot sizes and the percentage of account per trade, it depends on the max stop out of the account and the max drawdown of my trading strategy, which I'm looking at right now, 15R. Now, on top of that, I don't really need any other risk management strategies because of the way I'm trading. So, viewers of the channel, you've been with us for a long time. I know many of you have been here for over a year. So you've seen my journey in trading as well, where I kind of went from being a swing trader, and then I started doing the live streams, and I became a day trader and a scalper, and then I kind of went back to being a swing trader when I realized that's where I belong. And now I'm kind of looking more on the daily, sometimes maybe 4 hour. So some of the risk management rules that I had in the past, like for example, taking no more than 4 trades a day, or I think that was two trades a day. I didn't want to take more than 2 trades a day. I mean, it's almost impossible for me to take 2 trades a day now with the strategy I'm using. Now it's like 2 trades a week,
That's if you're staying strictly within your plan, like strictly saying this is exactly what I'm looking for. It doesn't happen that often enough.
Yeah, and what I've done is also I've kind of like created a strategy that goes in line with my personality. So I don't need to have strict rules on how many trades I can take in a day, because I'm trading based on a daily candle close, and I know statistically I'm not going to find a lot of trades that is based on a daily. In very rare occasions, I might get several signals in a day. So based on a daily candle closing, I'm going to be in bed when that happens. So everything happens in the morning. I wake up and I go through everything, and I'm like, okay, here's a signal, there's a signal. But I obviously know several days in advance if there's going to be a potential signal, because if I see that a particular market is at a support that I want to be buying, I know that in the next few weeks, in the next few days, there might be a signal on this market. So I know, like, okay, I might have 3 or 4 signals coming up. So the way I do this actually might be interesting to show the screen when I'm doing this. But the way I'm doing this is, let's see, where is my screen here? I go through. So I go through this whole list, and everything that I like, I go through it like this, and everything I like gets added to a green list. Okay, so I do all my market scan, I got the green list, and then here is the green list. Now the green list has different sections, and the sections are like this. So the upper section is open trades. Okay, this is a short position I have on EUR USD. So that's an open trade on the upper section. And then these 3, this section, which is not valid right now, maybe GBP CAD is that's markets where there's a potential setup happening within a few days or a day. So I know that, okay, so this one is my main priority in terms of management. This one, I have something coming up potentially in the next few days or tomorrow. And then this market, I basically just go through once every day to see if there's something that can be upgraded. So USD CAD, you can go through quickly. Gold, I kind of like it, so I'm going to keep that a little bit more focused. So this list, I might view multiple times a day. But this, I really have to only watch once a day, because it's based on the daily candle. So if I go through this, there are a few interesting ones that I might be interested in trading. And then I simply, this is pretty interesting. Basically what I'm looking at here is, do we have anything at, like, I'm used a major level, right? So we got NCD USD here. Last time testing this level was in April 2025, and then we got it back here in 2022. So I would expect that if this trend that we're seeing right here, if this is going to end, I would assume that it's going to be happening somewhere in this blue box, and we are in that blue box right now. Therefore, I'm a little bit interested in this one. Basically seeing, okay, can we break this structure somehow? And we maybe do something like this. And if I see that, go long, probably up to the high somewhere right here, looking for 2R. So as you can see, the process is quite streamlined, quite simple, and there's not going to be a lot of opportunity. So I'm not going to be even able to overtrade. So a lot of people, they have rules, they have rules like that to manage overtrading and things like that. But I've integrated that into my whole process, so I don't really need to think about it anymore. And that's, I know you and Will, you talk a lot about atomic habits. Well, that's the process created from atomic habit. Basically, I no longer need to think about the habits; they're automatic, and it's a
Second nature.
habit. Yeah.
Yeah, that's
so that's the power of habits,
Yeah, so it's like you get to a point where you don't need to think about it, and it just flows. You do it automatically because it's so ingrained in your day-to-day comings and goings that you do it automatically. But that is also a problem. It's also a problem when you do things absent-mindedly, where you're just doing something for the sake of it being a routine, and then you don't really see how this routine can either be adapted to be maybe a little bit better, or you're so ingrained with doing something that you miss other things because you're now absent-mindedly doing it. So there's always that idea of you need to be cognizant of the fact that you are doing something with the idea of making it a routine, but at the same time, you need to be present while doing it. So be in the moment while you're busy doing your trading. So don't just absent-mindedly look for this, okay, cool, I'm done. The idea is be present and take it in so that you can make sure that when something happens that is not according to your plan, that you don't miss it.
Yeah,
that's what
exactly. And I think also we talk about, I think when you talk about, you asked me, I'm not sure exactly what the question is, but it's like risk management additions or something like that. I think we want to look at some of the biggest issues in trading are, of course, it's going to be different from person to person, but I think one of the major things that is difficult in trading is overtrading, and overtrading comes from several key mistakes, mental errors that you make. For example, FOMO can lead to overtrading, revenge trading can lead to overtrading. There's all of these things that eventually leads to overtrading. So if you want to tackle some of the most common issues that you have in trading, I don't think you should look at the core problem. Like look at the results of the problem, and then you try to, okay, how can I stop myself from overtrading? So for example, instead of saying how can I stop myself from FOMOing, or how can I stop myself from revenge trading, ask yourself, how can I stop myself from doing the thing that these mistakes lead to, which is overtrading? So if you think about it, if you have a trading strategy where you on average take 2 trades a day, isn't it very, very simple to just solve overtrading? Because you know that once you go over two trades a day, you're overtrading. It doesn't matter if you're doing it because of FOMO or fear, of fear of losses or whatever, or revenge trading. The reason for doing so doesn't really matter. The only thing that matters is just do not take more than 2 trades a day. It really becomes an issue if you can't follow that rule, right?
Yeah,
like
the discipline of it. Yeah.
Exactly. If you're not disciplined enough to take that amount of trade, then maybe you have to go deeper into what's actually causing those issues on a more personal level. And then if you can't solve that, then maybe trading is not for you. I think that's is the honest truth. I think everyone can become traders. The question is how hard do you want to work to really become a profitable trader, because it's difficult. I mean, you might have to change some things about yourself that you might not want to change.
Yeah, like you're saying, the discipline of it. Like FOMO, the fear of missing out, is because you have this idea that I have to be in the market all the time, or you have the idea that, I've seen this person on Instagram showing that they've just gotten a blue Bugatti because they've been trading one day, and now they can own this thing. You kind of have this expectation that you built based on where you think you should be versus where you are currently. And then the only difference between you reaching that expectation is your discipline, and it's discipline in everything. It's like how you manage your trading, that's discipline. When or how often you get into a trade, or how you manage your trade, it's all discipline. It's the idea that unrealized gains is just that, it's unrealized. It's not real until you've either hit the profit button or you've hit the stop loss button. There's no in between. It's not in limbo. It's like it exists and then it doesn't exist. No, it's just unrealized gains is unrealized. Literally that doesn't exist up until you've locked it in. So the discipline should be that the things that you have control over, you control them. The things that you can control, you try and control them, or you try and have some semblance of control over it. Like myself, I have my best of 3 strategy, which I specifically made for myself as a rule set to prevent overtrading, to prevent revenge trading. But it only worked because I said I'm going to follow it. So if I have 2 losses in a day, I'm done. The moment I go above and beyond that, I am now revenge trading or I'm FOMO trading or whatever. It only works if you stick to it. And I know it sounds crazy, but that's literally it. It only works when you're actually following it. It doesn't work if you just write it down and say, well, whatever. I have this rule, but I never follow it. Then what's the point of having the rule? So
exactly. But also, I think, in Atomic Habits, he talks about making it easy. If you want to follow a new habit, you make it easy. So that's, I think that might be the first rule of creating new habits, is make it easy. So what does that mean? Well, if you are trying to lose weight and you're eating a lot of candy, well then don't store all your candy on your desk. It's going to be difficult. It's going to be difficult not to eat it. Maybe buy a safe and give the combination to your partner and tell her, you don't give me this combination until it's Friday. That's the only day I can eat candy. You know what I mean?
Yeah.
Like you make it easy. So you're not even, you can't even eat it. You have to follow the habit. So now you can start making a list. Okay, you make a check for every day you don't eat candy. Well, obviously you're going to make a lot of checks on that because you don't have the combination to the safe, and you're not going to, blow it up. And maybe you will. I don't know. But you make it easy, right? So the thing is, like how much you want it. Like I want it. Like I really want it that bad. So maybe I'm just going to try to blow it up. But like, and that's the same thing with trading. Like, okay, so what's your problem? Over trading. Well, then maybe don't look at 1 minute signals. Maybe don't be on the 1 minute because you're getting 10,000. I mean, I'm not over exaggerating. You're probably getting tens of thousands of signals on a daily basis on the 1 minute time frame. And then you're looking at the daily. Okay? You're looking at daily. And so, okay, we can do a quick calculation here, right? So how many 1 minutes is there in a day? Now, someone out there might just know this as general information. Maybe you do. I don't know. I haven't asked that question before. But now, okay, so it's 1,440 minutes. Okay, so
yeah, so it's 720 per 12 hours.
Yeah, it's insane, right? It's, so in one day, you can have potentially one signal on the daily. One signal on the daily, okay? And within that one signal on the daily, you can potentially have 1,440 signals on the 1 minute. So if you're over trading, maybe do not go into a office with 1,440, candies laying around. Maybe go into office with one candy, So it's also about like, who are you as a person, and then kind of look at, okay, where in trading does that personality align? I'm not saying you have to be a trader based on the daily candles, but you can be a trader based on a 4 hour, right?
Yeah, remove the temptation for that thing. And if you realize that you having your packets of sweets and whatnot stuck here behind you within arm's reach, it's so easy. It just like you say, just make it so much more difficult. There's definitely the idea that it's also a lot to do with want. If you really want to change, you will put in all of the blocks that you can to prevent yourself from trying to do that thing. So, like you said, take your candy, put it in a safe. it's so easy to say, well, I've put my candy in a safe, I still can't lose weight. Well, that's not the only thing. It's but one of a whole list of things that needs to change, or that needs to be not necessarily changed, but tackled, approached in a way that you can look at it and say, okay, I have a problem with this thing and I don't want to have this as a problem anymore. And you really need to want to not have that problem anymore. I really don't want to be somebody that overtrades, because it's not sustainable. I feel like I don't have control if I'm overtrading. It's like I'm giving into this emotion, and I don't want to do that. So for me, I had to go and put things in place that said, okay, I realize that this is a problem that I have. I don't want to have this as a problem anymore. So let me think logically about this. What can I put into place to kind of help me to tackle this thing that I don't like about myself? And you really need to want to change it. And then slowly but surely with time, I think it took me, I want to say the best part of 6 to 7 months to really ingrain that idea of sticking to my best of 3 strategy. And then there was a time frame where I thought, I'm doing well. Maybe I can do a 4th trade. Let me try a 4th trade today. And then just once breaking that habit, I went a few months with not following my best of 3 strategy, and I suffered for it. And you get back to the point of like, oh, you know what, if only I hadn't broken that idea. And then it took me a few months again to get back into the habit once again. So yeah, it's a very convoluted way of thinking about it, but there's no trying, it's just doing. If you want something bad enough, you will walk to the end of the earth to achieve it. And it's that mindset that sets you apart from the other people that try it for 1 to 2 months and then they give up.
Yeah.
You really need to want it.
We just had Canadian CPI coming out. Month to month is as expected, but then we have year to year giving us a 2.2% reported actual with a forecast of 2.1, so slightly higher than expected, but nothing major.
The median
sort of
was a bit
muted. A fairly muted reaction here, but it does seem like we're picking up. Had it moved to the downside, big wick, picking up to the upside right here. So let's see if we could perhaps get some movements to the upside. I've looked at this UVP.
I think Jonatan's internet just died. Remy... yeah, he's back. Sort of. So on the news front, we're just getting the common CPI and the core CPI now. So we should, in theory, have it in a moment. But yeah, if we just go to the chart and we look at the CAD dollar, so that's a major pair. Where is it? Exotic? Oh no, he was on GBP. Yeah, GBP CAD. Here we go. Reaction should be this candle over here. Very, very muted response. So back to news. CPI was as expected, slightly higher than the previous one. If we just look at the trend or the chart, it's a little bit higher, but it's quite muted as well. The median was slightly less than, but we're still within this 0 or 3% range, basically low being 2.2, so it's not that bad. And then the trimmed one was as expected. And then the common CPI was also slightly lower than expected. But the result is very muted. What's the range of this candle here? 1.2. So 12 pips. Very, very muted range, very muted reaction. All right, while we wait for Jonatan to potentially maybe, I don't know if he's going to come back, maybe come back, let's have a look at chat quickly. I see people making 100% return in the competition. Is that even possible? Yes, it is possible, but is it, in the long term, is it sustainable? No, it's not. It's not sustainable in the long term. The thing about the competitions is that is unrealistic reaction to how people normally trade. The thing is, you want to win an account. That's what people are trying to do. So what they do is they would over leverage, or they would really just push an idea, and with the expectancy that they're going to win an account at the end of the day. It's gambling really at the end of the day. And in general, that's not something that can be maintained over a long period of time and actually net good results. So it's the idea of what is possible and what is probable. Probability refers to the likelihood of something happening, and possibility refers to the ability of something to happen. So possibility has only got one of two outcomes. It either can or it can't. And then to which degree, or how often, or how typical it is, that's the probability. The probability of somebody or the possibility of someone making 100%, yes. You can make 100% on account. Is it probable that it's going to be maintained? No, it's not, because the statistics indicate that you are more likely to lose than you are to win with trading. Plus 44 is UK. All right, thank you for that, Lesaint. Aren't Canada and USA +1? Dude, I don't know. Like, I'm from South Africa. Ours is +27. So I don't call overseas ever. I've got WhatsApp, and I have very few international. Well, I do have some international people, but I don't generally need to contact them. So don't generally get calls from there. Can you guide someone analyze a trade? Well, if I was in a trade, I would have been able to analyze it for you specifically, but I can tell you what it is that I'm looking for as an idea around the trade. So let's take pound as an example. Generally, what I look for is some sort of reaction from an established area. So let's take Friday as an example. So ignore this drawing over here, let's just see, and then this drawing over here. So let's just ignore that. Let's just look at the London session in a nutshell. So this is generally where I trade. I trade in this blue box. This is what I look for. It's a London time frame. It's a London session. So for me, that is 10 o'clock in the morning, my time, and then it ends at 6:30 in the evening. That is a whole trading day for me. 10 o'clock until 6:30, that's a whole trading day. Generally around this area, I have things to do, like I have home tasks and whatnot that I need to do. So I generally don't trade during the New York session. So more often than not, this is where I will end. So from 4:30 in the afternoon, South African Standard Time, which is UTC +2, so that's GMT +2, and 10 o'clock in the morning. So what I generally do is I look for areas where there was some sort of strong reaction. So in this case, during London, when London opened up, we had this nice bearish push down. Now this is multiple pips of movement. And then we had a massive upward reaction pushing it higher. So what I would do is I will mark the low and the high of this swing area as an example. There's the low. And then the high, I would generally, depending on the size of the candle, this is on the 5 minute. I'll just have the most recent swing area as an example to try, just to have an area to test for and to see how it reacts. Then what I would do is I would want to see how, in this case, this was a nice volumetric movement, very strong, very intentional, a very, very, very strong upward movement, massive candles in a very short time frame, pushed up. And then the reaction was to start retracing. Now, I don't know if I press replay, I don't know what is going to happen from this point. This is all I have. This is all the data that I have in place. So I will then wait to see whether or not there is some sort of reaction from this point. Now, obviously, I would only draw this upper box, which is the swing high. That's the swing high. This is the swing low for this segment. And I would only on the close of this candle would say, okay, so this is the current swing high. And then I will wait for the very next reaction. So now I see, okay, so we have 2 bearish candles after a massive bull pressure to go higher. So I know that right now there is at least some sellers sitting at this point that's trying to push this price down. Doesn't matter what pushed it to this point, what was the initiator, just that at this point in time, price has no follow through. So these 3 candles over here attempted to push it higher, but this candle over here was the follow through. So you have the idea of trying to push higher after slowed momentum and then a turn, but this is the follow through candle. But now this follow through candle needs a follow through as well in order for us to say, yes, we're going to start pushing higher than this point, which we didn't. We had a bearish candle and then another bearish candle. This is on the 5 minutes still. The very next candle is the very first attempt yet again to try and push higher. So understand that this movement here, this 1, 2, 3, 4 bullish candles is a leg. It is a rally. It's rallying from one area. These 2 candles over here, the 2 bearish candles, they are bases. They are trying to break this upward trend. The bears are trying to overtake the bulls in this case because the bulls have so strongly moved up. So what I'm looking for is I want to see the follow-up. I want to see the follow-up of this base. I want to see the follow-up of this attempt to try and break the upward trend. And in this case, we have a bullish candle. But the bullish candle itself, and I don't know if you guys can see it properly, but it has a wick that is quite a bit larger than the body itself, signifying that there was an attempt to push it higher, but eventually we closed lower. So now this has got my attention. I need to pay strong attention here as to what I want to see happen next, being a reactive trader. What I want to see next is one of 2 things. I either want to see a follow-up candle of this bullish candle. I want to see a follow-up candle that at least starts to wick higher than the most recent wick on this bullish candle. I want to see price show I want to push higher and then potentially come and test the high, this high swing area, or fail to reach this high area and then start showing that it wants to start pushing lower. That's the 2 things I want to see. I either want to see a follow through and then conviction that it's going to start moving up, or I want to see it reverse. That's the only 2 things that I want to see. That's the only interest that I have in trading this, or for entering a trade. The very next candle is nice. It's a very volumetric bullish candle. It's showing that it wants to continue higher. Now I'm going to look for a buy entry. I'm going to wait for the potential either pullback or continuation in this case. So I know that I'm looking for buys now. So what confluences do I have? I have the fact that we are above the 20 EMA, or in this case the 10 EMA. I normally have a 20 EMA as well, but I don't know why I've deselected it. This just informs the same idea that we have momentum. And then I have a look at the MACD as well. The MACD is also showing momentum, but it makes sense because we have this massive candle. So what I'm going to wait for is I want the right entry price. I want to see it come back down and then start pushing higher. We're getting our small retracement. So what are we waiting for now? We're waiting for another bullish candle to print. And then once this bullish candle prints, I'm in. It's a rally, it's a base, it's a rally, it's a base, it's a rally. Now the reason why I'm not in on this first rally, come on. The reason why I'm not in on this first rally is because of this reaction. It's way too large. It's very strong, but it's too large. It's like saying I want volatility, but the amount of volatility that you want is too much. So imagine if I have this whole movement was 85 pips, where my entry, as an example, on EU, my stop loss is 10 pips, and my take profit is 20 pips. If this thing retraces a lot deeper than just these two, or maybe it decides to start pushing back, I have no leverage. I have nothing to play with. My stops is going to be over here. It's just too close. It's just too easy for just wick down and then start moving up. So it's too much volatility. And I know this sounds weird by saying it, but it's too much volatility. It's too much of a volumetric move. I expect some sort of pullback. And that's just by being in the market long enough that you know that at some point, if there's no follow through, this is eventually going to start turning around and then come back to an area where there was some sort of test between the bulls and the bears, and then it will maybe potentially start pushing up from there. But anyway, back to what I was saying. So I want to see a follow up now, and then if I do, let's say hypothetically get an entry there, and I look for my GU long, something like that, look where my take profit is. My take profit is close to the top of this area. I don't have to have it break through. My stop loss is going to at least be on a secondary attempt to push lower, knowing that it failed yet again. So it's a higher likelihood that it's going to carry on pushing up for me. So what did we have? What did we have? A big downward candle. Now imagine this candle itself has got zero wick above it almost, and it looks strong. And we are now in line with the most recent swing point, which was right here. That was the swing point. So you can imagine upward trend, high, attempt to push lower, and then a continuation going up. You have the high, base, rally. So every place where the base ends is a swing point, if there's a confirmation of a rally. Now I'm rethinking, should I enter this? This is not the kind of follow through that I was looking for. I wanted a bullish candle here. No bullish candle. The follow up is a dip lower than the most recent swing. So you can effectively think of this as low, high, lower low, lower high, and now we're starting to print a little bit lower. So if I just pull this out of the way, you're starting to have some sort of flag. The flag pattern. Strong pole, strong leg, and then the flag itself is just busy printing a little bit lower. So now I'm changing my idea. I'm no longer looking for buys. Now I need to go and look at some sort of retracement. So now I will pull the fib up and I'll see, okay, here is the 50%. I will mark up the 50%. Okay, let me just select that. I'll mark up the 50% and then I will try and see the 50 and the 0.618. So that is known as the golden zone. I would mark that up to try and see how we're going to react here now. Now, if we have follow through, there's a potential that it could react from here and then just have a little bit of a delayed follow through, and it can start pushing up yet again. So patience. I'm trying to be patient. I'm trying to wait for the market to show me what it wants to do. Now, I already know that I have a swing point over here that is lower than the previous swing point, which is the swing high of the day. I have this area over here that I'm looking for a reaction, but I also have this swing point over here that has been broken. So this is a break for me. So a high, lower high, a low, a lower low. So now I'm going to wait for the follow-up. Follow-up, indecision. This candle means nothing. Neither up nor down. Can't do anything with it. Another indecision candle, followed by a little bit of a stretch down. Now I know that this area over here is an area of interest. I want to see how it reacts here. If it does, if it wants to push lower, it's going to break through it. Oh, we might want to start going up from this point. I will wait. I will wait and see for it to give me its reaction, because obviously we have this massive move. Very next candle, indecision. Candle after that, downward attempt, still not breaking lower than this most recent area. Let me just zoom in a little bit. Finally, we have follow through. So it's the same idea that you've had here. Price pushes up, it attempts to push lower, it attempts to push up higher, it fails, it starts pushing lower, it makes a lower low. So this area to me no longer exists. So what I'm looking for now is now I have another swing point over here. And I know that this swing point is lower. So now I'm just going to wait for an entry to go lower. I can see that the market is telling me that this initial move that we have here, it's not the direction where it wants to go. It would have pushed back up here. So what I'm going to wait for? I'm going to wait for a rally, a drop-based drop. And a drop-based drop for me is 3 candles in one direction, 1 candle in an opposite direction, and then a 3rd candle in the same direction as the original movement. So what do is now I wait for a bull candle. There's a bull candle. Now it's important, this bull candle is not allowed to break this swing point. It's not allowed to break above it. So I wait. There's my confirmation for a sell. I mark it. There's my sell. That's what I would look for. And then all I need to do is I then just need to see the reaction. Right now, it's a bit flat. I'm running in drawdown. We're starting to get some momentum. It's still slowed. We should be seeing a bit of a reaction here at some point as well. It's slowed once again. This is where patience plays in, and then eventually it's either going to be a stop. This looks like it's busy returning. Immediately gets taken back yet again. So I'm just going to fast forward a little bit just so you can get the idea. And then eventually there's the trade. What I would do is I have my stop loss and my take profit as a 1 to 2 in this case. It's 10 pips as a stop loss. Take profit is 20 pips. The 4 pipettes that you see here at the bottom, 204, the 4 is commission. That's all I'm doing. I'm trying to cover commission as well, which I know, which is $4 per 1 lot on GU as an example. This is exactly what I'm looking for in terms of a trade. It's the patience of not accidentally getting in here, knowing that you have this massive movement. You need to wait for the market to kind of like tell you, was this an impulse decision or is this what the market wants? Was this, I don't know, was this news? News should have follow through, and that's what I do. I wait for the follow through. I wait for the market to tell me I don't want to carry on going up. I want to start moving down. Because consider this, if price really wanted to be up here, it would have had follow through. It would have continued pushing higher. There's no follow through. So the logical is it's one of two things. It's either going to consolidate or it's going to push lower. If it doesn't want to go higher, it's the only other options. So this is what I would look for a trade. And this isn't one that I took on Friday. But it's exactly what I would be looking for as a trade idea. So if you were wondering, I don't want to mispronounce your full name, so I'm just going to say Flow. If you're looking for a guide how to analyze, this is what I look for. I just look for swing points. I want to see reactions off of said swing points. I want to see momentum change. I want to see the candles attempt to test a new area and then have a reaction. So established areas could be previous day highs and lows, can be previous session highs and lows, can be previous high and low swing points like we had here as an example, high point and a low point swing. Now, if I just carried on going forward, this area that had the most, the strong reaction is down here. If I just see how it was reacting off of it, this is a swing point. So I could have looked for a point to look for a buy entry had price not pushed lower than this, as an example. So exactly as it is here, this is the most recent swing point. When it started pushing down, it attempts to come down again, it fails, and it starts getting nice bigger candles that envelop the previous one, engulfing candles, outside bars, that kind of stuff. Like this. This is an outside bar where the whole body, the wick included, completely envelops the previous candle. It's not just the body of the candle that envelops it that would make it engulfing, but it's an outside bar. The whole thing is outside of this. The whole close and open, high and low is above and below this previous point. Anyway, so then I would start looking for areas where I have rally-based rallies, because now we're starting to rally up yet again. Price had an attempt to push lower, exactly the same as here. Exactly it pushed up, it attempted yet again, it failed, and it started pushing lower. It pushed lower, it attempted here to try and push lower, and it failed, and then it started pushing higher. So what am I looking for? I'm looking for a rally, a base, and yet another rally. So there was the potential for a trade entry here. It had broken this previous swing point, and the lowest swing point down here, it failed to reach. So it breaks this one. Sorry, the replay thing is in the way. It broke the most recent swing point. It failed to create a new swing point. So this is a higher low now, and this is now a higher high in relation to the previous one. It attempts to push lower from here, it fails, and then it starts pushing up. And then I can yet again look for a potential buy as an example. Now, obviously, this is all hindsight as it is now, but it gives you an idea of what it is that I'm looking for trading. So just an idea of what I'm going to look for. Like right now, if I just look at the price now on pound, I'm going to start looking for sells. Exactly the same reasoning. We attempted to push higher. This is a swing point. This is a lower swing point. This is the most recent break point, or most recent lower swing, which was broken, meaning when it breaks, it's not just a wick, you've closed lower than. You're not just wicking into it. This is a break. So now I will wait for 3 bearish candles in a row. 1 bullish candle that does not break higher than the most recent swing point. And then I will wait for the follow-up bearish candle. And then on the close of that candle, I would look for a sell as an example. And then I will try and see how this price relates to the most previous, or the most, not previous, what's the word? The higher swing low and swing high. So even though we've made a higher high in relation to this point over here, this one and this one, and we've made a lower low, we're showing that we're struggling to push higher. We're struggling. So there might be enough in this to try and push lower yet again. So it all depends on whether or not we're going to have the follow through and then the push lower. But everything so far is showing that, yes, we do have a little bit of upward momentum, but we have areas where we can come and test to see if there is buyers that's going to take up the price yet again. Because right now, just in this segment over here, sellers are in control. Even though across the day, bulls are in control. But across the last 2 days, we're sideways. Because we're not breaking highs and we're not breaking lows. So that's how I look at the market. And I generally just go back 1 to 2 days just to see this information, because I'm reactionary. So I trade on the day what I see instead of where I believe the price would go. I know that there is a potential for price to come up to this point, because this is the most recent area where price had a reaction. I know that's possible. So I would not try and trade into it. I will wait for it to react off of this point, and then I'll start looking for my trade. So instead of trying to say, I'm going to trade it from this point into that one because that is what I expect to happen, I'll rather wait for the reaction and then say, okay, now I'll wait for that follow-up reaction to say, yes, let's carry on with this strength, or let's revert or change and start pushing lower. So that is just what I would be looking for. What do I think about GU? Like I explained right now, it is bullish. If I just remove all of this, the day itself is bullish, but the current price is starting to attempt to push bearishly. So this is the low of the day. This is the high of the day. We have a higher high in relation to this one over here, and we have a higher low in relation to this one over here. So right now we're making higher highs and higher lows. So bullish. However, we're struggling to push higher, the same as what happened here in relation to the previous high. There was a potential for a trade here for a sell on GU as an example. 12311 right there. I could have entered a trade. It would not have been a winning trade, but it's the same concept. It's the idea of waiting for the reaction and waiting for the follow through. You don't have to win every trade, obviously. As it is right now, we have an area where price can potentially come and test, where there was a little bit of sideways action. Price didn't quite know where it wanted to go, and then it started pushing volumetrically out of it. So this is an area of interest. If price can break through this, there is a potential for it to come and test down here, as an example. And all it is just waiting for price to show what it wants to do and when it wants to do it. So starting to push a little bit lower. Theoretically, this could have been an entry point on this candle as an example, like that. But it's already like 4 o'clock here by me, so I have zero intention of trading now. It's too late in the day for me. I'm not really bothered by trying to catch this. But yeah, that's just the idea on GU at the moment. It's a little bit bullish on the day, but there is the overall arcing idea that it is stuck between 2 points. So really struggling to say where we would expect it to go, where we want it to go. DJ, thanks, Richard. Yeah, no problem, mate. I am Kenyan. I am happy to see one. Oh, that's cool. Are you a profitable trader? Oh, okay, you're talking to Anto. All right. Let me look for a question or something. Yeah, CAD Redfall news was mild. Definitely. But it seems as though it is now, it has made a double top effectively. So this area over here, we're struggling to push through, and now it's starting to show a potential of pushing lower. So here is an area down here where I think price can come and test. That's one area. And then we also have this area over here where we had multiple touches on it. Yeah. So you can effectively think of this as a break and a potential to come and retest. The news itself might potentially push it down to this point. So I don't trade GCAD, GBP CAD. I don't trade GBP CAD, but it is the same idea. We're struggling to push higher. We had this nice movement. We attempted to push lower, we failed. We attempted to push higher, and then obviously the news. So this is just consolidation. So now we need to see some sort of breakout. So as it stands right now, it's stuck in this area, but it's showing that it wants to potentially move lower. And where can we test? This is a potential test area, but this area down here has more indecision, has a lot more. We needed to fight to get through it. This whole area down here. This is a support and resistance we've broken through, so there's a potential that we can come and retest it, and then we need to see how it reacts on this support and resistance point over here. And this support and resistance is based on the fact that over multiple attempts, we've struggled to break through or to fall below. So obviously there is an outlier. This one over here is an outlier, which was most probably news. But you can see, let's say if it was established over here, this is attempt number 1, which no follow through, it started pushing lower. Attempt number 2, attempt number 3, there's a small little attempt over there as well. Here's a few more attempts. And then you eventually have the break. Now you need to see the break and retest. The reason why this, I don't consider it to be a break and retest, is because it's impulsive. It's an impulsive move. An impulsive move is massive movement and then immediately fails it. So you immediately failed the retest and it started pushing lower from this point. You want to see price break without impulse. You want to see it break without news. You want to see it break with, you want to see it as not being a impulsive decision. You want to see it as a calculated decision. Price entered into it and then started slowly drifting lower. This shows that this is the direction that price wants to go with. So when it eventually reaches it yet again and reacts off of it, then you know that this is the direction that the market wants. But if it's reacting impulsively like it did here, and you're seeing zero follow through, what do you think? Do you think it's going to push higher from here? I don't think so. Anyway, so what I'm seeing right now is this is a potential area of testing, and then we have like indecision. This was the last time that the bears had an opportunity to try and break or to try and push it lower. This was the last time it attempted to do so, and it was followed up by multiple bull candles up until we eventually reached the top. News wasn't, it was as expected, but it wasn't super great, and then now it looks like price wants to start pushing lower. So this to me is an area to be tested potentially. I hope that gives you an idea of what it is that or how I look at the market, and maybe that helps you. Gold's very wicky at the moment, yeah. Once again, gold to me is just stuck in a range at the moment. This is just, it does look like it wants to push lower, but at the same time we're making either equal lows or slightly higher lows or slightly lower lows. It's just indecision for me. I have zero interest in gold at the moment. There is a potential on the higher time frame. If we start looking on the 15, same idea. It's just sideways action for me. 30-minute sideways action. There's no clear direction. The hourly is starting to show that it might potentially want to attempt to push lower, but once again, it's got this support area down here that needs to be broken through and pushed lower before we can say with conviction that yes, it wants to go lower. You have these slightly lower high wicks in relation to the previous ones, but you can almost think of it as a reverse logarithmic channel, and then you have this. Okay, this was ugly drawings. I do apologize. You have this area down here where you have the lowest point, a higher lower point, and yet again another lower point, and you need to see the reaction here. So what you would want to see is you would want to see price break through a channel of some sort, at least disrespect this support area over here, meaning break through it, disrespect it, close through it completely. Don't just wick into it and then reverse. Don't disrespect it completely. Push all the way through and then attempt to push higher and then continue lower. And then I'd say, yeah, I'll look for a sell, that kind of like thing. That's what I would personally look for. Waiting for a channel to be broken is one way to say, okay, there's the potential to push lower, but there's so many channels. You can look on the 15-minute and you can find a channel that is being broken, as an example. And it doesn't necessarily mean that it's going to continue in that direction. To me, right now, gold is just sideways. The way that I trade gold, at least, let's put it like that, is it's too sideways for me. I can't get into a trade on it and be happy to leave it to go. Got stopped out on my gold, got some realizations to do. Yeah, mate, it's one of those. Real Ren, it's here, South African, mate. What's up? Like my brew. Kadeen Clement. Hey, I'm relatively new to trading. During my first week, I practically lost it all due to bad trades and emotional trades. I'm wondering how I should fix my approach going into the second week. Okay, so you're saying you're relatively new to trading. You said you lost it all. You practically lost it all in bad trades and emotions. The first and foremost thing that I would do is I would say, don't spend another cent on trading. Don't put another dollar, rand, whatever. Again, not yet. Go into a demo account and get some back-tested and forward-tested data on a strategy that you feel comfortable in following. So backtested data obviously is great on, let's say, TradingView, which is this platform. This is the TradingView app. On this platform, you can go back and you can say, okay, I have an idea of a break and retest idea. Here we have a break of a low point. Here we have a break. Ooh, sorry. Here we have a retest. I'm going to enter a trade as it exits, and I'm going to put my stop loss just above that point, and I'm going to aim for a 1 to 2 as an example. Let's say that's your strategy. In this case, your very first trade is a loss, and you're like, okay, no problem. That's one. I know that at least this isn't going to be a 100% winning strategy. Then you carry on doing these backtested strategies until you find one that you can, or until you feel comfortable by replicating it in a live market. And in this case, this live market is not going to be one that you've paid for or that you've put money on. You're going to do it in a demo account. So you'll go over to a demo account first. And on that demo account, you're going to see if you can replicate what you've backtested without the hindsight information. So you'll effectively try and say, okay, I see that we have another break. I'm going to, let's say for the sake of argument, that is the area that you're saying, okay, this is what I'm looking at. This is consolidation as an example. I'm seeing that here I have a break and there I have the retest. Okay, cool. So let's say, hypothetically, let's go back to here. That this is going to be more in line with what I'm trying to explain. So let's say this is your idea of a break of an area and a retest that is failed. So now in your demo account, you'll see, this is my entry criteria, and I am going to have my stop loss just above, and I'm going to aim for my same 1 to 2 that I was looking for initially, and now I'm going to see how it plays out. So what's going to happen is you're going to enter your trade exactly according to your rules that you've set up, and these rules are going to be based on what it is that you've tested in hindsight and tested in backtesting. And then eventually you're going to enter this trade on your demo account, and then you're going to wait for it to completely play out. It's either going to hit your stop loss or it's going to hit your take profit. And in this case, it would have hit your take profit, and now you're going to see, okay, I had one losing trade in backtesting. But now that I'm forward testing it and I can actually see it happen, now I'm starting to gather some confidence and some data, because now I'm actually trading. And now it's trading in brackets because it's demo trading. You're not actively participating in the market, but it's not the point. The point is not for you to participate in the market just yet. The point is for you to establish rules that is going to help you become profitable in the long run. That's first and foremost. Secondly, it's going to allow you to get used to the idea of following your strategy, not in hindsight, but as it's happening, and allowing your trade to play through. As an example, if your strategy is based on, okay, I will take recent swing points and something like that as an example, then obviously you're going to have to sit around and wait for it to play through. And if it gets to this point, then you close the trade manually as an example. But that's what I would say. I would say first and foremost, stop trading. Immediately, just stop trading. And the reason is, psychologically, losing money is hard. It's hard to lose money. The psychological impact of losing money, especially because we value money. You can't do anything without it. You know, you need it to eat. You need it to be entertained. You need it to take care of your family when they're sick. All of that kind of stuff. You need money. But it's the value of that money. It's how much emphasis you place on that value of that money. How important is it to you? If you can try and curb how important money is to you, and just be patient. Do the back testing. Do the forward testing on a demo account. And only when you have sufficient data to support your hypothesis that this strategy is one that is profitable, and it's one that I can see in real time happening. doesn't help you have a strategy that only works in hindsight, because you'll never be able to replicate it. You'll never be able to see it happen in the market and react in the market as it's happening. And then build the confidence. Build the confidence in sticking to your strategy, sticking to your plan. That confidence that you're building is going to eventually carry you. It's going to eventually make trading a lot easier for you, because you can enter a trade and say, I know that my strategy gives me a 70% win rate at 0 or at a 1 to 2 RR. I know I'm not going to win every trade. I expect to lose 30% of the trades that I enter. I am fine with that. I know that it's profitable. It's that confidence. It's the confidence of my back-tested strategy works both in hindsight and when I'm forward testing. That's what I would say. So your approach for next week is get yourself a demo account and trade only in that demo account until you get to the point where you confidently can say, okay, I'm happy with the information that I have here. Being relatively new in the market, you're going to see a lot of people say, only follow this one strategy and you'll become profitable. First and foremost, it's a lie. It's a straight up lie. Unfortunately, it is just the evidence that we have suggests that there isn't one specific, just follow this and it will always work strategy. Sorry to burst your bubble. It doesn't work. Unfortunately, it will work in a nutshell. It will work for a little bit of time, and then it'll stop working completely. And you need to accept this. You need to accept that it's not as easy as you clicking your finger and then there's profits. It's hard work. It's constantly battling against yourself, against your own emotions, against your own biases that you have on a day. And it's very easy for you to convince yourself that this is where it's going to go. And then you'll trade based on that, and then it goes against you and you're angry and you know, why is it always me and whatnot? So emotional, keep your emotions in check. Try and disassociate emotion from trading. Trading is you versus you. It's a mirror. If you are a greedy person, the market is going to show you you're a greedy person. You're going to try and trade in a greedy fashion, and the market's going to punish you for it. If you trade in an emotional fashion, you don't allow your trades to play through, or you're getting angry with trades, you're going to have FOMO, you're going to have revenge trading, and the market is going to punish you for that. So as much as you can, try and disassociate emotion from trading. We are emotional in trading because we value money, and we value the loss of money. We value the idea of being wrong. We put a lot of emotion on, I was wrong or I was right. Try and find a way to disassociate from that. Look at just the data. Be objective. Just look at the data. And if the data suggests that if I follow this plan, this is going to work in my favor, then there you have it. Then just follow that as an idea. So your bias is long. On which one was this? Sorry, guys. This was an hour ago. I'm not in. It was half an hour ago. I was talking about GU, correct? Yeah. So like I was saying, overall with GU, we are in this upward trending channel right now. So I am a little bit more bullish. But once again, I am the kind of person that I trade according to a reaction on an area rather than swing trading or position trading as an example, or holding trades over a long period of time. I would want to see a volumetric reaction off of this point first. That's what I would want to see. But overall, GU is a bit sideways over the last... How many days is this? Over the last while. But it is slightly bullish. It is making slightly higher lows and higher highs in relation to where it was previously. So I would just preface that. What currency was this? This is pound GU. The previous one was gold, and the one before that one was GBP CAD. Sorry, that was 26 minutes ago. If you wanted to see which currency it is in the top left here above, I don't know if you guys can see it properly, but the currency shows here GBP, so pound, British pound, US dollar, top left. I don't really know if I can make this any larger than it is at the moment. Sir, what's the moving average that you're using on GU? So this is a 10 moving average, but I do have 4 others. This one is a 10, the second one is a 20, a 50, and a 200. So if I put all of them on, they're just different colors. I'm going to remove all of the drawings and just have that on. So the blue one is a 10 EMA, the green one is a 20, the orange one is a 50, and the red one is 100. I don't generally trade with the other ones. It's generally either the 10 or the 20 that I have up, and I use it purely to see if there's follow through. That's all. I just want to see the average price. I'm all about the idea of simplifying your trading, because trading itself is already difficult enough. There's so many things that you have to take consideration of. There's so many things that you keep in mind. So if there's one less thing that I have to go and wonder about, the better. Victor, how are you, sir?
I am
LJ.
fine.
How are you, LJ?
Good. Doing well.
Not too shabby.
How you faring, Rich?
Oh, I'm doing well. I was just trying to
Doing well,
catch up with chat. I kind of like go on tangents. I start explaining something and then I get lost in the source, and then I have to look at the chat again. And I'm like, oh, I'm an hour behind on chat.
Yeah, that's fair. It's hard to keep up. Hey, like you get stuff rolling in. That's right.
Yep.
Go well then.
Yeah.
What are we up to? What are we looking at?
I was trying to kind of like not break down, but explain why I believe that pound was a little bit more bullish during the day, but still overall slowly bullish upward. And that if I'm going to trade this, I'm going to wait for a reaction off of established areas and not like try and dwindle in the middle point, as an example.
Yeah, fair. I don't like the pound right now.
No, I don't either.
Pound is very difficult. It's very like, because we've had the massive downdraft, right? We've had a bit of a pullback, a bit of a retracement, but we're very neutral right now.
Yeah,
I would say the market overall today is very neutral. We haven't had like clear direction, that kind of stuff. So
yeah, I haven't entered a trade
very
for
much.
any pair. It's just
Yeah.
it doesn't look great. NAS to me looked like there was a
I
potential.
was going to say, so the only trade I've taken is a short on the NAS earlier.
I marked one out for a trade.
That's it.
But I didn't take it. Just marked it, didn't take it. It was what I was looking for exactly. Bit of consolidation, attempt to push higher, volumetric push lower. When there was another attempt to push higher, it just failed. And then I decided I'll mark this and we'll wait for it to play out and then we'll see. Market is one of those. Yes, you would have been right, but you didn't take it. But it was overall the idea. Yeah.
Yeah. No, that's fair. That's fair.
Unbiased trader.
How you doing, Victor, though? Going well?
I'm doing great. Hello, everyone. Thank you, Richard, by the way, for covering and filling me in. I'm having some acoustic difficulties in my background. So thank you, Richard, and LJ, to you as well. Thank you. I'm doing fine, LJ, to answer your question specifically. I have been waiting for talking specifically on GU. I've been waiting today for a area to be hit, and it hasn't yet.
Oh, yeah?
So I'm still on the stance for that, and the area is from 31, so 1.3144 to about 8 pips. That's the very tight area, but that's where I wanted price to come in first before I started looking for an entry, and hasn't happened yet. Perhaps will not happen today. I agree with you in the sense that I'm gonna switch to mine. Let me see if I. So
Yeah, sure.
people
I'm curious.
Everyone watching, go ahead. Everyone watching could have an idea. We did have a on the higher time frames on the daily, we broke that level, which was we did have a reversal pattern right here, right? We broke that. I'm gonna change the color because I think that's not very visible. Let me do that. while I'm showing the chart, and I'm gonna tell why I think you were absolutely right in your assessment that it is kind of tricky pound, I would say, because we've had I'm gonna switch. I know I changed the color, but I'm gonna switch anyways with the tool. We had this reversal pattern which broke to the upside, right? So it was, from before, we coming from the lower levels, right? From lower levels. So a reversal back into the direction of the trend on this daily would make a lot of sense. And so you would expect that when price came to this area, which that was the last entry order block on the quasi that I'm just depicting right here, you would expect some kind of a reaction, at least a pop for a couple of days, maybe a week or so. Then it will decide whether or not it's actually going to reverse or not. But what did price do? As soon as we hit that level, we just went through it without any meaningful reaction on this time frame. And to me, actually, to I think everyone, that was a very clear sign that the market is quite weak on the daily time frames. And yes, we could expect some kind of a pop, but overall we shouldn't be too ambitious with that pop because of just what I explained. So since then, if we go to lower time frames, let's say since the time we broke that level, so all this order block is no longer active at all. That's why, but I left it so people can see it. When we had that push to much lower levels, if you look to the lower time frames, you would see that we held, not only we had the expected move, right, the expected reversal, the expected pop after the break. That could be the break and retest to continue lower, which was my expectation and still is. What we're seeing here is that price is actually holding quite nicely. Not only that, it's actually breaking to the upside, and that makes it like kind of dubious, right? Contradictory, and it's a reason to be a little bit cautious if you're on the higher time frame, because the immediate time frame or the lower time frame tells you that the market is still strong and perhaps is still open for another leg up before eventually the higher time frames kicks back in, and the trend, and the momentum, and we start seeing pricing going perhaps to retest this level, and who knows, even lower. But in the interim, price is still bullish. So I am looking for, and this is the area that I was looking for those who are interested. We did have on the daily time frame that fresh order block that is now being retested. You can see on the wicks that each day it's having less success in piercing that order block. That's an increase in buyers' appetite. But today, as it retested that on the H4, what do we see? We see a fresh order block being created. The market pushed much higher. And this is the area where I was looking for possible price to come back to retest for me to get in. And if I would get in, even though I'm not going to hold it for weeks because of what I explained before, it is a good trade that I can take for perhaps a couple of days at least, because we have that possible daily next leg up coming up. If it maybe still coming, just I didn't catch it. I will not be part of it because it didn't get into my area. As you guys can see, I'm very not you guys. I know you guys already know me, but those who are watching, I'm quite specific and selective. And if it doesn't fit that, I'm gonna let it go. Even though I'm probably gonna be right, I know that, but that's fine. I don't mind that. So that's the area that I was waiting today for that possible move up. Who knows if it's going to continue on the higher time frames as well. But it didn't get to my area. Who knows? We'll see if that's going to change later today. So what are you guys, Richard? What are you been trading? You mentioned something about NAS.
I was looking at trading NAS, but
Okay.
like I said, today being a Monday and having had the reactions that we had on Friday was a little bit strange for me on GU. I didn't quite know what GU wanted to do. GU today for me has been kind of the same. My strategy or the way that I look at the market is just not formulating. It's just not allowing me my entry points as I would have liked. EU has been the same. EU has been a little bit sideways for me throughout the day, so I've really been struggling to get my entry points on EU as well. So I've stayed out of EU as well. Gold to me has been way too sideways since Friday night, and I'm
gonna move to your chart. I'm gonna put your chart to Richard. So okay, yeah.
So Victor, as you would know, I do like my rally-based rallies, or as you would call them, order blocks. So I like my reaction off of order blocks, and then I would like to enter based on that order block, as an example. But as it is today, we have this 5-minute order block over here that got tested on Friday, but has yet to be tested again. And this is gold, by the way. And then the lower portion of gold has made a point of interest for me, where we've had quite the reaction and then one wick touch this morning, and then since then we haven't touched it again. So for me, gold is just too sideways. It's not giving me what I'm looking for, so can't trade gold. GU has been doing the same idea. If we have a look at Friday, Friday had this very up and down, very large swings, relative large swings in relation to what I'm looking for. So very large swings. We did have a reaction on the high of the day, which was just wicked, and then we started pushing lower, but we're still far away from that area specifically. When we started to show some downward momentum, it got eaten up, and then we started pushing bullishly. So to me, still, I'm a little bit more bullish on pound, especially since we have this upward trending, though lower time frame upward trending. It's not reacting the way that I would want it to react in order for me to get into a trade. So practicing patience. So I'm waiting for GU to start showing something more in the line of it's been a while since we've actually had it really show something like this. We've had a strong reaction lower, and then an attempt to push it even lower. This was the 11th, and it just struggles, and then it starts showing a little bit more impetus going higher. So there is places for me to enter, as an example, to look for a trade, something like that. So, but unfortunately, it's just not reacting the same way. It's too sideways for me. That's GU. EU, like I said, the same thing with EU. EU was a little bit too sideways. There was a 5-minute bearish base over here that got tested, and then we started pushing lower. I missed my entry. I had an entry that I was looking for. I think it was over here, potentially, but I missed it. So I waited for it to come back to this point over here. But by this time, I wasn't really in front of the market all that much. I was doing other things, and by the time that I came back, it was already somewhere here. And I was like, you know what? I've missed it. It's okay. It's one of those things. So yeah, just no trading. And then this US tech one, the NAS, I was looking for this reaction and then a push lower, and then I saw it, and then I didn't get into it. And I was like, okay, it's fine. I'll just mark it and leave it. And that's me so far. That's me today. I haven't traded anything today, but I'm okay with it. I'm not trading is also trading. So yeah, that's me. And then LJ just disappeared. Can you hear me?
I don't know if you said something to me, because I lost the audio for, I don't know, 10 seconds or so. You may or may not have asked me something, and my lack of response, if that was the case, now you know.
Now I know. If you're just like staring at something, it's just like because either you didn't hear me or there was connection issues. Now I said I haven't traded anything today. Marked up 1 or 2 things that looked good, but I didn't take them. It's a combination of A, wasn't paying attention, B, wasn't always at the charts, and C, just trying to catch up to what chat is asking, and then kind of to give information there. And you don't always get all of the attention at the right place so you can take a trade. But it's not anybody else's fault. It is myself. I did not pay attention and I did not take a trade. But also not trading is also trading. So sticking to my plan and only waiting for my setups and then taking those setups. I'm like you in that regard, Victor. I'm very, very peculiar about what I enter and when I enter. Because like we discussed last week, if that is something within my control, and if it's in my control, I'm going to take ownership of it. And I will try not to deviate from it at all.
Yes, we are related in so many ways, Richard. So I think you mentioned it quite rightly. You're focusing on being selective, but also taking the trades or the signals in a timely manner. So the timing is also important to you, because probably you've noticed if you take these trades, after you've seen them, or after they happen, but with some delay, and well, it was valid, it's still roughly around where I suppose, but there is a difference perhaps of 5, 10 or more pips. I don't know, depending on your strategy, but I think from what I just saw, that that you have to get in at the right time if you want to expect the same kind of stats of the performance.
Yes.
The trade will play out the same way, whether you enter or not, because it doesn't depend on you. But the dynamics of the performance, the stats, the risk reward ratio, they change, and the edge erodes, and sometimes it's not even there anymore. Even if it seems like it is, the numbers do not support it because you haven't measured it, and the expectancy of any strategy isn't exactly huge, right? It's a sometimes it's a modest, sometimes it's a small expectancy, but it's there, and you're trying to capture it. But if you're careless about it, that modest expectancy can become break even, doesn't worth, because you're paying commission and you're not getting anything, or even worse, be not profitable. And it's not in the winners that you will see it, because the winners, you will still get good profits, but it's the combination of win rate and risk rewards, right? That's where you will see it going the other direction, the one against us, basically. There was something as well. You mentioned there were two kind of actually, you mentioned there was a trade today for you on EU, but you weren't ready at the time or you weren't aware at the time it signaled.
Yep.
In such cases, do you have like stats? Do you take that idea again, if let's say it hits TP and it comes back and it still triggers again, would you take it again?
On the second one, no.
Okay.
Because all of my back testing that I've done is always on the first reaction. So if I were to take the second one, I don't have data that supports it, even though in hindsight I can see, yes, it would have been great, but my hit rate is usually on the first leg, the first movement.
Okay, all right. Because it's important. It's important to do everything as backtested, because the stats, you mentioned it correctly, the stats that we gather and that we use to conclude whether or not the trade plan is profitable is based on a certain sequence, a certain set of rules that we follow, and the stats are valid for predictive value, as in what performance we can expect in the future, but only if we apply the same set of rules and the same sequence. Once we start changing things, like, I missed the first signal, I might get in on the second one, unless we have that as data, hard data, and we know that both of them are okay. You can take either one of them or maybe both, whatever the trade plan and the stats tells us. Only of those occasions, okay. All other times, we're actually basically experimenting outside of the realms of what is known to us based on the data we have. Everything is relative, because even the data we have doesn't represent the whole truth. It's just a it's a measurement. It's most likely, yeah, it's an approximation of reality, going forward. But it's interesting to touch upon it, because I believe, just as we are here, trying to make the best use of what we have in terms of data and backtesting and experience and all of that, it's the same thing everyone else is doing back home, unless you happen to be watching us, but you're in some kind of a quant, high frequency trading firm, and just for fun, you're watching us. I mean, in those cases, you probably have a lot more data than I do. But
Yes.
everyone else is roughly around, any retail trader, more or less, or maybe none at all, which is not untypical for retail traders to trade by. Point is, it's important to understand that, backtesting applies only if we apply it correctly.
Yes.
Someone asking for address all chats. I have asked around 5. You guys talked a bit long. Someone is policing our length of our conversations. I'm gonna get some fines here, because I'm a champion in not looking at the chat for 30 minutes on my own, having big long monologues. So I'm gonna be in trouble sometime. Pretty soon, No, I'm making jokes, but thank you for your feedback. Thank you for it's all good, no problem. No need to apologize. I'm just playing with you.
We're not offended. You'll really have to work hard to offend me, my friend. I'm very unoffendable. But yeah, sorry about that, Victor. I interjected you there.
No problem at all, Richard. There is some delay for those guys back home. So sometimes, the timing of what we, when we start talking, it's not we want to interrupt other people, but simply there is a delay between the two of us. And actually, there's a delay between when we talk, when you guys are actually supposedly live hearing us. It's not really completely live, because there is a delay of perhaps 10 seconds or so. But anyway, the point is that I was trying to make is that, Richard probably didn't even know I started talking, because there is a delay, as I said, of maybe a second or two between the two of us as well sometimes. All right, so someone asking for GJ. I'm Rito Basak. Once is enough. I see here you have 4 of those messages. You're getting into the danger zone. If you do that too often, we will, it will be flagged by our automated algos who go through our chat automatically, without us having anything to do with it, and it might boot you out. Right? So be aware that there are algos policing our chats as well, and you might be. I'm just kidding. All right. Let's look at GJ. What do you guys say? Or is there something else we should be looking at?
There was also a question for NASDAQ 100, and then EU as well, and then AUD JPY. It's a fair few of them, and then there were just a bunch of questions.
Okay. What do you think we should do? We should focus on the questions before the chat police comes back and tells us we're not paying attention to the chat. Or should we systematically and methodically go through the charts, the requested pairs?
I like the methodicalness of it all, so I agree with option number 2.
Okay. What do we say we do one by one, right? So I'll take a look at let me see. Let me take a look at gold, and then you might do some other, and then we'll keep doing that until we've discussed all the charts in on whole trading view, all of them, thousands of them. I'm just kidding.
Yes,
we only have like 15 minutes.
You can. And then, sorry, Victor, and then people in chat, if we didn't get to any of your questions today, there's always tomorrow. So please do come back again tomorrow. Post your question again. We'll try our utmost to address every question that comes our way. There is hundreds of questions every day, so just have a little bit of patience. We will try and get to all of them, but do come and post them again tomorrow, please. If you
I
didn't
like
get,
this comment.
how
Did
do
you
you
under-
fake
Did you
trader?
answer this already?
No, I did not.
Ooh, this is interesting. This is a game changer. We had this plan. We're gonna do things methodically, and I find this very interesting. Comment here. What do we do? This is tempting. This is so tempting. I wanna go into this round, or shall we? You like it, right?
I like that. I want to do what you want to do. I can see the enthusiasm and the intention in your eyes, Victor. So I think let's address this one.
All right, let's
says
do
by
that.
Richard, but that
Yes,
Richard has as a slash and Victor next to it as well.
The to its I don't know if I was already in the maybe it was Rich as a placeholder for whoever is in the room, right? And
I agree.
at that particular moment, perhaps you were you didn't have company yet. I don't know. I'm just auto justifying my interest in answering this. No, I'm to be fair, well, I don't want to be stepping on anyone's toes here. So, but then again, there is even a higher priority in when I think about this, which is talking about it in fairness, in openness, and in truthness. And if that, and sometimes those two things, they can overlap, meaning if you talk about the truth, you might, some people might get offended by it. So in those cases, I'll I'll just have to accept that I may offend people. I don't know. Anyways, without going to
the intention is the base.
Yeah,
the intention is to inform.
Yes. I have no intention whatsoever.
Information.
Yeah. I have no intention. I don't have a beef with anyone, and I'm not interested. I don't have time for that. But but the point is, in my experience, from what I've seen, and I don't see everything, and I don't know everything, and there are things we simply will never know the actual truth, because you don't have the data, you don't have the information, you don't have the access to actually confirm or not certain statements. But from my experience, from what I've seen from my own trading journey, the vast majority of influencers out there, there I go there thinking about choosing my words wisely.
You had a picture in your mind, didn't you? You were thinking of a
the
specific
vast majority, the vast majority. And let me put it this way. This can, this is my opinion, and it seems, it is my impression that the vast majority of influencers out there are not. They're not portraying trading as it really is. That is the truth that I know, and I might be wrong. I'm only one person, but that's with my experience and what I've seen, what I know, what is possible. And I'm not the best trader out there. I'm not saying that. It doesn't have to do with me, but with the experience that I have, and I've been around for some time, the vast majority of traders out there are portraying a reality that is not real. So I think that says a lot already.
Yeah, no, I agree with you there 100%. And it's very easy to notice it once you notice it. It's like a glass breaking moment. Like the glass shatters and you're like, that makes sense now. And I agree 100% what you're saying there, Victor. Did you want to extrapolate more, or?
Yes. Well, we can. There's enough there to talk. At least an hour or two. So I would recommend everyone who's watching and who is seeing either on YouTube or any social media or an ad anywhere on a website, to think critically through. Don't get too excited about the promises, and be actually not super critical, but add some critical levels to that, because most likely it's going to be lots of fluff and very little of actual value. And that is unfair for those who are actually working to give value. That's very, very unfair, because there are courses out there. There are influencers. Influencer, not by definition, doesn't mean it's a bad. They're they don't have your intention at heart. Yeah, right. It's just they influence, and they're on social media. There are influencers out there who are actually giving value, who are actually, it's worth your money and time to go follow whatever they offer, whether that's a newsletter, whether it's a course, whether it's they give you some insights about their strategies and how they trade live and all of that. So it's what I just said is very unfair to those who are actually legit influencers, actually good traders who are giving value to people. But the reality is that there is no influencer policing, right? So anyone can do it, and that's where the problem is, that the majority, from what I've seen, the majority of it is not worth your time. So think 3, 4, 5 times before you spend your hard-earned money on anything, to really, really make sure that it is worth. Just a little thing here. Now it's not as pervasive as before, but I remember in about what was it, like 10 years ago, it was actually, you still see them, but you have these adverts of EA robots, and they have these back testing results of MT4. It was back then, or MT5, where they say they tell you what it made, and they made all these kinds of, give you all kinds of these so-called proof, but the reality it's curve fitted. It's there's so many things wrong with it, but as an unknowingly client, or someone wanting to be a trader, it's so difficult for someone like that to understand and be discern what's good and what's not good. And the only way is to do so is think about it. If this robot was that good, why are they selling it for $50 or whatever they're selling it for $100? That does not make sense. So anyways, yes, I think that's enough before I start stepping on some landmines.
I would add that common sense is not so common anymore. If something sounds too good to be true, the likelihood it is too good to be true.
Yeah.
So if you've been in the industry, you don't have to be in the industry for all that long until you start realizing that there's a lot of people selling the dream and very few people living the dream. And I like to look at stats as if stats don't lie, but they can be manipulated. So
Sure.
The idea is that if the stats imply that 90% of people are going to fail at trading, why is it that every person that you see on Instagram, TikTok, or YouTube or whatever is this amazing trader? I mean, either the numbers are being manipulated, or the likelihood is just that if 90 to 95% of people fail at trading, why is it that every Tom, Dick, and Harry that you see online is a successful trader? That's first and foremost. Secondly, I agree also with the lifestyle promotion is the first red flag. Not necessarily the first one, but kind of understand what are they trying to sell you. Remember, there's a product and there's a consumer. Are you the product or are you the consumer in this case? And if you are the consumer, what product is this person trying to sell you? And if the idea is financial freedom, it's this lavish lifestyle, you then have to ask, okay, but what did this person do in order to get to this lifestyle? And if they're selling you a course, ask yourself the question, what is more likely, that they made their money with trading or that they made their money by selling a course about trading? And unfortunately, the reality is that a lot of, and not all, but a lot of the online gurus, lifestyle traders and this kind of like thing, what they're trying to promote, they're usually the people that is more on the latter. They made their money by selling a course. They made their money by selling you a dream and not actually living it. The ones that do actually live the dream, you must ask the question, why are they living the dream? And would they sell you something when they're making more money trading than they would have, for argument's sake, selling you a course? The ones that really make money, they're quiet. They're not flaunting. They understand the value of money, and they also understand the value of time. They understand the value of not being boastful. They will want to keep that information as close to themselves because they have an edge. They have actual edge. They have information. Now, it's not to say that those people that are super successful are not going to be on a channel like the one that we're on currently right now, trying to help people. There you have to ask the question, what do we have to gain from this? The stream is free. You're not paying a cent to participate in this. Our intention is to make you better traders so that when you eventually decide to start trading, that the industry that we're in finally gets viewed in a positive way instead of having all of these bad actors that are giving us a bad name. So our intention is to help you to try and become a better trader, but we're not going to tell you follow this and you'll have 100%. We keep it realistic. We attempt to keep it realistic at least. Try and show you some losses, try and show you some wins, and try and be a part of the journey with you instead of we're gaining something like monetary value from you and then we just laugh to the bank while you're sitting here struggling. So intentions are also a big focus point. If my intention is to have as many people buy my course, I'm going to make more money. If my intention is to help you, I'm not going to sell you an idea that is going to make you profitable tomorrow. I'm going to try and help you build on something that eventually will become your own, that you will then use to make yourself profitable at some point.
Yes, that's very powerful, and I got quiet right there, not only because you were talking, but I was actually listening because I like how you phrased things right there, Richard. I'm talking about if someone really had, what are the intention behind what they do, and what is it with showing off that makes you think, if you really have something of value, what's the point of showing luxury? To me, that's a red flag right there. Someone said it as well here. If they are flashing, the first lifestyle promotion is the first red flag, and I totally agree with that. Whenever I see that, that's the first thing on anywhere, right? When the first thing is, why do they need to show things, right, that has nothing to do with trading or your edge to make you that's an illusion. That's throwing, that's like in an exchange between two persons, and they're throwing sands in your eyes to divert your attention to the actual things that should matter, like result, proof, and things like that. And they just try to give you proofs of other things, and they're rented most of the time.
Yeah.
So, anyways, but yeah, you touch upon a couple of other things as well, as in always, what is it? What's in it for the person who's giving you the product? What's in it for that person? Is it, are they just living off selling it and that's it? If it was that good, why are they even selling it? If you have someone else talked about this, the edge decay, right? That's an actual thing. That's anyone who has actual edge in the market is gonna protect it and cherish it, because they don't want to lose it. They worked hard for it, most likely, and they don't want to just give it away just like that. So, and why would they be sharing that? And that's a really, really good question. And if someone tells you, they are, I don't know, if they can't answer that question, or they come up with some other answer, then that's another red flag right there. I think one thing we do here is on the, not I think, but what we do here at the 5ers and on during our live stream, which by the way ends in 20 seconds. When did that time go? Anyway, as if you guys are watching, the most of us, probably, I think everyone, no one here in our channel tells you where to enter and where to put exactly your stops and how to manage the trade, like exactly, and only do this or that. We give you options, considerations, because if you're trading discretionary, there are already, you can copy someone, because that person will be so variable in their in when they enter and how they enter and how much they risk, and they fluctuate. There's no way you can copy that strategy. But if you're like Richard, who is much more methodical and mechanical, am I right? And yes, which is the same thing as I, you will see that a lot of the times I will not actually I will tell this very openly as well, that this is the general trade, this is roughly the reasons why I enter, and my entry is around here, but I will not tell you the exact entry time or exact entry level, and where exactly I put my stops, exactly for that reason, because that's something that is proprietary information. I'm not willing to share that. I'll be honest with everyone.
No,
and that's the one of the reasons why I'd rather show you how I get to learn how to fish than to actually give you the fish all the time, because I want you to learn. That's the idea of the whole stream. The whole stream is about giving you realistic exposure to realistic traders, so you can learn off of them, not necessarily copy them. And we have someone joining us in the background, LJ. Before I could even finish that phrase, you joined us. We are out of time. Thank you for coming in.
My power went out, so
welcome to South Africa, my friend.
I came back, I was like, oh, sorry guys. My bad.
No problem. No problem at all. But we have come to the end of our stream, and it's been a wild day on my side, and perhaps many others as well. So I would love to continue this conversation about influencer anytime in the future, because I think we need more people talking about it to increase the awareness in the market, because we want you to do the things that actually help you to improve yourself as traders, and instead of spending money and time with just making other people rich. And so
definitely right, that sounds interesting. I'll have to go back and listen to what you guys were talking about, because fair.
Yeah,
fair.
It started with someone asking, I think it was it was a question towards Rich. Let me see if I can find it quickly.
How do you spot a fake trader?
Yes.
I think was the question.
Oh, right. Okay.
Fake influencer.
Yeah.
Yes.
There
So,
we
but
go.
we're out of time, and I would like to thank everyone, especially Richard and LJ, you guys coming in here and covering for us myths.
Mainly Rich. Definitely mainly Rich.
I've had my moment. You brightened this up now nicely, LJ. So I'm going to say thank you to you and to Victor as well.
For coming in and covering while we have some tribulations, if you could call that. But thank you all for you guys who are watching us from home, I suppose, or wherever you may be. Maybe you're on a cruise ship in your ocean view cabin and watching us. If that's the case, enjoy your vacation. Thank you for watching. But see you guys tomorrow again, same place, same time, and take care. Any last words before we go, gentlemen?
Just thank you very much to everyone whose question we did not get to today. Please come back again tomorrow. Drop the question in. Do it early, then we can have enough time to get to all of the questions when there's a lot of people in the stream. That's all I'm gonna say. And then please a like. If you enjoyed today's content, please drop us a like. If you haven't, subscribed. Once we get to 90K, giveaway. So
big giveaway.
Yes,
but yeah, definitely come back tomorrow. Drop those questions, all that kind of stuff. Drop it when I'm here. I'll probably answer a bit quicker than Rich. So there you go. But
very experienced.
Just talking rubbish, guys. But yeah, definitely come back tomorrow. I'd be very curious of these, what you guys were just talking about, like you were saying, Victor. So yeah, see you guys tomorrow. See you then.
All right. Take care. Bye-bye.
Goodbye,
Ciao.
everybody.
See you tomorrow.